looking for something, you search Google, right? What is this all about? How you get the answers? But for fintech, for financial services, for guidelines which is relevant to a fintech, there is no Google, right? You cannot search on Google ki what is the policy which is applicable for you, or you may not be knowing how to read those policies which is available. And at that point, you need someone you need something which can really help you to find out the answer. If there is a basic query, right? What is a VPA? With respect to UPI, if there is a help for you, if there is a guidance for you which can help you think at the right time, at which can direct you to the right direction. That is most important, right? And that's where this fintech bot comes into picture, where whatever query you can have, you can talk to a real person, you can chat with the bot, which is trained by the real guys, which is trained by the regulator, which is trained by NPCI. So whatever query you have is always, the answer what you are getting is not vague. It is not written by some XYZ blogger, or it is not written by some unknown person, but it is always answered by someone who is trustworthy, right? So that completes that bridge, which is for new startups, for new fintechs, which is not available there, or they might not be knowing how to get those answers. It will be very helpful for them, and I really like to commend the team who has built this bot, the entire technology team, and the thought process what was behind this launch of fintech bot. That is certainly going to give a boost to entire ecosystem on the fintech side, creating new use cases, launching new services. Whatever is I can think of as a fintech, I can validate with someone that yes, my idea is correct or not, or I am going to breach some policies which is not applicable, right? So for that, I will really like to give a round applause to everyone for this fintech bot launch.
Big round of applause, audience. With this marks the launch of the fintech bot today. May we have the deck, please? So, fintech bot, what comes to your mind when you hear the word fintech bot? Someone might say it's an automation, module, it's a chat bot, or a particular robot. What basically a fintech bot is a 24/7 assistance channel for fintechs to reach out to NPCI directly via WhatsApp, and it will be a single point of medium to connect with NPCI fintech team. Right now, fintechs are following traditional approaches in which they are reaching out to fintech team via social media platforms like LinkedIn, Instagram, emailers, or other mediums. But this fintech bot, what it will do is streamline the process of reaching out to NPCI fintech team directly, and it will be the queries and partnership requests and anything that comes up from the fintech will be routed directly to the NPCI fintech team. So it will be the bot is still in the learning processes, and as queries reach us out via fintechs, the bot will be learning and training. Basis the kind of queries we are receiving from the fintechs. On the back end, we will be doing the analysis and tracking the amount of queries and the number of queries on the daily basis. The metrics will be tracked, and the data sets will be mapped again. The intents will be created, and the data sets will be mapped according to kind of queries the fintechs are asking us. So how we are achieving the automation through fintech bot? So it's an automated assistance regarding NPCI products. You can ask the fintechs can ask their queries on NPCI products. What exactly are the NPCI products about? What is the latest launches that we have done in UPI, RuPay, and other similar products? It will give you an automated response from the backend. The intents will be trained. The kind of queries you will be the fintechs will be asking the bot. It will train itself, and next time if some query is getting unanswered, the next time the bot will make sure that particular intent is being developed, and it's made more efficient and effective. Then we have direct engagement with the fintech NPCI fintech team through this bot. What exactly fintechs want is they want to reach us out through different channels. Right now, the approach is traditional, and through this, it will be streamlined, and it will be a single point of contact. They can reach us out via this fintech bot, whether they have any queries in terms of certification, product-specific queries, or they want to have partnership requests, or they want to schedule up meetings. It's basically fintech's way of dating NPCI fintech team. Right now, the dating is online, and through fintech bot, you can date NPCI fintech team, reach out, schedule up meetings, and you know, the in the online dating world, we are not sure the other person may not like us, and the meeting might not be scheduled. But through this fintech bot, we'll make sure that each and every fintech queries is getting answered, and we will make sure that we don't cancel the plan of meeting on the last moment. Then we have product-specific queries in terms of and certification FAQs, of course, which is one of the most looked after categories at NPCI. Each and every fintech is aware of what exactly is the certification, and how the certification FAQs work, and what kind of queries reaches out to the fintechs is have the IPs been whitelisted, where exactly is my certification request at, what are the onboarding documents, where exactly what's happening to the production movement, and similar such queries. So these will be routed directly to NPCI fintech team. So going to the workflow, we have divided this into two categories. The fintechs will be new fintechs and the already connected fintechs. So new fintechs are ones who are approaching NPCI fintech team for the first time, and they don't have any connects with NPCI. They want to look out for how to connect with NPCI. What is the way to connect with NPCI? They can reach out to us via emails or any other connects. But with fintech bot, it's a single point of contact. They can schedule up meetings. They can fill in their contact details and other relevant details in terms of what use cases and synergies they want to look at, and we will reach out to us in terms of what kind of segment the fintech is approaching us, what is the use case there, what is the business model he wants to work around with, and similarly, we will be analyzing from the back end what kind of segments fintechs are from, who are majorly reaching out to the NPCI fintech team. This will be an automated way for fintechs to connect, new fintechs who are not engaged with the NPCI to connect with NPCI fintech team directly. Then on the connected fintech side, we have fintechs who are already connected to NPCI, but they don't know how to route their queries to particular teams. So right now, the approach being followed is a very scattered way. Through this bot, it will be more of a streamlined approach being followed, in which the connected fintechs will be reaching out with their queries in terms of where exactly is the certification request at, what is happening with their product testing, where exactly what's happening with the portal IP whitelisting, where the portal access is being given. So these connected fintechs will be reaching out to an NPCI fintech team directly via this bot. So this is on the user flow, what exactly it looks like, the bot looks like. So once a fintech user initiates a chat session with the fintech bot, it will pop up three options, that is NPCI product, certification FAQs, and engage with NPCI. So let's go to the product FAQs. The first option is product. When he selects NPCI products, he will be popped up with different NPCI products like UPI, RuPay, and others. Once selecting on UPI, the option, there will be a lot of questions related on FAQs that are being feeded from the backend in terms of intents, and the variations also being created from the backend. The fintech will be selecting one of the queries, and the answer will pop up. And in terms of what kind of query he is asking, the relevant and related questions that he may want to look at will be popped up on the screen, on the chatbot. Then on the general query, it's on the general queries. If a connected fintech wants to is having a particular query that he may want to get resolved, he can select the engage with NPCI and then fill up a general query form, which will ask some details in terms of what kind of a query and he is looking to get answered along with the contact details. Once that is filled, it will be routed from the backend to the concerned stakeholders, and we will be looking where exactly is his request pending or what kind of query he wants to get resolved, and we will be coming back, reaching back to the fintech with the relevant stakeholders and with the relevant response. So these are some of the features we will be looking at from the future perspective. What is coming up in the bot? It will be we will be having some speech assistance based in which your voice will be recorded and voice-based answer can be given from the bot. Then we will have outbound interactive communications wherein some of the latest releases by NPCI in terms of UPI or we had some latest releases on UPI like UPI Lite 123 Pay. So we will be broadcasting these messages to the fintechs and spreading the word in the market about the latest releases and kind of new circulars that we release. Then we have real-time support through live agents in which from the backend there will be live agents who will be supporting the chat with the users, which is being done by a lot of chatbot agents in the market today. Then we have integration with the CRM platform, which is of course a CRM platform of NPCI, which will be routing the queries and meeting requests to the relevant stakeholders directly. So that's all we have to say. I have to say on the fintech bot side, and you may save this number for your reference, or probably scan this QR code, and it will be routed to the WhatsApp number, which you can explore on what's your experience on the fintech bot, and definitely you can give us a feedback on by filling up the general query form, and we will be glad to see what kind of feedback you will be sharing with us. May we have the demo video? So a unique ticket ID is being assigned once this form is being filled, and it is routed to NPCI fintech team from the backend. The user will be given a particular query ID, which he can use for future references. that was a demo session of Fintech chatbot, how it looks like, and how fintechs can engage with NPCI. So
and beginning to end.
It's like I'm looking over my shoulder, trying to see the way back to where
All right,
we
we're just going to take a
were.
couple of minutes to set up for the next session.
Tell me, baby, we are done.
technologies.
But we have to adapt, like our customers.
You'll have to wear this, otherwise you'll not be able to
Yeah.
wear yourselves.
All right, good morning. Good morning, everyone. Welcome to this session, which is on taking digital banking beyond customer journeys. We have our esteemed panel on stage with us, Mr. Mahesh Ramamurthy, CIO, Yes Bank. Let's welcome him with a round of applause, everyone. Mr. Vaibhav Sharma, Director and Head of Transaction Banking Sales at BNP Paribas India. And Mr. Ramesh Lakshminarayanan, CIO, HDFC Bank. And the session will be moderated by Mr. Sabyasachi Goswami, CEO, Perfios. Over to you.
Thanks so much. Sorry for a bit delay, I guess, but I think nevertheless. So the topic is quite interesting today, which is taking digital banking beyond customer journeys. Now, there was a period a couple of years back when we saw digitization was the theme for several forward-looking FIs, including the banks. Now, digitization was all about building apps, portals, and customer journeys. Now, the thought process was more focused towards giving a customer a superior customer experience, kind of Amazon kind of experience, what we can imagine. So it was all about building superior customer journeys as seamless and frictionless as possible. Now, most of it is done. So what's next? So let's today discuss with the three gentlemen here with me on the stage, spearheading the technology and the digital initiatives in the banking in India. Mr. Mahesh Ramamurthy, the CIO of Yes Bank. Mr. Vaibhav Sharma, Head of Transaction Banking, BNP Paribas. And Ramesh, the CIO of HDFC Bank. Welcome all of you, and thanks for sparing the time.
Thank you.
So let's start by asking a question, Mahesh, with you. When bank seeks to digitize, where should the big investments be? Is it in the digital solutions that are focused on the customer experience, or wire improvements through the back-end process steps, regulatory policies, and risk assessment, or invest in transforming and modernizing the legacy technology?
I think, Sabya, the way I look at it, it's a very deep question, the way I look at it, because at the end of the day, every bank has their trajectory in terms of how they're shaping up their own businesses across the ecosystem in India. When you do that, they also carry a lot of legacy, they call it, and I would not call it legacy, is the way they have run in the past, and the technology that, and the way the customer profiling is changing, the technology enablement is happening. So what's going to happen is, and more importantly, the compliance expectations from the regulators are also evolving rapidly. So to me, I think it cannot be a unidirectional or one-directional approach that needs to take place. I would firmly believe that the bank would, look at what his business strategy is about. If that means that they are going excessive in terms of 2 or 3 areas, understand what's the kind of technology elements that they need to focus, what's the business aspect first, and then what's the technology that supports it. How do we create those experiences for sure? They will definitely need to manage on the risk side. Now, you cannot keep risk away from the business, because at the end of the day, the digital age which we are in, the scale at which we operate, risks actually multiply its effect. So obviously risk is imperative for us. And when we do both of these, it's imperative that we also understand what is the kind of internal frictionless journeys that you create. Forget, the customer is definitely important, but for you internally, the operations is extremely important, because if you don't create the automation, you will just create more for more. Whereas what you need to do is a less for more. So you have at least stabilize your operation, create more automations, create more checks and balances in the whole process. So to me, the answer is not one, but it could be across all the facets that you talked about, and maps to where the customer, where the bank is focusing its journey. That's very, very critical. So if a bank is focusing on retail, within retail in specific aspects, it's focusing in cash management in certain areas of merchants and how they cater to the cash management business and the evolving trends. It is important that you understand as to what is the evolving ask from the customer, focus there. back end look at risks, back end look at operations, and more importantly, the overall gamut about compliance. So it's never a one-side story. It has to be a 360-degree view. And you have to keep balancing what you have in terms of your spend, which has to balance to your growth. So you can't be arbitrarily spending across, but you obviously need to see where's the return coming in and how you balance it across. That's the way I would put it.
Thanks, Mesh. Ramesh, if you can share your thoughts on where should the big investments be?
So I think it's an interesting question because I think the first point that you made is the front-end journey done. And I have my own views on that because I do see that there is a 20%, 15% upper middle, millennium kind of population that's fully digitized today, which is expecting instant gratification, which is expecting digital assets to be available on the go. And they're very savvy to kind of navigate through. But there is 80% of the India that still needs assistance. Every time you get into an ATM, a new guy who's kind of got a new ATM card, you will see him looking at the security, right? You get a new phone in your house, you will always, give it to grandfather. You will always see him looking at the granddaughter or the grandson, right? So the digital journeys are still not done by any means. I think we are living in a very urban, millennial kind of a thought process. And then when you cut across further, the retail side is probably still far ahead. But if you look at the SME and have to look at the downstream on the corporate side, very, very little work has been done. So I think fundamentally, first of all, there's a lot of digital on the front end itself to be done. And the way we have done about the banks have gone about it, and I include, my bank as well. And we've been clumsy and lousy, so to say. Okay, why am I saying that? Because just putting UI UX flavor on top of a digital journey, it doesn't solve the problem because when you start getting scales, the stability, the accuracy, and the completeness of the journey actually is at the back end. It's never at the front end. You will find that you'll have 30 APIs for 30 journeys, and you will find those 30 APIs giving problem later on. So you need a very interesting middle, engineering journey. If I have to look at the entire digital ecosystem. Hello, I don't know. Am I audible? I think my this is gone. Okay.
Very clear.
So I think that's a little bit of a challenge that we continue to kind of see. And I think the middle engineering has to be done very differently as we go along. We need more of orchestrators. We need more of API bundling. We need a lot of ability to do low-code, no-code journey orchestrations. Then, of course, downstream, it's a very different challenge. None of the core banking are even microservices enabled today. So every time there's a new API, you're going and plumbing it, right? Yep. So I think it's a massive journey to my mind. And I think the way I see is that both from a product perspective, moving from retail to commercial to corporate, and then on the engineering side, going downstream from the front end to really creating a very robust middleware, and then actually kind of transforming the legacy cores to be digitally ready. That's the 360 that I would like to say that I think we're still about 3 to 4 years away, if I have to be very clear about that. So,
Thanks, Ramesh.
I just need
Vaibhav, your views?
Yeah, thanks. Thank you so much. And Sabya, I think I concur with what both Ramesh and Mahesh has talked about. Each bank might be there in their journey somewhere. But if I were to speak for the industry as a whole, what we have seen in last half a decade or maybe decade is that banks have built digital journeys for customers. Banks have also created transformation teams which usually sit in IT and operations. I think the next big investment for most of the banks should come in connecting these dots because we have created a lot of silos. And if you digitize the customer journey without re-engineering your operational models, it's almost like putting a cart before the horse, right? So because at the end of the day, the customer experience is fulfilled only when the last leg of the transaction is completed. And we have all, collectively banks have created that maze where we have to now get the dots connected. So that is where I see significant amount of investment coming in. Within particularly in that space, I still feel the machine learning, automation, and AI is going to play a very, very key role. And that's where, in fact, we look up to organizations like that of yours to get those dots connected, increase the return on investment for the bank. Right? And that's where it's going to be very, very critical. And that's where I see more and more money getting pumped in, especially in the banks.
Thank you, Vaibhav. So, Ramesh, if I can ask a question very specific to your bank. You have been busy building the digital factory and revamping the digital and technology stack at the bank. What are some core principles you have had in mind when building them?
So I think it kind of follows what I spoke in the last question, because like I said, when we're kind of doing the entire transformation for the bank, you have to look at all the aspects, right? And I kind of spoke about the middle and the back end. So obviously we've started a lot of work on the front end journey, which was the easier part, if you ask me. And like I said, it's very easy to put a UI UX. Today, I mean, in fact I met a Valley company two months back, which develops a Flutter app in 4 hours. Okay, that's it. It's that low code, no code on the front end. But when you come to the back end, that's where the middle end, the complications come through, right? So what we are trying to do is really kind of focus on the back end and the middle layer. On the middle layer, we are kind of putting through a very interesting set of orchestrators, like I mentioned, because I do believe that what is the end game? The end game is any fintech partner should be not coming to you at all for an integration. And banks are not there. I mean, if you go and look at, you learn from credit bureaus, you learn from some of the other digital fintechs, globally. They do that work in hours, actually, literally. But for banks to reach that, it's an engineering right across. So what we've done is we've basically started work on the middle layer quite interestingly. We're working with a number of technologies. Some of it is low code, no code standard platforms, like a Power Apps or like a MuleSoft kind of an integrator. ESB, but we've also started working on some of the open source platforms. So we are working very heavily around ZB, Kamunda kind of platforms that can come in the middle. Downstream is a different challenge in the legacy, and I've spoken it quite at length across the industry that I believe time has come for you to take bets on core banking. Because if you don't do that, and I'm just saying because HDFC Bank being one of the largest players, they have no choice. I'm sure the other banks will follow suit, but at some point of time, you have to start looking at microservicing the core. Otherwise, this game will not, because you cannot have billions of hits coming on a monolithic database and you hope that it will not crash. It's going to happen one day, right? So there's a lot of focus happening around changing the legacy architecture. So we've been working, for example, on rewriting our mobile apps. I spoke about 2 very interesting stuff last month around following the core. We're removing the entire payments out of the core and making it a microservices architecture. We are attacking the customer master, which is the other big thing to kind of see if customer master can be moved out. And when we are moving this out, we are building this as a cloud native microservices and what I call as an active architecture, because banks today cannot be a hot DR or an active passive. They have to be active architecture, even from a 100% digitization journey. So I think that's where some of our factories today, so we have a 3-pronged approach. The digital factories largely are focusing on the front and the middle layer, low code, no code based kind of platforms and building digital assets. The back end is a larger layer. So we have these factories in Bangalore and Mumbai, which are rewriting some of the core components actually. It's a very interesting journey. I think it will take us about a couple of years to get there. But there is no other way to do. There is no easy route out. There is no point in going to another partner and hoping that he will kind of do this. And a lot of stuff we are actually doing on our own. In few cases, we're doing some strategic partnerships. But yeah, it's an ongoing effort. It's not going to be an easy one. But I said it's a long haul, and we have to. And I see the banking industry per se going through this journey at various stages. I think we probably have to do it because of our background and size and what we have gone through. I think others will follow. So it's an interesting journey that we'll find. And that's where the fight between the fintech and the banks will continue. I think there is both competition and coexistence that will happen as we go.
Yeah, rightly said, Ramesh. I think the journey ahead for the fintechs and banks are getting more blur, and that's how it will be pretty much. So Mahesh, if I can get to you. Now, Yes Bank has given a lot of emphasis towards enabling the fintech ecosystem, and be it BIN sponsorship or providing APIs for powering neobanks, etc. Do you see fintechs driving a lot of new use cases in the future? and banks mostly powering them from the back end?
See, Sabir, the way I look at it is definitely, as Ramesh has also called out, and we all know that today fintechs operate very innovatively in narrow spaces. Banks probably have the custodian of the money as well as the customer data. So that's the distinguishing is starting to blur a bit, but it will definitely be there because we are regulated entities, and RBI is obviously very concerned about how we are going to be from a risk perspective. Having said that, I think banks to extend its reach and to extend its service or service offerings will actively source fintechs or engagement with fintechs in three areas. One is in terms of sourcing, servicing, and using rails. So it's definitely going to be there. So for us, I think we started the journey. We were one of the early, I would say, banks who really accelerated the overall adoption or integration to fintechs. We were behind a bit. I think now pretty much what Ramesh is saying is what we are actually accelerating our work. So that pretty much all the fintechs over the next 6 to 8 months, there are opportunities for fintechs to productize our entire API channels. One thing that we are now focusing on is to productize, so which means that you kind of come in, create a tick box in terms of what you want to integrate, which means my front-end teams, the sales teams as well as those business teams are able to tick, okay, we want all of these, and there is a pricing associated with it, or there is a BIPS that we really work with, and say, yeah, come on board and get it done. So I think that's the kind of shift we are doing. It also means that there are a lot of work that we need to do internally also, from just enablement as well as risk management perspective, because there is loads of compliance overheads that are coming through the chute now, as well as in terms of a transaction. So which means now today, we have 1 in 3 in terms of acquiring on the NEFT, RTG and the UPI side. We are doing a huge amount of acquiring transactions. It also means that we don't hit the core for every transaction. So we've sort of accelerated our capabilities in terms of putting a payment hub, making sure these don't go inside the core, keep it out, give exposure to fintechs in a way that it satisfies their demand too, and how you do the reconciliation pretty much smoother. So there is fair bit of work we are now doing. We do believe that there are going to be new journeys every fintech. In fact, we probably have a lot of meetings with fintechs, new partners, probably every week. Some interesting use cases coming through partnerships, tie-ups, engagements. And we've also set up an accelerator program within the organization to be able to invest in fintechs who we can actively partner with and bring on board. So I think overall we will coexist. While we'll compete, we will also coexist. It will also be benefit. At the end of the day, there has to be a balance between the two, and I do believe that banks, both the organizations coming together, the fintechs and the banks coming together, will only be good for the customer and for the larger ecosystem under certain guardrails. I always keep mentioning this because you can't be flying around. A few of us have been part of some of the challenges that we've seen in the fintech ecosystem. So we have to be careful. Otherwise, data can get compromised, and that is not good for India as a whole. Forget about banks, India as a whole. Because for whatever we're doing, it can create its own downside. So I think partnerships, coexistence, playing it together will be good for a lot of the customers at the end of the day. That's the way I see it.
Thanks, Mahesh. Very important point you made. I think the regulations will come, and they're not against innovations, but I think there will be speed breakers just to avoid accidents. That's what you are stressing upon. Thanks. Vaibhav, if I can come to you. So Vaibhav, you have been heading cash management and transaction banking platforms for many years now. Now, these are areas that are generally not associated with digital, as the target segment is generally perceived as someone who needs personal touch. What is your view of digital transformation, and how has transaction banking and cash management services looking beyond customer journeys in this digital landscape?
So, Sabya, you've already put me in a spot to say that we're not good at digitization, but I think corporate bankers are not good at perception management. Let me start by saying that. Uh, if you talk about cash management, I think the digitization wave in cash management started well before the digitization became a buzzword in the retail segment. I mean, we've been integrating with the client's ERP systems, APIs, much before these concepts actually came into retail world. So I think first thing first, is that really a new concept for the corporate bankers? I think we need to do a bit more work on our perception management. We be the flag bearers of that. That's on the cash side. Trade still remains a very regulated product. It still has a lot of unstructured data coming to the bank. It still has a lot of paper coming to the bank. And I think that's the question, or that's the issue that most banks are grappling with. I mean, if I were to talk about BNP Paribas, we also had this situation like any other bank. We honestly looked at it as an opportunity and not as a threat. And we came up with this solution called Document Exchange Connect. The idea was to give a uniform experience to the client, whether they are giving us instruction in a structured data format or they are giving it us in an unstructured data format. For those who are familiar with the banking industry, whether it is, let's say, a bank guarantee, which is very unstructured, or whether it is an open account transaction where you have IDPMS, EDPMS data. How do we give a uniform experience to the client? And the trick is that wherever the information is available in form of data, we consume it as is. Where it is available in form of a paper, you convert the paper into data at the first point of interaction, right? There's so much that you can do about it. To answer your second part of the question in terms of how do we see digital banking solutions going beyond customer journeys, I think there is, in our journey, banks have to start rethinking about the way we define customer journeys. When we talk about customer journeys, and every bank has about 50 odd customer journeys, and this is not what I am saying, this is what BCG in their report says, we focus a lot on our products and customer journeys related to that product. Our clients actually need a lot of product which go way beyond banking. And that's where I see the next phase of evolution for banking. We need to start looking at ourselves as the provider of the ecosystem, where you have fintechs on one side, you have vendors on the other side. You become the aggregator of sorts and allow your clients to connect with the entire ecosystem. That, according to me, is a next step for most banks to evolve. And am I talking something which is very futuristic? No, that future is right here. It's happening. I mean, Mahesh is more qualified to talk about that. Look at what Yes Bank has done with ULIP, with ONDC. These are not banking services anymore. These are not banking customer journeys. We are taking it way beyond what the conventional wisdom would have told us, what customer journey should look like. And that's where I think the future is.
Very interesting point, Vaibhav. Now, since you mentioned that the way we perceive corporate banking in terms of digital is not true, so let me jump on to you again with one more question. So, with English being the predominant language of banking in India, some banks are now experimenting with vernacular languages, right? What's your view of introducing vernacular language? Do you think it would apply for the corporate segment as well? Is it worth the effort? Basically, there are challenges in testing, incorrect interpretation, character sets, incorrect translation, transliterations, etc. So, what's your take on that?
It's a very interesting question, and coincidentally, very recently, we actually co-produced a product with one of our fintech partners for a client where they wanted an EIPP solution, invoice in payment and presentment system, to be made available to their constituents in South Indian regional languages. So to answer your question, do we see corporate use cases evolving in vernacular language? Well, we do have some cases. We have live cases already. We have to understand that corporates are made of people. There are individuals behind every transaction. And if it makes for if the vernacular language makes sense for an individual, it would definitely make sense for corporates also. Having said that, I'll be honest in accepting that the number of use cases that you will find in corporate would be far, far lesser than what you will find in retail, where the individuals, we are talking about banking the unbanked, right? We are a small country with a very small population, so that's a humongous task in itself. Uh, but Sabya, if I can take liberty of extending your question and taking it to a slightly different context, we are sitting here in the Global Fintech Festival. I represent a European financial powerhouse. We expect to see a lot of Indian fintechs going and kicking much above their weight, establishing themselves in Europe, in other markets, in Latin America, etc., etc. It's not just about Indian vernacular language. I see a huge amount of opportunity for Indian fintechs to connect with banks like BNP Paribas and other banks in other geographies, where they could take their solution, which can be presented to clients in French, in Chinese, in Spanish, so on and so forth. So the opportunity for different language other than English, and not just Indian vernacular language, to my mind is humongous. It's just that you have to be very intelligent, calculative in terms of where do you want to draw that line. And at this point of time, I would think it's broadly the front end, which probably needs the translation, and the back end can still work in English, because ultimately it's all binary, and the two gentlemen here are subject matter experts. It's 1 and 0 at the end of the day, right? So it doesn't matter beyond that point.
Thank you, Vaibhav. Ramesh, too much emphasis was given to digital journeys, especially in the retail segment, and that is how many banks have strategized as well. What, according to you, will happen to the physical, personal touch that many still look for when banking, actually?
I think I spoke about it the previous question also. I think India is still 80% assisted journey, and we must understand. In fact, we have got this very, very different strategy as a bank also, because we continue to open a large number of branches, right? And contrary to a lot of media and analyst expectations, why are you doing this? India is digital, everything. It's not that real, because you go to an Indian market, right? And it's also a lot of lesson for the fintechs also, because you go to an Indian market and you try and open a financial account, and you have to sustain. The challenge is not getting that account. It's never the challenge. I mean, I can tell you hundreds of solutions where we've digitized and tried to do acquisition through third party, but the balances don't stay in that account, because that's built on relationships. Financial product is all about relationships. We can get the first money, or we can get the first loan out. But after that, just kind of nurturing, curing, and kind of upgrading the relationship, it's a different task. I mean, you all know that when you would be rather, you can do statements, balances on a daily basis. But when you need a financial advice, you need somebody to talk to. That is the reality, right? So I think the way we see that it's the phygital isn't going anywhere. The digital will assist the physical models. That's the fundamental, difference out here. And you have to be digital in the market and acquire quickly. The conversations will move from acquisition and servicing basics to actually advisory and consulting. And that itself can again become digital. So that doesn't mean the branches would look similar to what they're looking today. And I'll give you a simple example. And why is this such a big solution? Problem. I think a lot of banks today continue to be on MPLS networks. I mean, this technology is 25 years old, boss. Okay, if you go talk to anybody in the fintech world, or in the commercial world, in the new world, they have not heard about MPLS, right? We go and wire every single branch. 2 wires go with 2 different service providers. Then we put 2 different switches. We'll put 2 routers, and then on top of it, we'll put proxies, and then we will put antivirus. And by the time the branch is set up, it's like 8-10 weeks. Right? And the costs are 3 times more. But there are today solutions available that you can literally take off the cuff, plug the local ISPs that is closest to you, and that's giving you a wired service, get onto a cloud proxy with a better security, and set it up, right? So fundamentally, I think that the physical aspects and the nature of the physical distribution will change. I think there also there's a lot of digitization that will happen. That's not digitizing, that's more technology intervention, so to say. And they will, on top of it, the digital journeys will come on top of it. And then the human angle will actually start pushing the relationship values to a different size. So if you ask us, those are the three pillars. You first get the technology infrastructure kind of modernized. Then you get your digital journeys tuned to unassisted and assisted both. And then you overlay, relationships on top. And even the relationships, and like you said, very interesting example today. Do you really need the CRM today as a login system? Take a simple, I don't know how many of people out here are CRM fans. In today's world, you don't know, no relationship manager will log in into CRM. I can 100% tell you, it doesn't have time. Okay. There are headless CRMs available. Can I be on his Teams all the time? Can I be on his WhatsApp providing him insights? Right? Data will be a very huge player in the assisted journey. And we are one of the biggest aspects of the phygital relationship journeys. How do you use the data? Because banks have just largely used enterprise warehouse and reporting, and I'm being, again, not critical, I'm being honest about it. I think the data analytics has to move to the businesses actually. The closer it's to the business, the better it is. I mean, the guy who can tell you the right model is the guy who's sitting in the market, not the guy who's centralized actually. So I think that's the other play that you have to look at. So basically it starts with overhauling the technology infrastructure, getting the right digital ecosystem, top of it getting the right bankers, and then providing them with the right data at that site. And that's how the models will evolve, if you ask me. And then, of course, the 20% will continue to be unassisted, will be happy to do their daily transactions and daily needs as they go along. And this is, both sides will play an important role in the growth of the industry, not just focusing only on digital. I know it's a long answer, but I hope this gave a good insight.
Very insightful. Mahesh, if I can come to you, you have worked globally. What do you think are some of the things Indian banks are doing better than their global peers, both in terms of digital and the technology domain?
I think the fact that I've seen is, having traveled across and run businesses globally, I think the big thing that I'm seeing is across India is the density and the mass of population and the ability for a lot of us to, from a technology perspective, to penetrate down. We've nowhere outside of probably China or somewhere you will find this kind of a population and the density of population. But today, if you see whether it's a banking or the parts of the fintech ecosystem, the ability for us to have penetrated using technology and made use of the technology to start enabling a better lifestyle, better capabilities, different approaches, right? Even from a seed procurement, from an agri-tech company to a medical science or to even weather. You have so much of technology that is penetrated deep into spaces where the vastness of India and the complexities of India, you don't experience it in some of the European nations or in the US. Now, we're 10x to what they do or 4x to that. But I think that's where I do believe that we, from a technology with the government support and with the kind of thrust they've put on, we are far ahead in that journey as compared to possibly anyone else. Now, having done that, you could see some of the stuff that we've done in terms of UPI or whether we've done it even during COVID. I think they're classic examples of how we've used low-cost technology, but really have started to spread it across deep, penetrate deep. Banking ecosystem, as I believe, has ridden this pretty well. We still have a long way to go, I would say, and I completely support and acknowledge what Ramesh has said, because if you see the branches, we are all blessed to be in tier 1, tier 2 cities. I think this is probably over penetrated in my mind. But I think what's important is as you go further down to tier 3, tier 4, where you do require that, I do believe that the physical branch size would probably morph itself into smaller ones, but which uses technology more effectively in a local language that is better understood, and be able to possibly give more financial understanding or create a marketplace which is essentially able to even help an individual. For example, if there is a farmer who really wants to understand how to procure a seed, You could have some partnerships coming sitting within your branches under certain corners to be able to say, you know what, use my technology, do a individual marketplace to buy seeds, individual marketplace to buy your farm equipment, and we will end up funding you because it's within a closed ecosystem. Obviously, I think we still have some way to go there. Like Ramesh said, the traditional MPLS is probably moving out. It will go into SD-WANs and other technologies that are now emerging. Internet with 4G has helped us a lot. 5G will really completely change the face of the game in terms of how we penetrate using technology much better, and how banking and financial ecosystem is going to be using that to make to give a face using digital. I think that's going to be useful. We talk of all the new technology, but I think that penetration is what India has rightly said. We are now in an acceleration path. And we are much ahead when you compare this to our Western counterparts. That I can say. That's where I would put my 2 cents in this. And I think very proud of what we've done. And we all should be proud, because at the end of the day, it is a combination of the fintechs. It is a combination of the power of our mind on technology and the government's push with the help of regulators and everything to be able to push us down the line. And I'm sure that eventually we'll start making decent profits, because right now we're pushing it, but eventually as it starts to turn, as more and more come into the system, it's going to be good for all. That's the way I see it.
Thanks, Mahesh. I would have gone and asked more questions, but I think the watch tells me that the time is up. But last one question, where if you can briefly answer in one sentence the question for all of you. What do you see the next big quantum leap for banking across the globe and in India? Vaibhav, we can start with you.
Very, very broad question, Sabya, and gets me to thinking mode. For India, for sure, is to bank the unbanked, and that's no mean feat. I mean, that's going to be really a quantum jump because of the challenges across geography, challenges across cultures, languages, and people, where they sit in the society. So I think for India, the biggest quantum jump would be to bank the unbanked. For bank globally and in general, I think there is enormity of the data which is available today. And hand on heart, no bank today has really cracked that code in terms of how to use that data, how to get the data points to connect to each other and start making financial sense out of that. And I totally agree with Ramesh that the next quantum jump would be to put the data with the people in the business and start monetizing that data. And wherever we'll figure that out, whenever that happens, I think that is where the banking is going to go to the next level.
No?
Try now.
Yeah.
Yeah.
I think usage of data, to me, everything else will, like Mahesh said, the system is self-evolving, and we are ahead. And we will get there, because frankly, the kind of momentum that we have got there, from a digitization perspective, we will get there. From a technology usage, we'll get there. Where I think and in fact, that's an area that we have to also introspect, because the way we use data in India is a challenge. In fact, the challenge is not in the advanced insights. I think that we can build. The challenge is actually quality of data. I mean, fundamentally, it starts from there. So the data, the entire life cycle, players who can manage and harness that very well are the ones who will kind of be the cutting edge. I'm not talking about 2-3 years. I think 2-3 years is more of a catch-up game on all the technology stuff. But after that, the guys who can really harness data are the ones who are going to kind of make the difference, because everything else becomes ceteris paribus, actually, if you ask me.
Thanks. Mahesh?
Yeah, as my colleagues out here have talked about data and talked about the front end, what's happening, I think I would say the explosion of transactions and the multiplicity of technology usage across. The biggest thing that any financial institutions would really look for is risk management, an active risk management. I would not call it passive. It's more in line to the overall thing. That's going to be very critical, because any bank, as we start to scale with data, how do you apply AI and ML on top of the risk with the vast quantum of data? and also manage the transaction flow is going to be very, very key for us. Otherwise, you will probably, before you blink an eye, you're going to see money flowing around. That's something which I think is very critical as we start to scale. That's the third leg in my mind.
Thank you, Mahesh. Thanks to all my fellow panelists for those insightful session. I think very, very insightful and inspirational, all about India, the technology, what is the future of the digital solution. I think all in the safe hands, I must say. So thank you so much once again, and thanks to all the audience for giving us a patient hearing. Thank you so much.
Thank you very much. May I request everyone to kindly be seated? We'll begin with the next session immediately, which is a fireside chat coming up. May we request everyone to kindly be seated with your headphones on. Once again, we'd like to thank our speaker, our panelists and moderators, and of course the audience for attending this session. It's an honor to have all of you here at the Global Fintech Fest 2022, the world's largest fintech fest. May we request everyone sitting at the back to please come forward. You all can come forward. There are a lot of empty seats towards the front. Everyone sitting at the back, you all are welcome to come forward and be seated. Right. Good morning, everyone. Once again, for those who've joined us now, welcome back. We'd like to begin the next session firstly by thanking some of our sponsors, starting with our theme partner WhatsApp, co-powered by Amazon Pay, spend management partner Encash, in association with Perfios, payments partner Cash Free Payments, and CEO's dinner partner HSBC. Banking APIs are becoming the gateway for digital transformation in financial services by providing seamless payment services to businesses. With banks looking to modernize their service delivery and diversifying their offerings, APIs have very much become the one technology everyone in the banking space is counting on. Let us hear a story in this fireside chat about spearheading payments and banking, a cash-free payment story, followed by a white paper launch with our revered speaker for this session, Mr. Akash Sinha, co-founder and CEO of Cash Free Payments, and this will be he'll be in conversation or fireside chat with Mandar Kagade, founder and principal, Black Dot Public Policy Advisors. Let's welcome them with a round of applause, everyone. And over to you, Mandar.
Okay.
Is it working? Can you hear me?
Yes, I can hear you, but across the thing. I think you'll have to switch it on.
No?
Yeah, I can hear you across, but not through the mic. I don't think they.
Should we ask?
Can we just check? Yeah.
It's working, right? You can hear me? Okay.
Yeah. Yeah. Hello and welcome to the fireside chat without the fire with Akash Sinha, co-founder and CEO of Cashfree. So what I'm going to do is I'm going to level set, and then jump right into the conversation. The Indian payments landscape, we are all insiders here. It's the story has been told and retold and echoed all over the world. We in August, UPI completed some 500 million plus transactions in volume, 1 trillion in value, and it's just taken off. NPCI's international arm also is integrating across our regional partners and global jurisdictions, and we are, I think, across France and UAE. I could be missing a few names there, but we know that, and part of that payments ecosystem and sort of as a important player of that ecosystem, we have Cashfree revolutionizing payments since 2015.
Yeah.
So we'll hear more about that story leading up to 2021 and to their unicorn status and what they have in store for us going forward in the next half an hour or so. So jumping right into it, Akash, why don't we talk about the initial years and walk us through the initial days a little bit, and what was that one prompt to you and your co-founder Riju to start off and found Cashfree? What was that initial trigger? And most of the time, there is this always a story, a personal story that an entrepreneur goes through, either through a family situation or in his personal life, and which prompts them to sort of start off. So can you walk us through that in those initial years?
Sure. I think first of all, it's nice sharing the stage with you again.
Thank
Right.
you.
I think looking forward to it. So I think we started this company back in 2015, right? I think if you look at the period of 2013, 14, 15, we saw a very aggressive growth in like mobile penetration, and that was fueled by accessibility of data. So 4G, 3G was very ubiquitous, and you can access internet in a very stable way from across a lot of places from India, right? I mean, even like tier 2, tier 3. And that enabled a lot of offline businesses or like new entrepreneurs come to internet world to explore new channel to acquire customers, right? Earlier, they were just restricted to their local areas. They had to set up a shop, and they can only approach customers who are nearby to them. But this internet growth has given them hope, right? If I put my business on internet, then I should be able to reach to customers who are pan-India. And that started massive transformation in that period. And now with that transformation, it's given that all the businesses or a lot of businesses were coming to internet economy, the payment systems were not ready for that. The payment systems we had in India was primarily serving offline businesses, right? And there were very few online business use cases which were being handled, right? Which was very vanilla and more about accepting money from a customer, settling into the bank account in a slightly slower manner, right? It was not that speed. So that is a larger transformation we saw in the ecosystem. Given that we are right in the Bangalore, we saw all the startup flurry happening up. And we're also working in e-commerce industry, me and my co-founder Riju. And we ourselves were facing a lot of problems ourselves, right? I mean, we used to order on online e-commerce very frequently. And whenever the guy used to come, we had to give them cash because COD was pretty prominent. And if you don't trust the merchant, you will go for COD. And we used to think, why can't I pay digitally when the guy is at my doorstep delivering my product? So that was a personal problem for us. And then we looked into other markets, right? We looked at that there are like gig economy companies coming up. And they're paying their workers every 15 days, every month because they cannot make it faster. And even paying every 15, 30 days, it was not very seamless, it was not very automated. And things used to take 2 or 3 days just to get the payments processed. Right? Imagine you are a cab hailing company and you have like 1 lakh drivers. And if you take 3 days to pay them salaries, right, there will be a lot of panic on the ground. So how do you handle these kind of issues which are coming up, which are very new to the ecosystem, and no one knew how to solve it? So that's where we thought, I mean, this is going to continue to change. Online businesses will become a default mode to start business in India because real estate is getting difficult, and online gives you very wider reach. And by combining these two, we thought we have to build a platform which can not just handle one specific payment problem, we should be capable to handle all the payment problems that online businesses are facing or will face in the future. So that was the blueprint, and that's how we were different like 7 years back. Right? We had payment companies doing great job, but they're just focusing on one problem. But our thought was our internet company should just be able to come to one platform, one portal, and they should get solution for all the problems they are facing so that they can spend more time on the core product, more time on like customer acquisition, more time branding, and less time on payment plumbing.
Understood. Understood. And then what led you to so these are the initial days where you're basically solving for payouts, solving for cash on delivery and the like, which immense friction. There is a social cost to cash that all of us are very aware of. That is the really the structural battle for all of us in fintech is really the cash, and not to reduce its role. It has a role, but it also has a cost, and so there are these trade-offs, and we try to minimize those trade-offs. So, what led you into the crowded market, if I may? It's a utility, right? Payments is always a utility. So, I'm just sort of moving on from that to the next phase, if I may call it that, to the crowded payment space, and how, as a corollary to that question, what is that USP? What is your right to win? In what would be, for any investor, a utility market?
See, I mean, I'd not say utility. If I go back to the period 2013, 14 or 15, companies were solving very few problems of businesses, right? And we figured out I can do more, payment companies can do more. And that's where we started looking at all the other, so imagine you are a travel company, and today you have like 30% cancellation on a daily basis, right? So instead of debiting customers' account whenever they're transacting, you can simply block money in their account. And if they cancel, just release the block. So that way, refund could be instant rather than making them wait for 7 to 10 days. And 7 to 10 days is a very long period for anyone to wait, right? And a lot of customers used to jokingly say, right, when I am paying you, you debit money instantly. And when you have to give me money back, you take 10 days. And that didn't look didn't look fair to anyone. So those were the specific problems we went after. Then we had problems of marketplaces. A lot of marketplaces have, say, 50,000 sellers on the platform. It was difficult for them to disperse commission to the sellers on time and in a very accurate way. And they used to make mistakes because things were very Excel driven. It was very manually driven. You'll have 10 to 15 accountants sitting in an office and processing the commission payout. So we looked at very, very specific problems about larger industry, like marketplaces, travel, education, fintech. These are very large industry we looked at. And we've been able to make solution more personalized, right? If you as an e-commerce company come to Cashfree, I'm able to solve 10 problems for you. But if you go to someone else, they'll only solve 2 problems for you. And best part is, see, everyone was aware of the problem, right? What was in the market. It was not a knowledge gap. Just that it was getting difficult for legacy companies to be flexible, be nimble, and build solution faster the way market was changing. And market did change very fast. Right? Today, we take a lot of things for granted, right? I mean, you go to any random shop, you pay using UPI. You go to any website, you can comfortably pay using card, and success rate is pretty high. But back then, payment failure was a big issue, right? I mean, you always used to pray my payment should go through. I mean, it used to fail a lot. So a lot of things have been done. Second thing, if you look at internet economy in the world, right? That time scale was less. You take example, any large company, and they used to process max like 50,000, 80,000 payments per day digitally. Today, those companies process more than 10 to 15 lakh transactions per day. And if you don't build a system to handle such a scale, then these guys can never scale their online business. So these are the 2 things we did differently, right? Solve for scale and solve for more, solving more problems for the businesses. And that's how we become more relevant in this industry compared to, legacy vendors.
This is just out of my own my own curiosity. But is there any salient sort of incident that you recall from back in the day when there was that pushback from the industry and incumbents, and when you went to say took your proposition to either the bank partners or to the enterprise players that you wanted to sell the product to? Is there any what were you expecting? Did they receive you enthusiastically, or was it like there was skepticism in the air, especially among incumbents? You might think that there is a fair bit of skepticism because of the Clayton Christensen problem, right? I mean, people don't want to upgrade because their own skills are locked in, and any disruption may basically risk it. So, any incident that you recall specifically?
See, there were a few. I think you are right? A lot of companies had the process set and they had people to do it. And we are essentially telling them, you use my system, you have to depend on people less. So again, not everyone took it in the right way. Right? We had companies who were modernizing their stack, and they understood this is very helpful for me in the future, and they were ready to accept it. And few companies came to us after a few years, like after 2 to 3 years, when they understood this is the right way to do it. And it's not always about saving the cost, right? It's also about making things more reliable. And second is keeping your stakeholders happy and delighted. And for that, you cannot do things manually, right? I mean, you cannot keep on adding people because when you add a people, you have to train them, skill them. And they can make mistakes, it's human nature, right? But if you move to systems, system can work 24/7 and system will not make a mistake unless there is a very proven, but system will not make a mistake. So we were able to convince, and surprisingly, there were companies that we met early that days. They revamped their system to make use of our automated payouts and automated payments, right? Because they understood it. They added a lot of automated fraud checks, maker checker, and then they start integrating. We had to wait for 1 year for one company to get them adapted, and then started using it. And they were one of the very early customers back in, I think, 2017, 18. And they're still one of the largest customer of Cashfree, and that, that's a very good success story in the market.
Wow, nice, nice. Just to put things in numbers, once they pass that hump, it's 150,000 merchants now and 40 billion plus payments annually. That's
I mean, now if we're close to around 50 billion, 55 billion annually.
I see.
And we process almost 100 million transactions on a monthly basis.
I see.
And this year has been good. We have been growing almost 15-20% month over month.
I see.
But I believe the scope is much bigger. The way, I mean, UPI already does 6 billion transactions monthly on P2P, P2M combined. And India is a country of scale, right? And all the large businesses will move to online world. And you must have seen, right? I mean, you must have seen a lot of legacy FMCGs are also coming with a D2C proposition. A lot of big business houses are trying to capitalize the internet growth and reach to customers in a more personalized and direct way. So all this behavioral change in the business world and consumer world will create a big demand for a strong payments ecosystem. And that is what we are striving to build and be ready for the future.
Correct. So moving on to the next phase of payments, so to speak, right? We moved on from those initial rudimentary, if I may call, use cases to more sophisticated use cases where we built platforms on top of banks.
Correct.
And offered value-added services.
Correct. I think that has been starting for us, right? I think good part is when we started our journey, we see a lot of support from the industry, regulator and all. UPI came around 2017, 18.
17, yeah.
16, 17, right? Demonetization happened. And then banks are also opening up their APIs, right? They are also willing to, reduce the cost, make things more, like uniform, more correct. So these really helped us build solution on top of it much faster. And that's why I think fintech ecosystem can grow, right? You'll have to start with private APIs that you can hand over for a certain contract. These private APIs come to some kind of infrastructure platform, and then we can, customize and personalize it for the end use of the market. Because a lot of things are very generic, right? If you go to any bank, ask for API, it's very generic. But end businesses, a lot of them cannot spend time in customizing them for their need. And that's where fintech has been able to do the work, right? We have been able to customize because need of, say, insurance industry is different from education industry, is different from e-commerce industry, and same for any, say, blending industry.
Right. So before moving to card issue as a service specifically, the banking as a service, can you walk us through some use cases there where you basically value added? I can imagine payroll being one, right? For a small enterprise hiring say 20-25 people, it becomes a big issue. There could be tax management, could be another that you can basically stitch it up on your own platform and give it as part of that package. What other use cases you basically have powered through what I might call banking as a service?
Sure. No, I'll take a small step back. I
Sure.
think I'll just want to focus on why banking as service was important for us.
Sure.
So we have been in the business of payment acquiring for a long time, right? And we have been able to serve customers who already were digitally ready to come and transact. But after a year, right, we saw we still have to, in terms of we are all of are sharing the same pie, all the payment companies, but no one is trying to do something different to increase the pie, right? What kind of effort we can put to increase, digital method creation in the market, right? You go to say, and still, even if you look at UPI, right, there are around 40-45 crore people who are part of it, and remaining 55-60 crore adult are still not part of it, right? It's growing, but slowly, right? So our thought was, how can we make these guys digitally ready so that they can come back and transact with the payment system we are building? And that is the thought of, given that today we are just accepting money for payment method, what can we do to create payment method in the market? What can we do to give more digitally ready payment method in the hands of the people? And that is where the idea of banking service got created, right? How can we use the power of all the B2C, B2B companies and through their network, given that they already have trust in the market, and through their network, we can come out with the ideas of embedded banking and they can go and give this enriched services to their customers or to their partners, right? And that way we can use the platform of all the larger consumer-facing, business-facing companies to offer fintech or banking-like service to their customers. So that was the initial idea. And coming back to the use case, I mean, it can work in many industries. Payroll is one example you took, right? If I'm buying a payroll automation, I can also embed embedded banking so that people can get wages directly from that software. Instead of getting a data from one system, go to my bank, upload a data and get process it and keep on reconciling. That's very tedious. Second is like, marketplaces. As a large marketplace in India, you'll be onboarding 1 lakh, 2 lakh sellers on the platform. And a lot of times these sellers may not have know of how to use my banking channel in a good way. Right? Given that you already have built a lot of work for the seller system, right? You can also do the embedded banking experience to them. Sellers can come to their platform, they'll sign as a seller, and they can also create a bank account with you, right? So that they can see all their expenses on a single portal, they can look at their revenue, and they can also make sure that vendors get paid out from the same portal. So a lot of these experiences are going to happen in the industry, right? That is where I think largely world is moving more towards. And we started with, say, integrated payments. We are also going to move to integrated banking. And payments is the core area which will be getting solved through this banking as a service proliferation in the market.
Right. And what was the motivation? So I'm jumping into the final leg, the final leg, so to speak, of the conversation. And I'm curious, what was the motivation driving the card issuing as a service white paper and that kind of offering?
Right. I mean, card as a payment method is still very relevant in the ecosystem, right? You don't have to think a lot. You don't have to be digitally ready to use it, right? I mean, you can even distribute to a farmer. They can go to a shop, use the card to buy their product. And that's the reason card penetration has been increasing in the market. I think other methods are also increasing. I mean, it means over a digital payment penetration growing, but card is also growing. And there we see there are a lot of use cases where we can enable card issuance. It can directly curb the usage of cash and make it more automated and more efficient. For example, like corporate payouts or corporate expense management. Right? A lot of employees, use their own cash, use their own money, get it reimbursed. But a lot of corporates can directly give credit card to the hands of the employees. They can have control. You can even have control that you can only use this card, say, for e-commerce purchase or also F&B purchase. Right? That way, you can have a very controlled expense management without making the life difficult for your employees. Second use case is there are a lot of parents who want their kids to be digitally or financially ready, in their early age. Right? Today you give them cash as a pocket money, right? Because these guys don't have bank account or proper card. Tomorrow you can give them a card which is monitored by parents. They can also see where spends are being made. And at the same time, your child is getting financially ready to face the world, right? So that is second thing is once you go to university, a lot of expense in university is also very cash driven, right? So there you can also give campus card to their student and a student can use that card to make their purchase inside the university. So there are ideas around closed loop system like universities, then open loop system, parents and child, corporate expenses, even a lender. A lot of lenders have to credit your personal bank account with the loan, right? But tomorrow they can just give loan to your card and they can track where you are spending, how you are spending, and using that data, they can give you more credit in the future if you are being disciplined in your expenditure.
Right. So there is, if I may summarize, a broader structural piece that you're solving for is financial literacy, financial empowerment at an early age, right? So let's say the teenage use case that basically the card will be used at the college level or the campus level in a closed loop environment, at the canteen, at the local gift shop and the like. And from that point forward, if it speaks to, say, the credit bureaus and the like, then you can build from, then basically that's the top of the funnel for leading them into the formal financial ecosystem.
That's correct. It's a generic service, and these are the examples I took.
Correct.
I think all the industries can use this platform, and they have to do very less legwork to go live with this product.
Correct. So just to give a sense of the legwork that they would otherwise might want to do, absent card issuing as a service kind of offering. Akash, can you just walk us through the number of parties in the flow involved? Like, I went through the paper and it has a nice juxtaposition of the number of parties that you would otherwise, if I do a DIY card issuance, it's a massive complex system, and then on top of that there is a regulatory interface and a regulatory compliance overlay. So can you walk us through that a little bit to show the value added of this offering?
True, right? So today as a company, if I'm trying to build or give any kind of card offering to my customers, I have to get a processing partner. then I have to find a partner who can run program on top of it. Because programs will be different for different use case, right? So program will be different for expense management. Then there will be different program for lending use case, right? And the third is more about being compliant with regulator, right? I have to get PCI DSS certification,
Correct.
right? I have to make sure tokenization is working in a good way. And fourth is building layer for the customers, right? Customers would want to see their balance. They want to change the PIN, right? So either you you partner with other vendors for all these things, or you build it in-house. And both the cases, increase the go-to-market to 4 to 6 months, right? And then you'll have the worry about card getting delivered, shipped, having your own co-branding, then also working with banking partners, credit bureau. Then you also have to buy fraud and risk management tool on your own, right, to make sure the card is not being exploited, right? And that's the reason we see this industry has been growing, but not growing fast enough, right? Today, if you look at credit card market, it's just 7 CR distribution,
Yeah.
right? And a lot of banks,
75 million, yeah.
yeah, 75 million.
Correct.
A lot of corporates are willing to offer co-branded credit card to increase loyalty for their customers. But life is difficult, right? I mean, they have to make it as a 9 to 12 months project just to work on it. And they keep on deprioritizing. But if you are a system, it can be done within 2 to 3 weeks. And you can go live in the market, test it out, and you can grow your loyalty. I mean, because your end aim is loyalty, right? You don't want to do the payment plugin.
Starbucks.
Exactly.
Starbucks did an amazing thing with their barcode-driven kind of thing, and it's working out very well.
True, and people say Starbucks
Yeah.
is a bank who is selling coffee, right? I mean,
I know.
And then
That's true. That's true. I'll just tail off the conversation with their most recent cross-border offering, because I think they got some permission in the regulatory sandbox and to offer a cross-border product.
no, that's correct. I think there was one specific use case where we as a country ecosystem haven't innovated a lot. And that is more around capital transaction. Right? A lot of Indian consumers want to invest into capital markets outside of India, but the process has been tedious for a very long time. Right? You have to keep on redoing the paperwork. It's not similar to, say, I mean, the process for investing NSE, BSE has been much different than process of investing, say, in NASDAQ.
Correct.
Right? And a lot of customers are discouraged to do it.
Correct.
And when RBI opened the sandbox program last year, right, we thought this is one problem we can address. We proposed a solution during the sandbox, and it got accepted. And we got a final approval just 2 months back from RBI to roll it out, for a larger production use case.
So, to the extent of LRS, I can buy, let's say, fractional shares of Amazon through this route. Yeah.
I mean, it depends on the broker you are using.
Sure.
I mean, that's a broker.
Sure,
can
sure.
be. But
Fractional
what
would
will-
be the broker
Yeah.
thing, but I can buy shares of
Exactly.
Amazon.
You
through
can
this.
buy shares of Amazon, Tesla, Google, right sitting in India without going through tedious paperwork.
Sure, sure,
It will
sure.
be very seamless and easy.
Sure.
And that is
sure.
what we're going to enable in the ecosystem.
Sure,
very soon.
sure. So I'm awaiting its deployment at a scale.
It's almost there. Almost there. I think
see.
just few
I
weeks
see.
here and there.
Okay, I think we can move to the formal release of the white paper. And may I also remind the audience that the copies of the white paper will be available at cash-free booth outside if you want to take a deep dive into it.
I think both 16 to 18. Yeah, both 16 to 18.
Yeah. So should we get to the release?
Yeah, sure. Thank you, Mandar. Thank you. Yeah, and to add, this is a 40-pager white paper, and we have packed in regulatory aspect, business use case, and why this is important for business. So please spend 10-15 minutes of yours. I'm sure it will benefit all of your businesses, all the partners, and helping you bring financial inclusion through your platform.
Thank you so much.
Thank you.
अभी भी 2 लोग हैं ना? 3. Thank you very much for that session. indeed an enlightening session. And as he said, the white paper would be available at the cash-free booth for whoever wants to take a look. Once again, for those joining us, welcome to the Global FinTech Fest 2022. It's an absolute honor to have you here. Before we move on to the next session, we'd like to extend a heartfelt thanks to our partners, our platinum partners, Google Pay, PhonePe, Visa, M2P FinTech, MasterCard, Falcon, and our registration partner, NTT Data Payment Services.
Check, 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 check.
Otherwise, they won't be able to hear what's going on. All right, let's begin with the next session, which is a trialogue, a panel discussion on bridging the gap, how banks are collaborating with the local fintechs to redefine India's financial sector. And the trialogue here is being moderated or led by Mr. Sanjeev Mehta, Managing Director, Head of Transaction Banking Sales, India and South Asia for Standard Chartered Bank. And our speakers on this panel, Abhilash Edakadampil, CTO, Global PayX, and Mr. Dipesh Bakshi, Chief Financial Officer and Whole-Time Director, Castrol. Over to you, sir. It's on, the mic should be on. You can say something in the mic. And
Hi,
yeah.
I'm audible. Good guys, thank you very much. Good afternoon. Sorry, for, I believe we are running late by about 40 odd minutes. It's one of its kind of a session. I believe in the morning the organizers were having some issues in terms of how to listen, how to work. and that's technology, right? Imagine most of us would have not known that we could hold conferences with earphones and we could be talking and listening as well. My name is Sanjeev Mehta. I head transaction banking business for the bank, which is Standard Chartered for India, South Asia. I have been with the bank for over 15 years, in banking experience over 25 years. Worked all across banking, including Yes Bank, American Express, and with the HSBC, Citi, and Bank of America as DSA guy. Having sold liabilities, retail liabilities, having sold business banking, wealth management, private banking, have moved on to the corporate banking side, and then the journey kind of has continued. Only thing I can say is that when I started my career, it is actually the banking industry has transformed, because we used to sell banking as basically a ATM as a proposition, and ATM, a note out of a ATM machine used to be like a new note out of an ATM machine, and then you open a bank account, and clients used to look at, wow, what a feature. From there to now, we're talking about the entire aspect of digitization, automation, alongside the entire way how corporates and the industry has moved. Is ATMs or cash is not even required. It's not even there. We just completed digital. So that's an era, that's a change that we've seen in 25 years having evolved. I would like to, in the interest of time, do some quick introductions for our star panel here. On my right, immediate right, is Mr. Dipesh Bakshi. Mr. Bakshi is a finance professional with 25 years plus years of industry experience, of which he's spent 18 years in BP PLC, and is currently CFO and whole-time director of Castrol India Limited. He and his team work closely with Castrol India business to develop and deliver long-term strategy and maintain a robust accounting, control, and compliance environment. Dipesh is also responsible for strengthening relationships with CILs, investors, analysts, and bankers. Quite a diverse kind of profile. Prior to this role, Dipesh worked as financial controller for Castrol's global business. And prior to joining BP, Dipesh worked with international consulting organizations for over 7 years. Dipesh is a chartered accountant and was awarded CXO of the Year in January 2020 by Institute of Chartered Accountants of India. He is also an alumnus of IIM Ahmedabad and a certified internal auditor from Institute of Internal Auditors, US. Thank you, Dipesh, for coming in.
My pleasure.
And I really look forward, and we all look forward to learning from you today on our use cases and your experience of how you converted the organization into a digital, I would say, embarking on the journey of digital and digitization. I also have with me Mr. Abhilash Edakampil, CTO Global PayX, who comes with 15 plus years of technology plus entrepreneurship experience. Abhilash has been serving as a CTO to PayX. He served as the CEO of Bison Systems Private Limited, a 30 plus years BFSI service organization that serves leading Indian and global banks. He has also worked with MIT Media Labs in Boston, Deloitte in US, Amtrak in Washington, DC. He has architected multiple turnkey BFSI products, including financial managing systems that handle over 100 million transactions per day. He holds a bachelor's degree in Mumbai University and master's from Carnegie Mellon University. Welcome.
Thank you, sir.
Abhilash. Thank you for making it. And I know you were traveling and you had to actually make this for us. Thank you
my
very much
pleasure.
for coming.
Thank you.
Really appreciate that.
Thank you.
So welcome. The panel, the focus is on dealing with 3 key hypotheses here and the topics. First of all, we all want to understand how large is the B2B space, and corporate segment leaders perceive the role and relevance of fintechs into their priorities. So that's the one topic that we really want to deliberate here, because what you see overall in this entire space here is everything got to do with B2C, but what is it from a B2B standpoint, and what are we looking at it from there? And then we also would want to understand, based on that, our B2B fintech players able to have the mind share with industry giants like Castrol or any other global company, and how fintechs are evolving to be able to take that space, mind share, and be able to actually run it with them, their agendas, their priorities, and be able to deliver for their next goals. We would also want to probe a little bit on the alignment at the country level. Very important because of the fact that these are global organizations. How do they bring in priorities from a local standpoint? And the importance of a local fintech player coming in and solving for a problem statement. And at a country level to also ensure that this is a globally accepted kind of a platform and moves with the client into the global markets. So this is going to be a sort of a little appetizer. We're not going to be getting into greater, I would say, tremendous amount of depth. But please feel free to ask questions or anything that you would want to clarify after the session with the panelists, or you can meet them after the session. Let me start with a question with our panelist Dipesh. Which is basically in view of the fintechs evolved in the last 5 years, basis your interactions with some of the key players of the industry, how do you see a role and this evolution happening?
Firstly, Sanjeev, thanks for having me here. It's my pleasure to be with both of you as well, and fantastic arrangements by the organizers. It's really very impressive. So I think I'm at the right place. On your question about evolution of fintech, well, fintechs have been evolving and so has been Castrol. So I'll try and give you a bit of a perspective in context of Castrol. So Castrol, as many of you may know, is a lubricant product company. And we've been evolving from a product company to product and service company, and then trying to play now from a future-proofing point of view into electric vehicles by supplying EV fluids. So that's been our journey. And I think throughout the last decade or so, our interaction with fintechs has been to help us play into the ecosystem that we operate in. And our ecosystem would include hundreds of distributors, almost more than 50,000 retailers, about 10,000 independent workshops, and more than 500,000 mechanic fraternity. So that's our ecosystem. And what's happened is in the last decades or so, we work with fintech, and there have been solutions that have been offered wherein ordering process happens at a click of a button in a remote area in a country. We call it Castrol Fast Lane. To each sales executive, we have about 1,500 sales executives across the country, and each of them is able to see their ordering, their productivity, lines per dealer into any workshop or any dealer, any part of the country. To a situation where we've done trainings for our mechanic fraternity, which could be either in an online fashion and helping them develop their skills. So these are some examples of business enablers. Of course, as a finance person, there are many examples I can give in terms of success stories on payments and collection side as well. But overall, I think we've had a great experience with interaction on the fintech, and they've been able to give us solutions whenever we wanted.
So, Dipesh, a very important and pertinent point here. Considering that you are a global company, you have global systems, you have global technology that you have to adopt and necessarily kind of casted into that kind of a global framework. When you look at a local problem and you look at a local fintech and you look at a solution being provided, how difficult and how easy it is to get this entire thing maneuvered, work with the local fintech provider and banks to be able to get your solution out, irrespective of the fact that the global has defined certain standards. How do you do that?
No, great question. And I think one thing that happens very seamlessly in an organization like ours, we're a global organization, we're a part of BP, the journey to digital and a journey to making sure that we are able to give local solutions is an empowerment that we get. We are a listed company. We have a strong board of directors, and therefore we have the empowerment from global. And you know, if I can give you an example of, so we've had an issue where our mechanic fraternity, about, as I mentioned earlier, about 500,000 of them, they were finding very difficult to see a line of sight on the digitization and in terms of the claims that we give them, in terms of the incentives. So that was a big issue. And we worked with local fintech and in fact with SCB as well to get some solutions to make sure that the customer satisfaction is high and it helps us solve a big problem in that area. So a lot of empowerment from global and helping us work to find solutions. Global tells us that yes, we need to think global, but we need to act local.
Great. And what were the benefits that you derived out of this incentive solution? Can you just elaborate that for us?
Yeah, sure. So, just very high level, the incentive solution is basically making sure that we cut all the paper trail into the entire ecosystem. So, what would happen is if a mechanic wants an incentive, then he would put a claim to distributor. Distributor will send it to the head office. They will review. Sales executives will sign. Then it will go to payments, right? So the solution that we have worked is a mechanic just registers on something called a Castrol Fast Scan app, and behind or on the back of each cap of the lubricant bottle, there is a barcode. He scans it, and the money goes straight into his bank account. And I'm talking about more than 100 crores of payments across more than 500,000 people. And the size of this incentive is 20 rupees, 50 rupees, 80 rupees, 100 rupees. It's not like one big 50,000. And what this has done from a CFO point of view is two things. One, it reduces the risk of fraud. It gives me an enhanced control. It gives me insights into the spend that I was hoping goes into the right area and brings out the effectiveness. In that process, what we've been able to also do is make sure that the Government of India initiatives in financial inclusion is also achieved, because then we are helping the mechanic fraternity and truck driver fraternity to acquaint with the seamless banking process and money going into their bank account and uplifting their digital skill set. So huge benefit for them as well as us, actually.
That's really wonderful. In fact, what I can think of is further what this is going to add to is basically a sales data origination, where the data which sits, you can actually go back and look at what are the trends in how it sells, go back to your manufacturing plant, order those kind of SKUs dependent on seasonality, dependent on region, dependent on particular market, depending on what sells when. And that data itself, that's the experience that we got, and that's a phase 2, what we're going to work with you guys, is going to be critical for you to bring down your DSO and effectively be able to know, very predictive, in the month of June, in monsoons, it sells, it doesn't sell, this area is the best, which sells, and which sales guy is selling the best. So that data itself, in my view, which we now have, working with you for last 2.5 years, 3 years together, would be the next step and journey towards taking that to your manufacturing and bringing that kind of DSO and bringing that efficiency back with your manufacturing. In my view, that is where that enrichment will be the phase 2 of what we did.
Yep.
And we'll take that too. Good. Can you share another example of core area of finance where digitization made a significant impact? Any other idea?
Yeah, let me try and give you an example on collections. We are a cash-rich company. We generate significant amount of cash, and at any points of time, we have about 1,500 crores of cash sitting on our balance sheet. And that is possible because of robust working capital management that we do. So a few years ago, with help of a fintech, we worked a system wherein we pull almost 95% of our collections from the distributors on the due date. And I'm talking about collections worth 3,500-4,000 crores. And what this has helped us to do through NACH which at that point of time was a first mover advantage that we've done to fully utilize it, is just again cut through the collection mechanism into the system. Uh, Sales folks spending less time on invoice collections, reconciling, and most importantly, from the distributor point of view, it was very seamless. If the distributor wanted to even delay the payment by 1 or 2 days because there was a liquidity issue, then we could just do it very easily. Otherwise, it was a very long, inefficient process. So I think, this was again, I'm talking about 15, 20 years ago. We were the pioneers when we did this. And not always ERP is fit for purpose. So you got to go beyond and make sure that some of these systems which work for the partners and our extended community then talk to the ERP. So this system of ACH collections connected with our ERP system and helped us enhance working capital delivery.
Excellent. Like I said, from cash to checks to post-dated checks to digital and ACH now. Abhilash, you've been quite, let me bring you in.
Yes.
So where do you see ACH going?
First of all, thank you very much for letting me in. I was just looking at, or just hearing what you said. ACH has evolved a lot. ACH is now 24/7 in terms of there's no holiday calendar in ACH. I think we are going to look at multiple settlement cycles. I am sure that we'll go towards like a real-time ACH like in US. The beauty about India is that India is going to take a view of whether it increases the mandate limit of UPI or whether it wants to propagate ACH more. ACH does have some fundamental advantage, right? You have the legal protection that you have, right? Section 26. You have the ability to schedule payments, which UPI is also planning to bring in 2.0. So ACH, fundamentally from a batch-based, low-value, high-volume transaction, ACH is going to go much ahead. It's going to be API-based. It's still file-based internally. Many banks have started to talk us through APIs, but internally it's still file batch-based. That's going to go API-based. So I do see a lot of updates happening in ACH. One thing that happened recently was the holiday calendar being abolished for ACH. So you can do ACH collections 365 days. So I see similarly multiple cycles, almost going to a real-time basis.
Very interesting. Imagine you're able to pull the funds, you're able to send the funds 24/7, and India is actually, thanks to RBI, thanks to initiatives of the government, actually becoming real-time, and completely real-time is the way forward. Excellent. Dipesh, back to you. Would you just want to elaborate a bit further on role of fintech, role of banking, and how these guys are going to work from now onwards from a future of, let's say, banking and fintech together? How do you see that?
Yeah. No, a great question, Sanjeev. And I think generally you would associate fintech with B2C, right? And here's a corporate. And we've done many cases and examples, as I said, around fintechs helping us on the B2B part as well. I think going forward, there are 2 or 3 areas where I see the role of fintech working with corporates like us. Firstly, in terms of lending. Now, just look outside, there is inflation and there is quite a bit of a pressure in terms of the working capital, especially for channel partners, especially for the people who are operating out there, whether it's dealers, it's distributors, it's workshops. And I would look for some kind of a channel finance solution which helps make their life easy, right? And that's very important. So as a corporate, I want to make sure that my partners are able to appreciate and leverage on whatever opportunity exists on lending. And if fintechs can help support that, that's very important. The only thing I would say is we can't just swipe this with one brush. Every customer would be different. So how can we bring that differentiation in terms of the profiling of a big customer, small customer, remote customer, high-risk customer, low-risk customer? But out there is a huge opportunity. And for corporates like us, I think, we look forward for solutions in that. So that's, I think, the first part. The second part is going to be around the payments. So incentives is one example, but can we take that forward And I think if fintechs can look at understanding the strategy of every organization, that's very important. Uh, I'll give you Castrol's example. We want to move from being a product to product and service and maintenance and then EV. So what does that mean? That means the number of consumer points that we will have in future is going to be multifold, and we will be interacting with them. There'll be more bank accounts than out there, and they will become part of our ecosystem. And we all know about RBI's 2025 innovation growth. So I mean, I'm looking for some innovation and growth in that category where corporates can utilize, and how can fintechs help deliver our strategy on the B. So this is a bit of a B2C consumer, but on the B2B side, can there be a payment gateway for my small B2B customers, right? So that's another opportunity that I see which can be played in. And third, I think you just touched upon the regulatory part. There is a big change happening in the regulatory environment. The ask of corporates is very high, and we want to be part of being a compliant company. I mean, we are listed, we have fixed a requirement in terms of achievement of compliance, and we take compliance very seriously as part of our BP Global Group. Now, if there is a regulatory change and the government wants tax base to be widened or having a line of sight on collections, then as corporate, how can I help? And TDS is a classic example. Some new laws have been introduced, GST is gone by. So if fintech can help us do that, then I think that would really support not only solving a problem for corporates like us, but also helping the nation. And these are the things that I think fintechs need to start thinking and work with the corporates to understand where are those pain points. So broadly, Sanjeev, I think 3 areas. I would say lending, payments, regulatory is what sort of keeps me awake at night.
Any other views that you would like to add on from ERP standpoint?
Oh yeah, frankly, ERP today is any ERP you take. I mean, this is a practical example. I'm talking as a CFO. It is hard to get the ERP just go to the last mile, right? It's not easy. So how can any solution talk to the ERP? Very important. Now I'm going to add another flavor because in my CFO hat, I sit on the board, I sign certificates. I'm happy for it to talk to the ERP, but I get also worried because it hits my numbers. So it should be foolproof. The controls have to be of very high standard. And therefore, I think it's given any solution that anybody looks at, rather than having an industry of people in my team or corporate team trying to reconcile, here's a great fintech solution, here's your ERP, and there's a team in between. This hybrid digital doesn't work for me, frankly. So it has to be integrated, and it needs to be integrated seamless way with very tight controls. I think we miss out on controls, and then something happens, and then we go back and try to fix it. How can we be more proactive? That's probably the challenge I think I would have.
Absolutely, and that's the reason I asked you this question, because in my view, ERPs won't be able to solve for everything. And while they're trying to go there, but then you always have that one fine end use case, which is where the fintechs come in, and together with ERPs, with fintechs, with banks is the only embedded solution that you can get, which is, in my view, a fully digitized end-to-end kind of a solution that we are looking for, and all the corporates kind of look for. But Divesh, any other points on multiple ERP solutions that you see it coming? Because a lot of ERPs have now invested time, money into ERPs where they want to have a platform approach and multiple ERPs there. Any views on that?
ONDC, right? So again, great initiative, and very difficult for me to say at this stage. We've not fully evaluated, but that's something that we would like to play in. Multiple, so that's one part, of course, and that time will tell us where this goes. But it's really a disruptor, and we all need to play in it. And I think we all need to play in it in terms of collaborating rather than being competitive, because that's very important. Specifically on multiple ERP, it's a tricky one. That's my personal view, right? It comes at a huge cost, and then you want to make sure that when you do multiple ERPs, be absolutely clear what problem it is trying to solve. Yeah, so I'm a bit I'm undivided. I mean, I'm a bit hesitant on multiple ERP, but that's my personal view.
No, that's absolutely good to have that view. But then thank you very much, Dipesh, and really I really give you that credit of ensuring that this multidimensional thinking and ability to drive the changes in this huge organization on the digital aspect, and India leading the way. It's thanks to you and your leadership team, which has actually been able to do that. And thank you for coming in today, and we'll take this forward.
Thanks.
Really appreciate that. Thank you very much. In fact, just wanted to bring in a part of the bank, which is where we as a bank have started to also invest with fintechs for clients. It's not only Castrol, but it's all about solving for the end mile connectivity. And we've built not only our API stacks, also our digital journey, cross-border payments, 100% payments today you can do with Standard Chartered Bank, completely digital. Say it be cross-border on the import side, or let's say miscellaneous remittances. It's all about digital, and that is only possible if you actually have a fintech in between who's actually been able to solve for that missing link that banks have not been able to invest, or maybe probably go there, of connectivity back into the ecosystem. I'll quickly bring you back, Abhilash, and our discussion there. What do you think is B2B fintechs?
B2B fintechs are the neglected steps and kind of, in the fintech world, because people talk about B2C all the time, right? People talk about 500 million customers. We talk about 500 customers. So B2B fintechs primarily provide services to corporates. So essentially you look at payroll, you look at how you get paid, invoices, treasury management, anything that touches with the corporate finance, B2B fintech plays in it. It's non-glamorous, it's behind the scenes. We talk to AR, personnel, clerks, tax documents, tax compliance. The volume we process is almost same as B2C, but obviously it's limited to that ecosystem. It is very complex as compared to a B2C transaction. If you take a B2B transaction, if you want to get an invoice paid, there are about 65 touch points that are there. So that's the kind of complexity that we deal with. That's essentially what B2B does.
And what do you do as a company, Global PayX?
Well, Global PayX as a company, we primarily focus in the working capital space of B2B. So that means if you take a company, the oxygen of a company is working capital. You want to get paid more than you spend, essentially, right? So if you take your account receivables, so if you take the order to cash cycle, we try to digitize each and every aspect of it. Generate the invoice and everything downstream, that is presenting the invoice to your buyers, allowing them to pay, reconciling, disputes, reductions, tax reconciliation, provisional as well as later TDS tax reconciliation through 26AS, pushing it to your ERP through a controlled mechanism so that ledger and subledger recon is done. All that on the AR side. Similarly on the AP side, from the time you can respond to an invoice, get paid, send that payouts, digitizing your disputes back. So if you look into the entire cycle, we automate all these touch points that are there. And today's need, which is embedded financing, which is on the AR side as well as on the AP side. You would like your buyers to get that financing options. You would like to enjoy the financing options while you're making a payment, dynamic discounting. That's what we do. So we focus on the working capital area.
You just mentioned 65 sub-processes.
Yes.
Imagine 65 sub-processes. Are you trying to say that ERPs can't handle that?
ERPs can handle the record keeping of that. So imagine I send you an invoice. You want to dispute an invoice. How will you communicate the dispute? You will not log into my ERP and you will not log into a line item and say, this is my dispute, right? You will send an email. You'll call the sales guy saying that I dispute this invoice. Here is my proof of delivery. He will check against the general ledger. He will check against the POD. He will check against the GRN. Then you will issue a credit note. So all these steps happen outside. It gets recorded in the ERP finally after the decision making is done. But this decision making has many steps. It is non-digitized, it's over emails, WhatsApp, and that's where really the rub is. So that's the complexity, that's the last mile challenges that's out there.
And what do you see the changes that is coming in B2B space in India?
So B2B, I break it down into two aspects. So B2B today, the biggest change is that companies are open towards digitization. So I see a lot of input towards digitization. I see a lot of happening there. But what I see as the biggest change is we are seeing a larger share of modern trade, OEMs, original equipment manufacturers, industries in this place. So that means we have a large corporate, Castrol on one end, and we have another corporate, an OEM like a Suzuki or a Honda on their end, right? And Suzuki or a Honda will send you a remittance advice or a payment advice. And that single document contains deductions, disputes, and you will have to sort of translate it. You'll have to understand what that code 59 of Suzuki means to you, right? So that kind of a business lexicon, translation is what we see increasingly happening. I mean, yes, there are people who are digitizing, paying via app, all those things are happening, but this ecosystem is evolving to build that translation layers.
And what do you see it globally?
Globally, this is the norm. In the sense, remittance advisors and payment advisors are the norm. But globally, in terms of B2B, the biggest factor that we see pushing it forward is embedded financing. Embedded financing is what we see. Majority of our customers are in US. So embedded financing is what we see right there, dead and center. That means the ability to embed finance when I am sending an invoice to make a payment. So that means I send with options, valid options for him to make a payment early, and embedded financing when I am about to make a payment. That is on my AP side, and ability to provide dynamic discounting offers, especially for a cash-rich company like Castrol.
And how are banks helping you in this entire journey?
Banks have been our biggest enablers, thanks to you. There was a little bit of trepidation earlier, right? Earlier it was like, do they see us as a threat? How do we evolve together? But what we have seen of late is that banks realize that B2B fintechs are not really the threat. It's another bank with a B2B fintech that is really a threat. So the idea here is that it's an ecosystem play, right? You have your stack. You are the payment rail. You are the compliance stack. We are the last mile stack. We are the innovation stack. So us working together it's an ecosystem play. And banks have been taking us to their customers, ring fencing it, creating value chains with us. Creating those process flows with us. It's been a great journey together.
Why he said that banks like us are helping him is because it's the only industry which is B2B which gets paid as fintech for the job that they do.
That's because you spoil the customers. you don't charge anything for
and we guys as this industry which is B2B as a fintech industry is making a lot of money on the back of the pain that they solve. They are different, maybe boutique organizations solving for it, making money, profitable ventures, and actually imbibing on the fact that they are the future if they have to, or we have to look at solving for digitization end to end. And that real pain point is the key part. If you know the real pain point and you're able to solve for it, that's gonna be the key identifier or for fintech to survive. While you'll hear and see many fintechs, great, but the ones which are going to survive is what is the pain that you solve for a customer, what is the pain that you solve for the industry, what is the pain that you solve for the digital aspect of the journey, which is the journey that we have all taken, which is going to be the future. With that, I'll bring this panel to an end, but open to questions. If anybody has any, we can take maybe one or two maximum questions. Is that right? One or two questions? One question. If anybody has any question, happy to take that, or else we are available at SCB stall or in the forum here. Looks it's all clear. Thank you very much. Thanks a lot for joining in and really appreciate your time. Thank you.
Thank you very much.
Thank you very much.
Thank you very much to our panel for this discussion. It's been an insightful session. I'm sure we have a lot of learnables to take back. It's been a great honor to have you at the Global Fintech Fest 2022. Also, may I remind everyone that we have a special app made for the Global Fintech Fest, which is downloadable from Android and Apple both. You can download the app to network with others here at the Global Fintech Fest. I'd also like to thank our partners, our theme partner WhatsApp, co-powered by Amazon Pay, Spend management partner Encash in association with Perfios, payments partner Cash Free Payments, and CEO's dinner partner HSBC. Our other partners are communications partner Caliera, banking partner Standard Chartered Bank, diamond partner PayU, AWS, Kia.ai, Intrasoft, Paytm, and our networking partner Buddy Loan. सहाच पाहिजे ना सहा सांगितलं का सात छः ना हाँ बस अच्छा 5 हुआ है अभी Everyone sitting at the back, if you want to come forward, there's a lot of space towards the front. A very interesting panel discussion on will credit card linkage to UPI lead to a rise in acceptability by merchants. We are waiting for our panel. Hmm? 976 444 1081. I have your number. हाँ फिर ऐसे कैसे हो गया Yes, you have to wear it. I will talk and then you will be able to hear in it. There's music going on right now. Are you hearing something? No. the mic, no? Yeah, okay, wait. This is a... ये वो hall का है. Sorry, it is the next hall. What you got? All right, everyone, let's get started with this session on will credit card linkage to UPI lead to a rise in acceptability by merchants? This is being moderated by Devang Nirala, CEO, Entity Data Payment Services India, and our panel for this session are Ajay Singh, Senior Vice President, Paytm, Rohit Lad, Director, Vriddhi Software Solutions, Denny Thomas, Head of RuPay, National Payments Corporation of India, Bhargavi Sridharan, Head of E-Commerce Ecosystem at ICICI Bank, and Pramod Mulani, Vice President, Cards Strategy, JustPay. Let's welcome them with a round of applause, everyone. Let's have a round of applause for all our speakers. And over to you.
Good afternoon. I think we got delayed by about 30 minutes, but nevertheless, great to see a great crowd here. Before I begin, I think UPI has been kind of a revolution for the last 2.5 years, 3 years. More than 3 years, we've seen transactions just literally going up in terms of a different kind of a curve out there. When we see UPI, and then that's when a few months back, RBI came down and gave an announcement that there would be RuPay cards which could be linked, credit cards which could be linked on UPI, and that was met with a lot of I think happiness as well as basically surprise by a lot of people. And here we have a great panel, so I will not take too much of the time here. So I think it's one of the hottest topics out here. Today evening we have a launch of credit card linkage on UPI happening today evening right here at the Geo World Drive happening. So I think that's going to be a very I think a different moment out here from an NPCI. So we have a great panel. So I'll start out before anything else with Denny. Denny comes from NPCI and from the hub of things. I think Denny, my first question to you is basically when UPI is the baby of NPCI, right? Now when you look at credit card linkage on UPI, basically, what is the thought process behind it? And one of the other key questions, because NPCI is going to be creating the system around for the entire industry out there. Everybody is going to be plugging into your rails. How do you see the customer experience or user experience panning out? So over to you.
I'm sure that all of us here are pretty much interested kind of on the actual go live of UPI CC, right? But all the more people would be interested what was the genesis of this entire thought process, right? So obviously it was a step-by-step approach, and just to kind of give you some interesting background, if you look at the evolution of the debit card in the country, right? So from 2015 to 2022, debit card overall, if you look at it from a card info perspective, it has just grown 1.6 times. When you look at the spends, it is almost around 6 times it has grown. But the moment you add UPI to it, that's where the magic is. It's almost 23 times, right? And that's what UPI has done. And although everyone consider UPI as a tipping point for the payments ecosystem in the country, people don't understand the platform and the ecosystem that was built up primarily to kind of enable this, right? And what UPI has also done is that it has taken this power from say a issuer or an acquirer to actually to the customers, okay? And that's has been the core element of UPI. The customer decides, and the overall ecosystem that got evolved, okay? NPCI has been always coming out with products. And I think with UPI, that was the first time that we looked at as a platform, okay? And this platform was actually agnostic to what was the end product which would be get linked to the UPI platform. So we started off with the CASA account. Then 2018, when this growth really kind of propelled, there was a huge demand from the market. And as I said, customers were demanding a credit-linked product on UPI. And that's where in 2018, we got the approval for launching the OD product, right? And that's how the first step towards credit kind of took up. And today, when RBI has allowed to start off this with RuPay cards, it has again given back the power to the customers, right? And the whole objective of this entire UPI linkage is not only kind of enabling the acceptance points, right? So the figure that I mentioned, that in spite of the SIF growing by 1.6, the spends grew by 23 times. That was predominantly because of the deployment of QR codes. And if you look at the POS terminals that are there today, the number of POS terminals, it is close to around 6.7 million. And the number of QR codes that are there, it is like above 100 million. But even if I consider unique merchants, it will be fairly around in the range of 60 to 70 million merchants. And that's the reach. And that's where the power will come in. And as I said, the power has now gone back to the customers. So customers would do the linking of the credit card into the UPI platform. There will be multiple use cases which would come up, basis the customer's demand, basis the customer preferences. And I'm sure this overall ecosystem is going to be rocking in a couple of years.
Awesome. I think there's still one question unanswered, but I'll come back to you again. I think I'll over to you, Bhargavi. I think from a bank perspective, so Bhargavi comes from a very interesting, she's the head of e-com at ICICI Bank, as we know. I think from her perspective, as a bank, it's one of the leading banks in the country, and they're driving a lot of commerce on the merchant side. So my question to you, Bhargavi, is when you look at merchants, so two questions rather. So one is on the merchant side. How do you see the experience because of credit card linkage on basically the UPI? Because one of the session key things is it going to increase in the number of merchant signups and everything else? So that's my first question. Do you foresee that sort of a thing happening? How do you see that behavior changing? And my second question is basically in terms of issuance. So would you see, as a result of this, would the issuance technologies be a lot different and a lot more disruption happening on the issuance side? Because instead of giving a physical card, you can actually basically give a virtual card which could be linked on UPI and basically can be immediately put on the rails of that. So just over to you, Bhargavi.
Thanks, Devang. Hi, everyone. Good afternoon. My name is Bhargavi. I look at the e-commerce ecosystem at ICICI Bank and the API banking, and also work for the digitization of our MSME and business banking customers. So undoubtedly, UPI on credit cards, or credit cards on UPI, should I say, is transformative. It's an asset-light model for all our merchants, right? So no POS machine, then no janjat of rule for, all of the infrastructure costs associated, as small as it may be, those daily niggles and frictions of running your POS machine. So certainly transformative. It allows every merchant to now accept credit cards if they so will choose to opt in, I'm sure, into this. So yes, we see that it's a great thing for merchants. Key aspects that we all should be looking at, and I think when we thought of this topic, and as you said, it's very hot, and I think today this topic has more questions than answers. And the interesting thing is there is this principle, right? By observing something and by participating in something, you change the nature of it. I think that's certainly going to happen here. So the key unanswered questions that will drive adoption and the immense success is the commercials. What should it be? Highly debated and very much WIP. What will happen to Bharat QR? What will happen to the POS machine in not months, but maybe in the years to come? So these are all challenges that we in operating businesses continue to, we continue to do BAU, then we continue to think of what are these long-term impacts. NPCI just launches magic out of the box. And so this is it. And when we talk about cards, it's today an established, on the issuing side especially, it's an established commercial model. And customers also have expectations on rewards. Customers have expectations on credit periods, and there is a cost of credit. So these are things that the commercial model that comes up will certainly have to take into account. And also, will the ticket sizes go up? Will the average spends on the card go up? I think one of my colleagues here mentioned that the total number of spends, amount of spends will certainly go up. The average ticket size may well drop. Now, are the card switches equipped technology-wise to cope with the sort of transactions that UPI is capable of delivering? Right? The scale suddenly sort of goes up exponentially. So that is something that we have to, while merchants may accept it, we need to ensure that at the background we deliver that experience to them. So we are quite keenly watching this space, quite keenly participating, working with all stakeholders here to make that happen. You also had another question on will it change, I think, improve the issuance.
Improve the issuance.
Yeah, so I think that is anyway already happening by many of the fintechs. They're using surrogate markers to increase the credit base, and neatly delivering that in a UPI on OD has been there. It also has an MDR. But UPI on credit will certainly have a huge offtake, because there are so many players separately working on bringing many folks into the inclusion, credit inclusion. So certainly I think it will scale up further.
Great. I think I'll come back to you on a follow-up question there. Rohit, on to you. You are one of the leading. So Rohit comes from Vriddhi Software, and they're one of the largest solution providers for education institutions. I think you can give a further intro about yourself. But my question to you is, from an ecosystem of education, because you handle a lot of rural traffic, you handle a lot of rural students, how do you see these things panning out? Because from an experiential point of view, you have UPI, now you have credit card on UPI. So you have, that's two different levels you're getting into. How would you look at the experience of your institutions as well as the customers? Because there are a lot, I'm sure there are a lot of challenges which your institutions are facing out there. Even in terms of basically, say for example, pure play digital payment itself. So over to you, Rohit.
Awesome. So thank you for that. I'm Rohit Lad. So I'm the director of Riddhi Software Solutions. So we have been the ERP player in the education sector for the past 20 years or so, something like that. I'm not sure. So it's been a long journey, and we started basically off from a strictly offline and how the old kinds of inventory management system used to work. So we started off like that, and as the time changed, some of our customers, like some of the big colleges around in Maharashtra, they started demanding an online solution to our services. So the natural course of action was to give them an online solution, but since they are educational institutes, finance is a very big matter for them. So collecting fees from the students and making sure the success rate of those transactions that is high enough so that it won't drive away traffic from their particular institution to another institution who might not have an online solution was a big challenge for us. So in the early days, as you mentioned, like UPI was new, there were very few customers or merchants willing to go on the UPI system just because there was this orthodox way of thinking in the education sector specifically, that online means there is a 99% chance that it's going to be a fraudulent activity. So that was a very big challenge for us. So the best way we address that is like we forced some of our clients to and we over the course of almost 3 to 4 years, we basically hammered them in telling and basically saying them ki, if you go online, there are these benefits. So the accounting part will be easier on your end because the number of students and traffic they handle is very huge, and not a single person can handle those. So UPI obviously helped driving this, as Denny mentioned, that the QR codes are way higher than the POS systems in the market. So that particular part, like easily obtaining the QR code for their college account, bank accounts, and the students, specifically new students, the students tend to be techno savvy than their parents or any other older generation. So they kind of chose and they rode the wave of the UPI QR code and that revolution. So demonetization helped in that perspective a lot. And secondly, COVID, if there's a bright side to the COVID, it helped drive the traffic towards UPI. So it was a really challenging, especially in the rural area, as you mentioned. People are not willing to go online yet due to lack of infrastructure mainly. Because as from our internal analysis, particularly in rural areas than urban areas, the success to failure ratio for UPI transaction is very much 3 to 4 times higher than in an urban setting like Mumbai or Pune, some cities like that. So that drives a challenge. We have, actually I'd like to mention a case we had previous year. So this one particular client user was trying to make a very substantial amount of payment to the college. and they tried in a 24-hour period, they almost made 351 transactions, 351 attempts using UPI. And we ultimately had to call them and ask them, hey, what are you doing exactly? What's the issue? I thought like there was some issue with gateway or some bank servers or something like that. But it turned out that they recently activated UPI and there's a cooldown time for UPI. Yes. They were not aware of that. So drive the UPI acceptance for merchants, I believe the key point is going to be educating the merchants and the end users. It's not going to be linkage of credit cards or linkage of any other different types of payment methods, but it's going to be the knowledge that UPI, how it works, what are the benefits, and if the credit card linkage happened, what more benefits they will happen. As Bhargavi mentioned, there is a part of MDR also, so that's a whole another topic. That's a big rabbit hole to go down. So I'm not going to go into that, but yeah, that's a very big challenge. But credit card linkage will definitely help, but I believe the way to go is educating people.
Great. Thanks,
honestly.
Rohit. I think I'll come back to you again. Ajay, over to you. I think you handle one of the largest consumer ecosystems. So, by the way, Ajay is from Paytm. He comes with a long background from Citibank. So, you can give an introduction about yourself. But my question to you is, when you look at more than about, I don't know, it's about 200 million plus customers on Paytm. And with that, because the kind of questions which I think issues which Rohit had led was basically on the rural side, A, knowledge, B, basically in terms of connectivity issues and everything else. So one, from your side, where do you see that panning out when you look at something like credit card on this happening? Because credit card linkage, first is UPI, because you've been one of the most pioneering apps out there in the market out there. So where do you see that helping basically, and how does that rural experience change with the credit card? And second is, would you see new use cases emerging out of credit card linkages on UPI? Because along with basically today, for example, every merchant on, let's say for example, you have this hawkers and everybody else, everybody says Paytm karo. Now would that basically change and somebody say Paytm pe credit karo kind of a thing?
Yeah, thanks Devang. Hi everyone, good afternoon. I'm Ajay. I'm with Paytm and I manage our credit card and merchant lending businesses. Professionally, I've spent a large part of my professional career with Citi, as Devang mentioned. So Devang, coming to the points you raised, firstly, if you just look at the journey, the way UPI has transformed, and some of us were chatting earlier, just about 5 years, right? UPI is today 10x of what credit card spends are. And one of the primary reasons for that, it is accepted at 10x plus merchants in the country, right? That is one side of the equation. The other relevant points which you raised, obviously there has to be supply of credit, right? Which is a parallel entire industry and ecosystem working towards that, right? A lot of folks in the audience are part of that. And UPI transactions and the e-commerce ecosystem in India, right? The way all of this is really transformed the way we all live our lives is a lot of ways encouraging that, enhancing that. Today, approximately, close to about 40 million merchants accept UPI payments, right, in India. And so it is all pervasive, right? So you will see, QR codes all across. As you said, Paytm Karo, and maybe somewhere in the future. I think whatever I've heard of all our colleagues and what we chatted, this will become equally big. It may take, that's for sure, it should become equally big. Yeah, a whole host of things have to be solved along the way. Now, it's for us to collectively see, right? And there is obviously an institutional support which will be required, right, from the government and everyone to come together. But clearly, there are two things which will happen. When RuPay cards initially get, linked onto UPI, and all the other networks we presume will follow suit, all existing card users will increase spends on cards, right? With a lot of parallel things happening, which most of us are aware, tokenization, right? Better acceptance technology, right? All will enable very easy, convenient usage of cards for all existing card users. Right? The second thing, as I spoke about, we'll have to ensure collectively, right, as an ecosystem, there are a lot more folks get credit cards. You spoke about, rural India, obviously, there is hardly or no credit available there. There are a lot of institutions, a lot of young companies who are working to solve some of those problems, right, along with established institutions. We have to solve that piece, right? But I think the first piece, the acceptance gets solved, and then we have to be collective. That will take things ahead, right? But definitely, this is going to be transformative. None of us had imagined in 2016, right, when UPI, when we heard the term UPI and VPA, that it'll become so much a part of our daily lives, right? So hopefully, sometime in the future, very soon, you will see, and hopefully, we all will start saying Paytm Pay, credit card karo.
Chalo, good. I think that's a good line I've given you. You can give me the royalty for that if you don't mind. So over to you, Pramod. I think Pramod comes from JustPay. JustPay is more of an infrastructure provider for a quite lot of merchant set. Typically, a lot of mobile merchants to online merchants. Everybody use JustPay as a technology base out there. Now, my key question to you would be on technology itself. What sort of, like for example, we just spoke about credit card linkage, and one of the things which I was going to ask Denny was about which still is pending right now, about user experience. But from a technology challenges point of view, how do you see the implementation happening? Because we just have tokenization coming up. Let's say, for example, 30th September is the deadline for tokenization. So do you see how would this be from an implementation standpoint? How do you see this being implemented? And from a player point of view, for example, any other players, like for example, we are a player out there, Entity Data is a player out there, and so are the banks, everybody's a player out there. How do you see that changing? Because in terms of interfacing or trying to do things, how do you see that changing out? And what are the challenges do you see in research on the technology front?
Hey, thanks, Devang. I guess all of us spoke about UPI and the transformative things it has done. One thing to note is India is leading the innovation pack on payments. And when you are the leader on innovation, obviously you're doing things which are very, very transformative. You're investing in new technology. The regulation is trying to protect the customer. So a lot of things are happening back to back. Now, what it means is that if you are the lead innovator, you will actually go through the process of implementing the technology and show the world that we can do it. And I think that's what UPI has done. As part of that process, obviously, there is a certain pain that one goes through when you implement newer technologies, because we have to be mindful that anything that is going to be different is going to take its own journey for evolution and scale. What is predominantly also, it has to be safe. Now, safe, secure, and scalable means that, you've got to make right kind of investments in technology. So I think, the credit card linkage on UPI will go through its own evolution and journey. I guess the rails already exist, which is the good part. I'm quite sure NPCI will ensure that it's not very disruptive from the way it's currently done. So to your first part of the question, I think, many of the merchants who understand and process UPI payments, and that's almost 100% of them, will not be doing too much of tech change as far as, trying to accept UPI. And obviously many players like JustPay and some of us on both bank merchant side and issuing side will ensure that the disruption is minimum. But I think what is going to happen, which is to be kept a note of, is that if it scales to the like of, where UPI is today, we have to make more investments to ensure that it is secure and scalable. I think that would mean more investments at the back end side of it than, the front end side of it, which is more around the customer experience side of it. So I think it's going to be a journey that we will undertake, all of us as an ecosystem, because it's different. It's the first time we're going to see a digital credit card, which is completely accepted at 40 to 60 million offline merchants and online merchants. So you don't have a physical plastic. It's a very different way of actually using a credit card. So I guess all of us will go through that journey of evolution and experience. It's transformative, so obviously, there will be some amount of pain. It's not going to be as straightforward. But I guess, as I said, that we will play a role to ensure minimum disruption.
Okay, I think thanks, Pramod. I think over to you, Danny. I think a couple of questions leading from what Pramod said. One was, would this use tokenization as a base for having the card linked to basically the UPI apps? And second is, again, my still questions on user experience remains out there.
So I'll answer the second question first, because I'm sorry I missed that in the first session. So as I said, the core principle of UPI is it gives power to the customer, right? And customer has always been at the center of any UX, any process or any innovation that we have done. in UPI till date, and it continues to be. And that's one of the reasons why when this entire credit card linking process came in, there's already a journey, and as Pramod was saying, that we shouldn't disrupt what is already working, right, and what is already going. So we ensured that the process for a customer is as seamless as it is today when he is linking his savings account or a current account, right? So the process remains same. The difference is instead of a savings account, here he is actually kind of linking a credit card. And not many customers know that there is a credit card account which gets opened at the issuer bank level, right? But that's never exposed or something. It's always the credit card number which is there. So we have taken care of that entire journey where customer friction is kind of minimum to zero, and the customer seamlessly gets kind of onboarded. And similarly, the integration for the banks, because here we are talking about an integration between a UPI switch and a credit card switch, right? So that's something we have also taken care of, and also the settlement part of it and the dispute part of it. Because finally, we are going to use the UPI railroads for the end-to-end journey. To take this forward, and this is something that obviously I didn't want to kind of go in detail because I don't want to act as a spoiler because the launch is today evening. So I request every one of you to kind of stay back for the launch where the RBI governor would be launching this product along with two other great products from NPCI shelves. So the second part is what would be the customer journey, right, when they're using a UPI. And as I said, we are looking at UPI as a platform, not as a product, right? And when you have this view, everything changes. So today, we are looking at how we can kind of facilitate an instant credit card issuance, right? What Pramod was mentioning. You can have actually a digital credit card on the fly available for the customer if someone wants to do it. Can we provide those APIs? Can we kind of give that to the fintechs? Because today, if you look at it, the fintechs have already been working in various segments, right? And BNPL has been a biggest use case where most of the fintechs had come down. So there is obviously a demand. The question is, how do we supply it? So that's something that we want to kind of ensure that we continue with that journey and we keep customer in the middle.
Perfect. So I think we're pretty much running out of session. As you can see, a timer out there. Is it timer for closing out? So I'm sure there are a lot more questions out there. I would have loved to ask more questions, but I would rather leave it to the audience if they have any more questions. If audience has any questions, you can ask to any of our panelists out here, and then probably we can take it up. If not, then I have a couple of questions more. Yeah. You'll have to put it on the.
Someone will have to give him a
someone
mic.
Someone will have to give the mic. You can come up and I think you have to give him a mic. I guess.
Hello.
Yep.
Thank you for that. A couple of questions. MDR on credit cards, I think, is something that I think it's a bit of a gray area right now. That's something that I would love to sort of understand how MDR would work on RuPay credit cards in the UPI ecosystem. Second is, I've once always heard that the number of frauds that get reported in the UPI ecosystem and the transaction failures that are fairly large. What's NPCI view on that? Minimizing transaction failures. How would that translate into the credit card ecosystem? So yeah, those would be two, three concerns that one would sort of
I think
think
Denny,
about.
over to you. I think both the questions. I think you will be the one who can address this.
Right. So on the first question, obviously, the day this announcement came in, since that day, we have been having various industry interactions on the MDR piece, right? One thing is very clear with all the discussions that we have had with at least all the issuers and the major issuers that we have in the country. Everyone believes that the UPI, the success of UPI system ecosystem is primarily because of the small merchants accepting the payments, and the small merchants is accepting a payment because it's a zero MDR, right? So one thing is very, very clear that we need to support them. We need to continue to support them. That particular segment cannot be disturbed for whatever product proposition that we are going to bring in. And everyone in the ecosystem unanimously kind of support it, right? What we are looking at is, and again, this is in discussion right now, so that's the reason why we will not be able to kind of come out. But obviously, as Ajay was saying, NPCI launches and kind of we then work along with the industry to take this thing at. But as you rightly said, there would be and the panel also, every time you heard them talking about MDR. So there would be some business model built along it, because finally it is a credit product, right? And if a credit card is given to the customer, the issuer is always having that credit risk. Which leads to the second question on the fraud, right? So if you look at the frauds at UPI, okay, from a instant per overall transaction, this thing, UPI is one of the lowest fraud rates from a product perspective. That is primarily because the way UPI is built up, right? So you will always have to authenticate unless and until your mobile phone is compromised, unless and until your PIN is compromised, right? There cannot be a fraud transaction, and that's the beauty of UPI. So having said that, we are continuously working with the ecosystem to kind of, obviously, because I mean, in the payments world, you are aware how the fraud works, right? So the fraudsters are always one step ahead. So we are continuously kind of improving our system. On the failure rate, obviously, as NPCI, we have ensured that we scale up our infrastructure way before the demand actually kind of builds up, right? And it's always that same philosophy that we have worked up. Pramod mentioned how the banks needs to kind of also follow that same path. And today, most of the banks have taken care on the debit side, where they have scaled up their system for managing these volumes. I think the same exercise needs to get happen.
Question was raised by Rohit also in terms of
Yeah.
transaction failures.
Yeah.
I think that addresses that. Thanks. Anybody? Any more questions right now? Yeah, there's one more here. Yeah, two more, I think.
Yeah, hi. This is Nitin. I'm
Yeah,
here
Nitin.
from IndiaMart. The basic question is, at IndiaMart we see refund is a very big problem for the guys whenever a credit transaction is done. It takes a duration of around 5 to 6 days to get money to them. Does UPI on credit card rail help in minimizing this, or are we looking at minimizing in some manner altogether?
Again, who would
Someone
address that?
else want to take it, or I can?
I think any of the guys can take it. Either Ajay, Bhargavi,
Pramod.
or Tenny.
Pramod knows UPI system, so he.
Yeah, actually, I think obviously the intent is always to, give the refund back in the minimum time possible. We already heard that, processes are being put in place similarly in line with what UPI is already implemented. I think, as I said, anything new will go through its journey of, getting the processes right. But as a baseline, when you have something which is like UPI, where there are established processes, and if they're followed for credit, you should see a marked improvement from what challenges you're facing today.
Some comfort to you. This entire product is going to run on UPI railroads. So the existing processes of refund continues to stay at us. So the challenge that you're facing as a credit product will not come.
Thanks. Anybody?
Yeah, hi, this is Shubham from OneCard. So in credit cards, what we usually see that the settlements usually happen on T+1. So how would in UPI credit model the settlements work? Because in UPI, merchants usually accept the settlement to be at this in real-time basis.
So as I said, this is going to work on UPI railroads. So the settlement will also happen as per the existing UPI settlement cycle, which is 8 currently. It'll go up and as and when the requirement comes up. Right.
Thank you.
Okay, there are two more here. Can you just get the mic? I think there and here.
Hi, I'm Sumit Swaroop from Center for Digital Future, CDF. So your point on, of course, MDR is a very hot topic, and please allow me to, just ask one more question on that. That, having zero charges on UPI, and it does result in concentration of power, whether it's UPI being the single platform or it's the 2-3 large payment apps controlling, whether it's Google Pay or Phone Pay, etc., controlling everything. So it does, and there are multiple instances of companies not being allowed to charge, and then concentration of power happening, and it does result in lack of innovation in terms of the startup ecosystem or the other 60-70 applications not being very active on UPIs. So is there any thought that you can have a tiered structure of pricing on UPI, maybe up to 2,000 rupees have zero charge, and then above 2,000 rupees? So some kind of a charge to enable a more innovative startup ecosystem on the whole UPI payments, because if we keep doing this, then the concentration of power will keep increasing in the coming years. Just a thought.
Ajay, you want to take that?
So, so, I mean, very pertinent question. And, while see some of this, so let me give you a little bit of story. So I've spent about 5 years in the Malaysia market, which is a mid-income market, where I used to be part of the card business there with Citi. And some of this stuff, which is more driven by institutions and regulators, right, to enable digitization in the economy, has to be driven in a certain manner. But yeah, all the players that you mentioned, right, innovation. In fact, even for payment apps, there's a huge amount of cost, right? To be able to settle UPI, high velocity transactions at the breakneck speed that they're growing, it requires a lot of infrastructure investments, right? So there's cost all around for all the players. And I think everybody involved is mindful of that, right? And which is why this has to be done thoughtfully, and which is where we said that this has to be done collectively. But at the same time, I think the single biggest thing, if you look at the way UPI has grown, right, a lot of P2P payments have grown. And why have P2M payments not grown as much, maybe at the same pace? Because of acceptance, right? So acceptance and ticket size and the kind of users, right? So a part of that problem gets solved because a lot of the large ticket consumption in India happens because it's driven by credit, right? If you look at concentration, talking about some bit of concentration, a lot of credit-driven consumption is getting concentrated in certain categories and certain, So some of them will get democratized, right, as things move. But yes, Bhargavi mentioned about, and that's so true. Issuers today who are settling and managing all the aspects we're talking about, normal transaction settlements, refunds, all of that requires cost, right? Fraud is a cost. So there has to be a certain, tiered structure to make this viable, right? But at the end of the day, we have to ensure that there is a merchant who's accepting, right? Who's a small business. And there obviously are consumers, right? So we have to kind of protect that ecosystem. But there are a lot of parties who are kind of building this. So I think, there is no right answer to this, but I think everybody's mindful, I'm sure. And, it's in the open. I'm sure the regulator is mindful of this. Everybody is mindful of this. So I think we'll have to take it as it goes. But we have to start on the right foot, and Denny spoke about, protecting certain segments, right? And I think that is right. So I think none of us are probably the right people to comment on this, but yeah.
I think. Thanks, Ajay. I think we already have a time up. He already had a question out there, but do we have time for one more question, or is it time up? One more? I think one more, if you can do that.
Okay, so my question is around integration of payment networks. You spoke that initially it will be on RuPay card, but as we expand this to more networks, how easy or difficult one it is to integrate two networks, and secondly, how open will be, let's say, a MasterCard or a Visa to have this kind of an arrangement, because as we stand today, it's a duopoly market and they do have a strong hold on the customer. So how willing they will be to let go of some of that stronghold that they have.
For you itself.
So, sorry, I didn't get your name.
My name is Mohit. I'm from CLSA.
You're from?
CLSA.
Okay. I thought master or visa.
He's equities analyst, right?
Great, great. So, very good question. And this question was the first thing that we kind of asked ourselves when this announcement came in, right? So, obviously, RBI has allowed this on RuPay first, okay? And RBI, whenever they come out with any new process or product or system, there's always a pilot phase, right? So we were very clear that this is just a kind of a technical launch where we want to kind of actually make it happen and then kind of grow together as the other issuers also kind of join the bandwagon. So this was the first question that we asked. How do we want to kind of create that process? Now, as NPCI, it would have been very easy to kind of create a process where the linking of a ICS card could have been much more tougher, right? But as I said, the core principle, the major design principle was customer is at the center. So if the customer is at the center, what we have done is the entire onboarding journey, the entire onboarding process, irrespective of which card the customer is, it becomes a very easy process. So today, if all the issuers are making live the RuPay linking, they just have to kind of turn on a Master or a Visa or a Amex, whatever, right? So that's the process that we have put in. The second thing was on the tokenization part, right? So the beauty of this entire process is it actually eliminates the need of a tokenization, because UPI is anyways, the VPA is a alias, so it's already tokenized, right? So you don't have to even get into a tokenization process. So that's the beauty of the process. As I said, we work with the design principle. We are not worried about what would be the RuPay share. We are not worried about what would be the overall this thing. We are worried about how this will benefit India in terms of both acceptance as well as on the issuance side, how do we grow the credit base.
Great, I think, thanks. Would you like to add on something?
Call out is that there have been past products, right? ATM is a classic example, which is an NFS network where Visa and Master are universally accepted, and the regulator is ensured that there is innovation and integration is doable. So that's one example which is very, very successful and operates at a scale which is highly usable by the consumers. There was another attempt on BQR where all the networks came in, may not be successful, but there were frameworks in which multiple networks have participated. So I'm quite sure this is a practice that has been followed in true spirit, and I'm quite, when it happens, depends on how Visa and Master look at it, but it's definitely something that's happened in the past.
Yeah, thanks, Pramod. I think this has been an exciting session. I think it's only been time up right now. A lot of people are telling me time up. Thanks for being an engaging audience out here. We are looking forward to the CC linkage on UPI today evening. I think let's look forward to that and see how we can change the universe. I think Jai Hind. I think let's hope for the best for the country right now. Thank you very much.
We'll be starting with a hybrid panel discussion immediately. May we request everyone to kindly be seated. Once again, welcome to the Global Fintech Fest 2022. A special mention to our partners, country partner UK FCO, country partner King of Netherlands, credit score partner Paisa Bazaar, conversational commerce partner Carix, P2P lending partner Faircent, VIP lounge partner Cred, and InsurTech partner Cover Genius. We have a hybrid panel discussion coming up on the topic Fostering Fintech Innovation, the Way Forward. Fostering fostering fintech innovation, the way forward between India and Germany. And may I invite our speakers, our keynote speaker, Doris Dietz. Doris, sorry if I'm pronouncing that wrong, the surname. Head of Division, German Federal Ministry of Finance. Our moderator for this session, Mohan Tangsale, Strategic Consultant, Swift India Domestic Services. Barbara Wokil, Policy Advisor, Digital Finance, German Federal Ministry of Finance. Stefan Halusa, Director General, Indo-German Chamber of Commerce. Rajesh Thakur, Managing Director, Co-Head, Global Transaction Bank, New Economy Coverage India and ASEAN, Deutsche Bank India. And yes, and we will get started. May I request Mr. Mohan Tangsale to please take over. We'll be starting with the keynote, but yes, over to you, sir.
Request the keynote speaker, Doris, to please take over. Doris, please.
Okay. Hello, everyone. I hope you can hear and see me very well.
One moment, Doris. I think you are not audible yet. Can you please say something?
Hello, everyone. Can you see and hear me?
No.
Doris is not audible.
Hello.
So, I just
Doris,
keep
are
on
you able to hear
talking.
us?
Yes.
Okay. One second, we're just sorting this out.
Okay.
I can hear you too, Doris. So obviously, it sounds like it's in the room where we have the problem.
That's good. Oder auch nicht.
Zumindest müssen wir jetzt nichts machen.
Genau. Ja, ja. Aber bei mir ist auch schon gestern der Test nicht wirklich.
Ich habe gar keinen Test gemacht, also insofern.
Ja, genau, aber wir am Ende auch nicht.
Ah, okay, nee, dann war es das Gleiche. Also ich habe darauf vertraut, dass es irgendwie heute schon funktionieren wird. Ist ja schließlich ein Fintech.
Doris, we are audible, ne?
Yes, can you hear me now?
Yes, I think we are audible, but we are not able to hear her. They're just checking the technicals.
Okay.
This is on. We can hear you. We can hear you.
So, can you hear me now?
And everyone sitting at the back, if you all can come, please come forward. A lot of empty space in the front.
So, to the august audience, I would like to say that I know probably this is a difficult time when you are between the lunch and the meeting. Nevertheless, I can assure you that the inputs coming from my colleague will be extremely useful for all the fintech world. And that's typical of having a technical snag in the fintech conference.
All right, Doris, can you please say something? I think we are...
Can you hear me? Hello?
Yes,
Hello,
we can hear you now.
You are now. You are audible now. So
loud and clear.
So Doris, you are welcome.
Okay.
As you know, the panel is for fostering fintech innovation, the way forward between India and Germany. And as I understand, you are head of digital technology, payments, and cyber security. I'm very sure that the inputs coming from you will be very exciting for my audience who are looking forward for partnering with the German initiatives. Over to you, Doris. Thank you.
Yes, thank you very much. And first of all, a very warm good morning from Germany. For me, it's maybe a bit easier since I haven't had lunch yet. So I'm very pleased to participate in the Global FinTech Fest today, together with my colleagues from the Ministry of Finance. And I would like to start by congratulating the organizers of the Global Fintech Fest for putting together such a distinguished set of speakers and highly interested panels. I wish you all the best for the conference. I think the conference underlines the important role fintechs play in the digital and sustainable transformation of the global economy. And I am convinced that the digital transformation and the path towards a climate neutral economy will determine the future competitiveness of our economies. The digital and green transformation is changing how we pay, how we save, how we invest, and how we insure ourselves. And the transformation is already starting. We all know that digital business models are not bound to jurisdictions, and neither do climate effects stop at countries' borders. Therefore, global cooperation is needed to tackle these challenges together. Germany has put digitalization and sustainability as high priority on its G7 presidency agenda. And with India's upcoming G20 presidency, India has a significant role in advancing global cooperation. I'm very much looking forward to it. In the financial industry, your main topic today, both startups and established companies are not only financing our innovations, but themselves are driving innovation with new ideas and new technologies. In my view, there are three key factors for a successful fintech ecosystem. The first is talents, the second is capital, and the third is policy and regulation. Of course, governments can influence all three factors. However, I would like to focus on the last one. I think the question is, how can policy and regulation encourage fintech growth? In Germany, we aim to find the right balance between promoting innovation and competition on the one side, whilst protecting investor and financial stability on the other side. Our efforts have been increased with our current government, which is placing a priority on fintechs and digitalization. As you all know, Germany is part of the European Union with its harmonized internal market. Most of our financial market regulation is therefore passed on European level. I would like to give you two examples in the fields of digital and sustainable finance, where the European Union is currently at the forefront of global discussion. The first example is crypto assets. As part of a broader digital finance strategy, we are currently finalizing a regulation on markets for crypto assets, so-called MiCA. MiCA will set harmonized regulatory standards for crypto assets in Europe. It includes balanced requirements for investors' protection and for maintaining financial stability. And this regulation, by the way, also includes provisions on the energy consumption of crypto assets. Germany was actually a frontrunner regarding crypto assets regulation. In January 2020, we established the crypto custody business as a new financial service in the Banking Act. It requires a permission from the German Financial Supervisory Authority. This approach has increased investor confidence in crypto. At the same time, it ensured compliance with anti-money laundering regulation and consumer protection, two of the main risks associated with crypto custody businesses. As I understand, crypto assets are highly debated in India too. In Europe, we decided for sound regulation. By doing so, we also aim to advance international standards, for example, at G20 level. The second example is sustainability. In the field of sustainable finance, we also need international standards for ensuring sustainability of business models. According to the Sustainable Finance Strategy of the European Commission, additional 350 billion euro are needed annually in order to meet our 55% emission reduction target in 2030. Therefore, the financial sector needs reliable and comparable data in order to decide where investments will have the biggest impact on emission reductions. We are also having a trend in Germany which is called green fintechs which are especially engaged in emission reduction business models. Since many investors are active in more than one jurisdiction in the field of sustainable finance, global reporting standards are key. So to bring initiatives like the two mentions to life, we need a strong and innovative industry. Startups are key drivers for innovation. Therefore, the German government is strongly pushing the fintech sector and the startup ecosystem as a whole. At the Ministry of Finance, we are currently in the process of launching a so-called Future Financing Act to further strengthen the establishment of startups and fintechs. It includes provision to speed up licensing processes for fintechs, for example. Moreover, the German government approved a comprehensive startup strategy to strengthen and promote young innovative companies this year. In order to put into place initiatives like this, policymakers and practitioners need a common understanding how the market works and what market realities are. This is why the German Ministry of Finance institutionalized the dialogue with the financial industry, especially in two new formats. The first is a Digital Finance Forum. It is a forum for discussing strategic location issues and technical developments in dialogue with fintechs in Germany. We focus on aspects alongside digital banking, digital payments, crypto assets, and digital insurance. Topics like digital identity also play a major role here. Second is our Sustainable Finance Council, how we call it. We established a multi-stakeholder platform staffed with experts on sustainable finance. They advise the German government on the implementation of its sustainable finance strategy along the guiding principles of financial stability and sustainability. The independent council helps Germany to develop into a leading sustainable finance location. Also here, fintechs play an important role. With due respect, we see how much India is at the forefront of digital transformation. It is very impressive how India, for example, has taken an outstanding leap with the unified payments interface. I just realized that it was one of the major topics of your last session. It is an impressive way towards a paperless, cashless public administration with many benefits for consumer, industry, and the public. That's how we perceive it here. In Germany, we are actually still working on a digital identity, which is essential for such a payment system. I believe that there are a lot of points of contact between India and Germany for closer cooperation. We are both interested in a secure market environment. Both our nations have a reputation for being good science locations. We should take advantage of this by engaging in regularly exchanges on these issues. Conferences like this one are very good occasions to do so. That is why actually there's not much more for me to add, but to wish you all a highly interesting panel discussion and all the best from Berlin.
Thank you very much, Doris. Your thrust on financial stability and sustainability is really worth where the, as you rightly said, that the central bankers and the policymakers.
I can't hear you.
Am I audible?
No.
Huh? Somebody says yes, somebody says no.
Now you are.
Okay, fine. So I really appreciate your thrust on financial stability and sustainability. And as you rightly said, the common understanding among the policy makers, if you are moving ahead on the crypto, I think this is one area where the Indian regulators are pretty skeptic about it, but would also like to have the regulations. I am sure that things will work out. And I think there could be a lot of opportunities, as you rightly appreciated the UPI. On the digital identity also, I think Aadhaar, our UIDI is doing excellent job, and there could be many more areas where probably the German and Indians can really work together. So having said that, thank you very much. And now I would like to invite Mr. Stephen, who is the Director General of the Indo-German Chamber of Commerce. And Stephen, I would like you to really focus on possibilities to facilitate connecting in the both directions, the networking point of view, the fintechs who would like to operate in Germany or the German fintechs who would like to operate in India. How can you really, what kind of a guidance that you would like to give to the audience? Over to you, Stephen, please.
Yes. Thank you very much, Mohan. I hope you can hear me.
You are
And I would
audible.
like to thank you and
Stephen, you
sorry.
are audible. You are audible. Welcome.
Wonderful. Thank you. Yeah, thanks for the introduction. And also, of course, thanks to the organizers of this great event for having me, especially as I'm not an expert on fintech at all. So I would, as you suggested, like to focus on the Indo-German corridor because the title of the discussion is the way forward between India and Germany. And in order to define the way forward, maybe we can I can start with providing a little bit of framework on the Indo-German business relationships, as most of you probably have some of the data, but maybe not all of them. Currently, we have around 1,800 German companies which are active in India, and they provide around 500,000 jobs in the country. In the other direction, we have
We lost
close
you
to
again.
600.
We can hear him.
Okay. You cannot hear me?
Yes, we can. We can.
Okay, so I just continue. In the other direction, we have around 600 Indian companies which are active in Germany, and they created around 30,000 jobs in the country. The bilateral trade between India and Germany reached record highs last year with around 26 billion US dollars. They keep on growing. Exports to Germany are actually growing faster than exports from Germany to India, and that led to the situation for the first time that actually India has a surplus in the bilateral trade with Germany. And I think this underlines the importance of the relationships for both of our countries. And when we look into German investments in India, the service industry has been one of the most important sectors over the last 20 years. I think it's the second most important. And of course, banking and finance is one of those areas. And our role as a bilateral chamber, bilateral Indo-German chamber, is of course bringing the players together, which basically means we're acting as an information platform for all the stakeholders, whether it's companies, whether it's associations, whether it is the government. We want to provide this platform because there are already multiple initiatives between countries which could also and should be interesting for startups in the fintech sector. There's, for example, an initiative called GINSEP, the German Indian Startup Exchange Program, which is active in the corridor. There is a German accelerator, German government-funded initiative that supports German and Indian startups across all sectors, all industries. There is a digital dialogue, and there's also Indo-German Digital Working Group. Both of them have the target to harmonize activities and initiatives between both of the countries to basically increase the ease of doing business. And that always includes startup companies as well as the established industry. And the companies that have already been active in India for quite some time. We are also, together with our partners, organizing startup delegations because, of course, the first step has always been, and is the most important step, is to better understand the market environment in the respective other countries. So we support with our partners to provide the opportunities to startup companies to actually visit India or visit Germany to get a better understanding of the market environments, because that, of course, is one of the challenges that we see, and that is also true across all industries and across all sizes of companies, that it is important to better understand the respective target markets. And this is again our role. I can only reach out to everyone to contact us in this regards. If there's any interest in getting more information, please reach out to the Indo-German Chamber. We'll be happy to provide more information on our activities, but also on the activities that I mentioned that are already existing between India and Germany.
Thanks, Stephen. I think your invitation to connect to Indo-German Chamber of Commerce, get into the exchange programs, understand startup delegation, understand market environment, it's excellent. I mean, the fintech world from the country should really take care. So I'll come to Rajesh now. Rajesh, as India is the fourth largest country with regard to the fintech growth having. I'm audible?
Yeah, you are.
Okay, fine. So having 107 unicorns, so many unicorns in the pipeline, with all that scenario, I would like to understand from you that as we heard Doris, we heard Stefan, what would be your advisory to the fintech world, and particularly being from a Deutsche Bank and working in the technology side, the transaction banking side? What are those opportunities you feel that can be explored by the fintech world in India?
So obviously, India has done great progress in the entire last 5 to 7 years in the entire new economy segment. Same way, if you look at but couple of areas I was looking at, lot of platform economy got developed across the world. Now, if you look at the areas which are focused from an India perspective, and what are the strengths of Germany on those areas, right? So I thought I'll narrow down on those areas where it is what India needs, and probably what it's to the strength of German technology companies. So as Doris mentioned and Stefan also mentioned, sustainability is a key priority. It is in fact obviously the theme of this conference as well. So you will see 1 in 3 new startups in Germany is on sustainability, right? Where obviously we will see similar action is expected in India. But there is already a long list of startups in Germany where you will see, like, if just to give an example, like if you want to calculate your carbon footprint, right? So there are apps available based on your lifestyle, based on how much you travel, what kind of consumption you do, and 72%, as per research, say that it is consumer behavior which is impacting the CO2 emissions. So if you look at this sustainability as a theme, there are very startups where some of them have raised some significant amount of money as well, where you can do how you can be carbon neutral, what steps you can take, and eventually also there are products where you can buy, somebody will do tree plantation on your behalf, you can invest in solar farms if you want. So these are some of the startups where they're focused on green energy. There are startups where somebody, if you want your house to be having green electricity, right? So there are plug and play solutions, how quickly they can connect and ensure that the house gets green energy. Peer-to-peer retail trading of green energy and carbon footprints. I think there are some serious milestones where Germany and the startups, specifically in Berlin, have progressed well. So that would be one area where I feel maybe the companies in India can look at Germany on at least partnering on these areas and leverage that. Because today we celebrate that so many people are using digital apps in the country. People are so many amount of UPI transactions happening. We have significant amount of demat accounts getting opened, but time is not far where every one of those wants to know how they are doing their bit for the environment and how proactively they want to monitor that. So I see there Germany clearly can add a lot of value. A couple of other areas where if you draw commonalities between the two countries, the SME or MME companies that we call it in India, Germany we call them as Mittelstand companies. These are the important fabric of both the economies and for the future progress of both the economies. Right. So and generally these sectors have issues in other panels also you would have heard in terms of access to finance and how data-driven lending has to really take off. Right. So if you look at a high-end embedded finance play in these kind of segments, right, where you shape up these companies into better technology, they have better systems, their whole entire accounting and software systems can be connected with an embedded finance proposition where these companies not only they themselves get access to finance, but also their suppliers, their dealers, and not in a classical way which banks do, right? In a way where it is more data driven and based on past facts. Some data will be from government. And here again there are commonalities like the OCEN network that India has working on. Account aggregator framework is there. Germany has also certain initiatives on these regards. So these areas also I feel on the, I think I lost connectivity. Sorry. Am I audible? No.
No.
Not working. It's not working.
Am I audible to you?
No.
No.
Yeah, I think now it's
I think it's back.
Yeah. So on these, German middle-stand companies as well as Indian SMEs, I think a lot of play can be there, and sky is the limit on initiatives on these areas. Also, there's a lot of focus in Germany on women entrepreneurship, which is also a common focus for India, and there's a dedicated focus from German ministry also on promoting more women entrepreneurs. If you look at which Doris briefly mentioned, on areas where the regulator in Germany has been, at least experimenting on digital assets, which was talked about, which India is still, the situation is evolving in India. If you look at crowdfunding platforms, again in Germany, there are certain evolving regulations on these areas, right? So, and even on application of blockchain, Berlin has, over the last 3 to 5 years, become a hotbed of startup innovation in Germany, in terms of a lot of startups which are blockchain based, and this can be leveraged across multiple applications. So these are at least the 3-4 clear areas where India needs to obviously go on, and Germany has significant strengths of startups in these areas.
Great. I totally agree with you. I think a lot has been done on payments and lending side, but the areas which you have mentioned about the sustainability are extremely important, and I think some work is happening on the RegTech or AgriTech who are probably contributing to the sustainability. Having said that, Barbara, I'll come to you, and I'd like to understand that how the Indian fintechs can really learn, because India is a vast country. Our rural India, which you call Bharat, is yet to enjoy the benefits. Although the density, mobile density is very high, the internet density is very high, but this kind of innovations, I think, need a lot of push. How exactly this can be leveraged? Your inputs, please.
Yeah, thank you very much. I think one thing that I can only agree with you on is that basically for all these global challenges, global answers are needed. So when it comes to sustainability, when it comes to digitalization, as Doris mentioned before, it does not stop at a border, and it does also not stop because a country is maybe of a different societal structure than another. However, I do see that particularly in the terms of sustainability, Germany has put this as a high priority on the agenda of the G7 presidency at the moment. And moreover, we are focusing this work in international standard boards like the ISSB. Basically, I think this is the way that we need. We need global standards. We need open data globally. We need the access to that in order that both in Germany, in India, and worldwide, we can benefit from the innovation that is done in India, that is done in Germany, that is also done in Europe as a whole and in the world. I think one thing that we cannot forget is we are speaking of Germany now, but Germany is highly embedded in the European Union, particularly when it comes to the financial market. We have a large harmonization when it comes to regulation of banks, of fintechs, of now with Mika also of crypto custodies. So basically, this is, I think, a strong asset of Germany within this European market to have an access point, for fintechs from abroad to see Berlin, to see Frankfurt as their home base. And I do think that this harmonization of standards, of data access, of APIs, I think this is something that we also need in order to benefit from both developments in South Asia, in Germany, in wherever. So I think this is an important point to foster this global cooperation more in the boards that are existing, in new ones. But I think this is one aspect where we can work together. And regarding what Germany can learn from India, I think we heard a lot of what the mutual benefits can be. And like, for example, the UPI, as mentioned, your digitalization, I was following a session earlier regarding mobile business connections and payments. I think these are things where we tend to be a very cash-intensive country. Mobile payments are only now starting off. We are taking it a bit slower with these digital developments.
Barbara, you being from the finance ministry of Germany, our audience would be very eager to understand what are those ecosystem opportunity to set up the new entities, or what is the funding position for the startup capital, and what kind of sustainability support that can be available, if some thoughts can be given on that.
Yes, absolutely. So, as mentioned, our new government, which has been in place since last September, has put the fintech and the digital finance industry as top of their agenda. That means there are certain legal initiatives ongoing which foster the framework around it. This means attracting capital, making it easier for foreigners to work in Germany, making it easier to actually compete on a global level with other digital companies. So this is one aspect that is fostered now across the whole government. The second thing is actually the access to capital. So we have set up initiatives like the so-called European Tech Champions Initiative, European initiative actually to foster the scale-ups in Germany and the ones that come to Germany. We have quite solid funding for the startups, but the scaling up, so importantly for a relatively small market in Germany to be able to scale across Europe, to be able to scale across the borders. That is something that is taken in diverse initiatives that actually regard the funding. When it comes to the funding, these initiatives that are set up now foster a dual approach. So basically, there is put public money in the system. However, it's always at the same speed with capital that comes from private investors. And I think this is a very important issue. The government, we cannot finance, we also don't see it as our task to finance the economy with subsidies. But however, we set the frame, and with these capital initiatives, we foster private capital as well.
Great. Thank you. Rajesh, I would like to make a reference to a wonderful document I have come across, which was released during a banking conference called the Poster Child. AI, OpenStack and blockchain will make banking a poster child of resurgent India. I would really like to hear from you that how the fintech world can really associate with the banking industry and can make a difference, and how we can invite some of those fintechs from Germany who can meet the expectations here.
Yeah, so initially there was a lot of talk of banking getting disintermediated by startups or by fintechs and all. Over the years, people have realized that both will obviously coexist with each other, with drawing their own strengths, right? So, and partnering is the only way forward, right? So, on a couple of these initiatives, on banks are obviously migrating the architecture so that the systems are more future-proof. And startups are, at least in terms of the technology they bring to table, is completely new. Everything is on cloud. UI, UX is all state of art. But at the same time, banks have trusted relationships. The customers are there. It's gone again. It's gone. I think, it's back now. Yeah, so the trust built over the corporate customers or retail customers over the years, right? So I think it's important for both to work together. And most of the banks are looking at partnering with fintechs on the top use cases. The most important use cases are showcased to various fintechs, and I'm sure that most of the banks are doing that and trying to experiment in a sandbox environment on certain use cases, and later on onboarding this fintech so that for the client it's a seamless solution offered by the bank. And there again, more on robotics, AI, the entire. If you look at the front end of the bank, but back in terms of front to back automation, operation automation, a lot of fintechs are providing solutions on those areas, and banks are leveraging on these kind of technologies to become more efficient. And I think it's a more open environment. Banks are very clear what they will build and where they will partner. I think so, and both can coexist and grow.
Fine. So, Barbara, how is the environment in Germany with regard to this collaboration between the banking industry and the fintech world?
I do think it's quite similar. However, I think generally it's not only fintechs or what someone classically understands as fintechs and the traditional incumbent banks that are in the payments, in the insurance ecosystem, but it's more and more classic tech platforms that are more and more also taking the customer-facing roles that previously banks occupied, and this is a development that is also becoming more and more in Germany with, I don't know, paying with the Apple Pay, paying with the WhatsApp Pay. These are things that are slowly also bringing new, or not new, but new actors in the financial ecosystem that are more than the classic fintechs and the banks. So I think this cooperation between the classical fintech that has a new payment solution or that is a payment acquirer, this has been quite of like came together, so to say, and now there is even new actors where a new balance needs to be found.
So, Barbara, a lot of thrust on the crypto assets management, and I understand that the Germany is one country who is licensing the digital banks also. So, can you throw some light on the licensing of digital banks and how is it? How do they really complement and support the banking system?
Yes, so basically there is the license for a full bank, so to say, which is just a general basic banking license. That is one option. However, we also do have cases of so-called white labeling, meaning that a fintech is white labeling the bank license, the full bank license, and also with this the ways of how I'm liable from another existing bank. And we do have banks that are actually fully having this white labeling model as their business model. It comes with their own risks, I would say, definitely. So I am a bit hesitant, but it is an option at the moment. Yeah.
So Rajesh, your thoughts on digital banks in India?
So here, obviously, again, this is an important topic whether there should be an independent digital bank license, right? I think there are various deliberations going on. As of now, what all you see, obviously, back end there is a licensed bank, front end there is a high quality app, but technically using the license at the back end of some bank, right? Which is the model which we work on. Whereas where you see N26 or Solaris Bank have been very successfully working in Germany. So this area also, and also it comes under a discussion that most of the banks thinks that you should have a full play digital bank license as a separate category in the country. With obviously certain, you can test them in a restricted environment before allowing them all the activities. But then again, there are various topics where whether the regulator would be this contradicts the branch licensing policy. So how that would form, right? Because then if every bank has a digital arm, the branch licensing policy needs to be looked at it. So I think these are important topics, but we can at least have experiments on those areas where, like, we had launched payment banks earlier, right? Then most of them got converted into small finance bank. So that I think we should leverage this, the experiment in Germany, and try and look at a separate category of digital bank licenses in the country. There's a strong need for that.
Thank you. Barbara, I'm always concerned as a banker that whatever innovations happen, the digital literacy is the base for expanding the usage. So anything different that Germany is doing on the digital literacy, which could be adopted by the India?
Well, I do think that, first of all, completely agree. Digital and financial literacy, I think both of that highly needs to be highly prioritized. I think we had some very interesting initiatives on financial and digital literacy coming from the private sector. We did have some fintechs that were very successful in, for example, enabling investing for younger people, for people that invest maybe $100 and not 1,000 or more. So bringing financial education, like these trials, to the customer, to the younger people, on an app, in a platform. These, I think, are solutions. We have that, for example, Trade Republic and Scalable Capital, that I think are highly necessary to actually foster this investment and digital and financial literacy.
Thank you. I think we are left with just 2 minutes, so I'll request Rajesh and Barbara, one minute, what other inputs you would like to give to the audience to foster this relationship?
So I would say a lot of things where even Germany can leverage India. I think in terms of this talk about UPI going international, and obviously NPC International wants to take even to Germany and to broader Europe. I think that is one immediate area of cooperation which can be immediately worked upon. Then, in terms of like we have ONDC, which is set up in the country right now, and the whole idea is to democratize access to e-commerce. A similar initiative across broader Europe obviously will bring a lot of benefits to the small and medium companies where they can have access to e-commerce, and so that these are the areas where I feel maybe, and of course the other areas on building a real-time payment platform, digital identity. Those are obviously well spoken, the initiatives in payments and all, but these two similar ONDC kind of initiative.
Correct.
And taking UPI across Europe, I think these would be the areas where Germany can leverage.
Great. So Barbara, this open network digital commerce is going to be game changer in the country where the platforms will get integrated. Last thought from you for fostering this fintech innovations.
Yeah, thank you very much. I'm looking forward to discussing more on the just proposed topics of collaboration. I think what I want to say last is we learned our lesson. So I think we are known as a very bureaucratic country, maybe not the easiest to communicate in English. So this is what we take on. So what we took on, we want to enable also outside of Europe players to scale within Germany in the European market. We will make it easier to get the licenses, also using the English language. All these kind of aspects we have learned our lesson, so to say. And regarding, now the time is over, I guess.
Kindly switch on. Hello.
Time is up. Yeah, it's on.
I think that was the sign that time is up now. So definitely that. And as said before, I think that's the last point to end up with. Given these global challenges, we do need global cooperation.
Thank you. So I think we are given some time for the question answer from the audience. If any question is there from the audience, to either hello, I'm audible? Yeah. So if there is any question to Barbara or Rajesh, I welcome the questions, please. Well, thank you so much. Anybody wants it? Oh, please. I'm sorry.
Hi, good afternoon. Am I audible?
Yeah, you're audible.
Thank you. So first of all, thank you so much for your insights. One small question would be, how does Europe look at the recent developments that have been happening in India? And what is the sort of general consensus across the European market as to what the Indians are doing with fintech?
Barbara.
I think we look with respect regarding how deep the tech focus is in the Indian society. I think this is the one thing that we are looking. I think to frame the bigger picture, we are also looking with our lens of data concerns that we most always look at things with. So this is an aspect that I have to say at this point. This is something that we in any case we have a look at, which is also, and I think maybe lastly how we also see is flexibility. So with the given ideas, you make something out of this and you put them into practice and you make it work. We are often looking at what would be obstacles that it doesn't work, whereas I have the impression also from some talks here that it's very much the spirit of, yeah, we will make it work because we believe in it.
Thank you. Thank you. Any more question, please? Well, I think a lot of inputs have been really received. So my sincere thanks to Doris having joined from Germany. Sincere thanks to Stephen joining from Delhi and inviting the Indian FinTech to the Chamber of Commerce, Indo-German Chamber of Commerce. Thanks, Barbara, flying all the way from Berlin to Mumbai for this conference. Thanks. Rajesh, thank you so much.
Thank you.
With
Thank
this, thank you so much, guys. Thank you.
Thanks a lot.
Just checking. Check. All right, thank you very much for that discussion. We will be starting with the next discussion immediately. Before that, once again, for everybody who's joined us now, welcome to the Global Fintech Fest 2022. I'm your host, Chaitanya Rathi. We'd like to thank our partners, our theme partner, WhatsApp, co-powered by Amazon Pay, spend management partner, Encash, in association with Perfios, payments partner, Cash Free Payments, and CEO's dinner partner, HSBC, our co-agenda partners, Lyra and Paypoint, session partners, Feedzai, Bureau.id, and Rico, our gold partners, Jokata, Pay10, Innovity, and Beams VC.
Check this.
Check, 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 check. 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 Yeah. All right, welcome back everyone. Good afternoon. We start with the next session, which is DBUs, customizing financial products to facilitate underbanked India's access to financial services. We have our panel on the stage. This is being moderated by Mr. Madhusudanan R, co-founder M2P Fintech. And in the panel, on the panel, we have Mr. Kunal Pandey, partner advisory services KPMG, Ms. Priyanka Jain, public policy, payments and financial inclusion WhatsApp, and Mr. Vinay Bagri, CEO of NEO. Over to you, sir.
Okay, I know this is a
post-lunch session, so we'll try and keep it as entertaining as possible. But the good news is that after the session, you can grab a coffee. So, and we are going to talk on a topic which is, I would say, it's at an intersection of being interesting as well as being sort of touching up a bunch of regulations. But I thought what would be useful is to kind of give set the context, and I'll probably let the co-panelist chime in and give their opening remarks. DBU is relatively new in a couple of ways. One, recently, about 3 or 4 months ago, RBI came out with this whole guidelines around DBU. What that allows us to do is to essentially have a framework in which you can run a digital bank business, right? So in the absence of an yes, the answer is always no, right? So therefore, when there weren't a regulatory sort of framework around it, people assumed that some of these things could not be done, and it was left for people to be deciding upon. At the same time, the other side of it is a lot of businesses, a lot of banks, financial services providers have always been trying to innovate on the edges in terms of trying to figure out how can we move up the, push the envelope around what kind of innovative products that you can bring in. Right? So everybody has been trying to do that, in their own silos. So the framework allows us to now have a clear mandate around what can be done and what cannot be done. Right? And I'm very excited to sort of have sort of heterogeneous mix of panelists. I think Priyanka is going to talk about how WhatsApp is going to be the new storefront, with respect to how financial services can be sort of availed. Vinay, coming from a world where he's actually spending a lot of time and grinding the midnight oil to get banks to work and to get to partner up and be that storefront from a distribution standpoint and manufacturing new products with the banks and so on and so forth. And I also have the the consultant view in the room, so that you can have a clear sort of balanced perspective in terms of what can be done and what cannot be done. May I request Priyanka to just give her opening remarks, and then we'll sort of take it up from there.
Thanks, Madhu. Hello, everyone, and good afternoon. As Madhu said, this is a panel which is going to talk about digital banking units and the way customization of products and services will be enabled to drive financial inclusion, a topic of great interest to me. At WhatsApp, you must be all wondering, right, what is WhatsApp doing on this panel, and how does it interest a messaging app to be a part of this panel? I can help set up some context. So WhatsApp started about 12 years ago as a messaging app, and today we see it's a platform that drives connectivity, connection, communication, and I think these have been far helpful tools to drive financial inclusion. To actually talk about our journey, WhatsApp does communicate peer-to-peer, which is with our friends and family. It does communicate with businesses, and that's where a large section of aviation, e-commerce, banking, insurance is actually using WhatsApp effectively to drive their products and services. Now, I bring the financial inclusion angle to it because the way I'm looking at WhatsApp evolve in this... Hello? I just lost connection. Hello? Okay. The way I see WhatsApp... Am I audible? Okay. The way I see WhatsApp evolve in this space is bring its simple, intuitive features to drive financial literacy. I'm sorry, guys. I think it's best to communicate on WhatsApp. Okay, I'm going to start and make my point once again. I can't hear myself, so.
Yeah, now it's coming up. Yeah.
Okay.
Can you hear me?
Yes, I can. Okay. So I was saying that WhatsApp will be able to use its simple, intuitive UI UX to drive financial literacy using voice, video, audio. That's how we see as an enabler, a catalyst, or an ally to the country. And if I go back to 2019, what Nandan said, build innovative solutions for public good using digital as a medium. And I think we take inspiration from that and the RBI strategy on financial inclusion, which actually talks about creating access, awareness, affordability for all segments. And it gives us, every morning we wake up with this belief that WhatsApp would be the tool that can help connect all segments in India with a digital interface where banks, insurance companies, or financial institutions can actually drive their services to the last mile, which is underpenetrated and which needs not just a banking way of a branch mode of communication, but a digital way which is enabled by voice, audio, and video. I'll stop at that. Thank you.
Thanks, Priyanka. Vinay, if you can just give your opening remarks and.
Yeah, thanks. About Neo, we basically create mobile banking solutions for different kind of sectors, including the underbanked, and work with partner banks to take the solutions to the customers. And we hope DBU, although it's not so much clear right now, but as it evolves, it should be helping players like us create nice digital banking solutions for the underbanked. So that's about us. Yeah, Madhu, thanks.
Kunal, your opening comments?
Thanks. And first of all, good afternoon, everyone. So I think as the other two panelists said, digital banking, it's really an important initiative because, see, in one way, lots of things are happening in India, and I'll delve upon it in some of my subsequent points. But there is a need to make sure that we are able to integrate things together and provide a very high quality service to the customers. And that's where, organizations like Neo and others who have come in are making a difference. But it needs a, I would say, cohesive approach where 1 + 1 is 11 and we don't get into situations where it is suboptimal. So I think that's where the things have to move. And I do see lots of things happening, although certain in always when it is a technology-led innovative game, there are lots of trial and errors which happen, and then you would say the final good emerges. So I'm sure we'll go through that journey and achieve that, and probably like some of the other digital products, be the leading light across the world.
Fantastic. Yeah, that sets the stage, and I'll be failing if I don't start with the fintech in the group. So, Vinay, if I can come to you first, in the context of how DBU is evolving, and you've been working with banks for many years now. I think 5, 6, 7+ years. How have you seen this relationship evolve, right? In terms of how they look at you to partner and grow. Do you really see that difference? Is there more hunger to partner now vis-a-vis what you saw, when you started up, right? So that would be an interesting context for people to understand.
Yeah, Madhu, can you hear me?
Yeah.
Okay, I think I lost you for a large part, but maybe you were trying to ask that how the relationship with the bank has evolved.
That's right.
Yeah, so in terms of, when we started off, the relationship between bank and a fintech was always of suspicion, where you would see that maybe one or the other would take into your market share and maybe do better, while they may still it may still end up being true. But right now it is very symbiotic relationship where every bank understands what are their area of gaps, what are their area of expertise, what they can and cannot do, and for the pieces where they cannot do it themselves, they want to partner with fintechs. And thanks to players like us and many others, a lot of banks have seen significant improvement in their core KPIs.
Awesome.
In partnering with fintechs. And hence the openness to system integrations, APIs, creation of APIs, all the hard work that banks have to do has significantly improved from where we were 5, 6 years, and you are of course aware of that. 6 years ago, if you would ask somebody to open their core banking, maybe they would throw us out of the building, but no longer that's the case.
Yeah, amazing. Yeah. Priyanka, if I can come to you, I want to start with a little anecdote. A few weeks ago, I was in Delhi. Normally, whenever I go to a city for a day trip, I just take Uber for the first location, and then I tell the driver to hang around and pay him for whatever. The last time when I did that, I asked for the driver's number. He said, WhatsApp call do, take the QR out. I will, just scan my QR. He refused to actually share his number, and he said, just do it on WhatsApp, right? Given that you have like what 400 million DAUs and the kind of engagement that WhatsApp does, I don't think there's any other platform that comes anywhere close to it. How are you seeing this whole, leveraging on the, engagement layer be, utilized by, financial providers for distributing their products? Can WhatsApp truly become that storefront from a financial services distribution standpoint?
So, so we've seen. I'm sorry. Whenever I start speaking, the mic.
No, it's
okay. Is
audible,
it
yeah.
okay? So we've seen some very positive traction on the WhatsApp API, and we continue to be an ally for the banking and the insurance ecosystem, wherein we see some of these product journeys are live. And if you see the exhibition space that WhatsApp has, put up its booth on, some of these journeys are live and active. Whether it's a FASTag recharge, which is a need of the hour for us to travel and pay toll services, or it is staying safe on WhatsApp with NPCI UPI Shield, how to make digital payments. Hello. Digital payments safely. So these journeys are live. We believe that the interface is so simple, intuitive, and secure because of its encryption that financial service players will find comfort, and the consumer will find, will actually leverage their existing habit of using WhatsApp in 11 languages across feature phones and smartphones to engage. Now, as you rightly said, 400 million plus daily active users are on the WhatsApp platform, and this is the opportunity that we thought we could leverage to drive financial literacy, to actually build context on how simple it could be to bank on a interface which is chat enabled. Also, I think technology has seen its its transition right from website to mobile apps, and now we see that there's a lot of fatigue about having multiple mobile apps. So we believe this could be a solution wherein they come to a common mobile app and they can actually find every service they need on a common platform. So I do feel it's here to ease the journeys for not just the consumer and the financial services, for the ecosystem overall. And yeah, that's
fantastic. So Kunal, given this whole, to Vinay's point earlier, that this is relatively new from a regulatory landscape standpoint. How are you seeing this evolving, right? When you talk to bankers, when there is, let's say a strategy that is being sort of drawn out for a bank, what part of this is serious business, right? So because ultimately for a bank, there has got to be ROI. There has got to be things like what are the 3 big things that the bank can do over the next few years. So does DBU feature in that? Or is it too early for us to sort of take those? Would love to get some color on it.
Sure. So today when we ask question or when we discuss with and I personally discuss with bankers as well as non-banks, I think the question is really not whether it is important. I think that's a very clear writing on the world that or on the wall that I'm getting my own echo. So writing is very clear on the wall that it's important. I think I'll probably take a step back and just share my thoughts on how things are happening the way I see. So in India, payments is where a lot of innovation started, and then seeing the innovation, in fact, the act came, and then there are certain developments which happened, and we had UPI kind of mechanisms coming in. And then the RBI also caught up, and we had regulations which were payment specific, like payment aggregator. In the parallel, again, similarly, another need of lending, getting the credit to the last mile in a manner which is convenient, cost effective, etc. As a need came in, and that's where mechanisms around that came. One would be account aggregator. And the same kind of if we could say wave is happening on the banking, which is where there are other elements which come in. So whether you look at the liability side of it or other transaction banking kind of capabilities, there things are evolving. So of course fintechs are driving and they are showing the possible, because we can think a lot of things, but there has to be something which makes that art possible. And 2 of my panelists here have been doing that to make some of those possible. Now we need to think also what more we can do as an art, right? And and that's where I think a lot of participants, including regulator, looks at. So we do see that's happening. What I also feel is that while we have lots of regulations which are there, we need to have a commonality of regulations. So what I could say, interoperability of regulation. Right, we talk about interoperability of a payment message or a business transaction, but I think there needs to be an interoperability of a regulation where all the regulations are aligned, and there is, I think, in some sense, discussions and developments are happening on that side. There are changes which happen. A lot of us, do talk to the various people in power to drive that thought process and to try and build that commonality, interoperability, etc. And I think that is something which is going to happen, so that we have one, as I said, cohesive unit. Regulations in my mind, one, they need to be taking care of the end customers, of course, but also make sure that the end customer first gets the service at a very efficient manner. At the same time, builds the enabling mechanism where businesses can build the possible and take the art to the end consumer, because that's where the benefit is. So I think in nutshell, there are developments which have happened in DBU side. I think it's more about players like fintechs, etc., who are building new things, and now RBI is also looking at it. I believe we should move towards bringing in interoperability so that we don't get into inefficiency or hurdles because of regulations. Right? I think that's what I would like to say.
Priyanka, if I can come back to you, in terms of, normally internet business is the way it is built is, you first acquire customers, then you drive engagement, and eventually you kind of try to monetize. And WhatsApp has kind of solved for the acquire and engagement to a large extent. But when it comes to monetization, India is such a price-sensitive market that if there is somebody who is going to take away a small share, people are already sort of planning, how do I take that person out of the equation, right? Given this and such a a vantage point in which WhatsApp is sort of actually placed, how do you sort of handle this dichotomy, right? In terms of I will be that storefront, but I don't want to get straight into whether you all want to monetize or not, but the sheer fact that does your partners look at you as co-opting and then competing as well, right? So that's a piece that is a bit of a puzzle. If there are examples of that, would be sort of super useful to understand.
Actually, I might sound very spiritual if I say to each their own, but actually, if you see the way the platform is, it plays the role of a catalyst. The technology, the platform, the feature, the tool that consumers as well as businesses use. We do not intend to get into any of the businesses ourselves, whether it's insurance, banking, underwriting, and we continue to be the digital platform that can be leveraged to connect with consumers from all segments. And I think this is what the vision and the strategy is, for the next few years, at least that I can talk about. So monetization is the business's prerogative on how they want to use the platform to build a monetization strategy for their own respective business. Whether WhatsApp will partner, no, we won't, because as we all know, WhatsApp continues to be encrypted. We do not bring data to the table. WhatsApp is a private messaging app. So messaging privately, even for businesses and the consumer, is a core philosophy. So even when you talk to your own respective bank, it's between the consumer and the bank. And it is not for WhatsApp to hear, see, or comprehend on how this data can be leveraged. So monetization by WhatsApp is not a strategy when it comes to co-monetization. However, as you see, business messaging is the way that WhatsApp is evolving and growing in the commercial aspects.
Fantastic. In fact, the billion-dollar question have always remained, or the $20 billion questions have always remained, when will WhatsApp going to make money? But that's for an offline conversation with you. So Vinay, if I can pick your brain on, you just made a comment in your opening remarks about it's still early days from a DBU standpoint. And the way the framework and the regulations have been laid out is more around having a physical infrastructure, which could mean that you can walk into it like a kiosk and get all of the financial services access that one may want. But the reality is very different, right? In terms of a lot of people need assisted sort of capabilities, right? They don't know how to navigate a screen, and in some of your products you have seen that. So, what is that bridge, right? How are you seeing the application of the DBU guidelines itself to be a fuel for building out the next wave of products? You've had experience where you started with a bank account, but you offered other financial products as well. How have you seen that adoption? Is that upsell and the whole story around making money down the road? Is that light at the end of the tunnel visible? In your own experience, would love that color.
Yeah, so let me take the simpler one first. That of course, as you build other products, if the experience is good, the cross sell we are seeing in our portfolio, everybody else will be seeing in their portfolio. So that is fairly a simpler thing, I would say, to put. Now the more complex question which you put forward, Madhu, was regarding DBU and how do we really see it playing out, and what would we as fintech be looking to do. So one is, as you mentioned, DBU largely today looks like a physical infrastructure which we'll have to put in. And the cost of putting in infrastructure, ATM machine is so costly. You can imagine a kiosk where a person can come and do the entire banking, how costly it is going to be. And to really put something like this in a tier 2, tier 3 town would need monster investment, which I don't think is coming.
Yeah.
So eventually the way I see it is that DBU will evolve into a more partner-led digital rather than a physical play. Right. And that's where WhatsApp and everybody who has got customers on a UI UX which they understand and they feel easy to operate without, like you don't need a assistant to help you with WhatsApp. Right. Banking should be like that and will be like that. It's only a matter of time. And DBUs, while right now looks like very physical, will have to get digital. And eventually, Madhu, honestly, if you really want to do financial inclusion big time, then along with DBUs, which forces fintechs like us to work with banks, digital banking licenses have to come today or tomorrow. That's my thought.
Yeah, sure, please.
So, Vinay, just to take cue from you and just wanted to add, in fact, the way we imagine a digital banking unit, and I'm not talking just from a WhatsApp standpoint, but a digital interface which can actually solve for multiple friction points for a consumer. The first could be, reaching to your bank and understanding why I need a banking service or maybe an insurance product or a pensions for a dignified retirement. So that starts with financial literacy and awareness. The second part is, how do I do contextual banking, which is more customized and bespoke to my needs. The way I enter a physical branch and bank, can I do that on WhatsApp or any such interface? That would be, so how do we move a physical infrastructure to a digital, communication interface? And the third is, replace the entire printing mechanism, whether it is of passbook printing or, any other requirement, to a PDF generation, and that is sent digitally. So I think these will not just support DBUs, but actually in align with the RBI discussion paper on climate change and sustainable digital banking. So I just see this evolve as a long-term solution in multiple ways, which is scalable, sustainable, contextual to the consumer, and it is something that is intuitive, as Vinay said.
Yep. Fantastic. In fact, the segue that we are actually going into is that it will become digital, so to keep the cost low, and which kind of takes me to the next question to Kunal, where often we have seen inclusion to be almost like a service, right? The fee income lines are very thin. You don't really have a lot of opportunity to make money as a bank or any financial service provider for that matter. And therefore, you always sort of gravitate towards, if you're given targets, how do we meaningfully sort of achieve that target in the most cost efficient sort of way, right? So we don't see, as practitioners of the industry, Vinay or myself don't see that, capex coming into and building out, maybe thousands of, if not millions of, retail touch points where customers can go use this, right? So therefore, how are you seeing this, Kunal, in terms of, where is that balance in terms of how much money that you can do, you can deploy vis-a-vis the ROI that DBUs, sort of promises, right? I don't know if there is a business case around it, but your thoughts on that would be sort of super useful.
Sure. So, in my mind, I think, any new initiative, it takes time to build. Now, even if you look at fintech space purely as a business, we see a lot of people who understand the value which it can create, and therefore they invest, right? And we see fintechs, we are having unicorns, and now we have other terms, I think Deca unicorn and etc., because that's the kind of valuation they are getting, right? Why that's happening? Because there is a clear view which people who are seeing that business understand that there is a value which is which this is creating. Now, when I look at some of the requirements where we talk about services being offered, where let's say a regulator or a government comes in and puts in a you could say a intervention to change the economics, right? And now that economics is getting changed because there is a larger good which those people are looking at in terms of what it can deliver to the the country, and thereby bringing the economics into it. So I think there has to be a balance around it. The new discussion paper which RBI has floated on MDR, we do see those discussions coming up. There has to be somewhere a case of investment which has to be built, wherein all the participants are able to flourish, and the development of the entire setup is enabled there, so that the ultimate aim we can fulfill, and the idea is, can we fulfill in a really fast paced manner? Now that's where I would say, look, for example, UPI. Now there were interventions, there have been push which is coming in, which one would say is not really pure economics, right? There are other agendas, but one of the outcome is that it has really flourished, and it has gone to a scale where it has driven a lot of changes. So I think the main question is that how do we balance this? Do not kind of make changes which will kill certain developments. And again, I do see certain developments happening on that side. Even, for example, if you go away from payments, if you look at purely from a data protection bill, the bill was taken back to look at how one can be balanced. And I think that's something which is quite important, and one needs to align to that unit economics principle, but both from a business as well as the development agenda. And I do believe there is a way out there, because there are examples which are giving interest to all players, and that's how one has to move forward. Now there are new things which are coming in, like 5G, which will again give us a lot of opportunities to innovate. So the question would be, how do we really take benefit out of it without stifling? So I think what the earlier panelists was saying, that yes, it will evolve, right? And physical has its own cost, and digital in that sense is less costly. So it will gravitate towards that. But then beyond cost, how do we build in the right kind of mechanics, like stopping misuse? Because it's a saying, right, that one foul egg can spoil the entire market. So how do we contain that, control that? And we do see sometimes SRO, self-regulatory organizations, coming in within these units, so that there is a kind of effort to make sure that nobody misuses. And I think that's also something which is one needs to look at. So economics from both the business side as well as the social side to be balanced, but also bringing in some of these elements, like to protect from misuse for the benefit of all, in that sense.
Fantastic points there. In fact, it's not always about the money, but the providers of UPI will not agree with me. They're going to be upset that I made this comment. But Prinka, if I just can come back to you in terms of when you talk about inclusion, and when you talk about addressing segments that have been underserved, there are always aspects around how do you build out awareness, or how do you actually overcome barriers to adoption itself, right? So what are some of the things that WhatsApp is trying to do? So India is a very interesting market, because every 100 kilometers your culture changes, language, the food, everything actually is, we are an aggregation of countries in that context. So how is WhatsApp addressing this whole how do I dumb it down so that product adoption can sort of go in a big way?
Sure. So, Madhu, what we saw as WhatsApp was a lot of this was happening organically on WhatsApp. So, even before we actually set up policies and procedures on how we could do this, more methodically. If you saw Bobby's video this morning at the opening keynote as well, these women in rural areas were actually using WhatsApp for supply chain management. They were actually organizing an unorganized sector over WhatsApp. And it was a discovery. It's beautiful how our country used the app to their own advantage. And I think the features that WhatsApp had, whether it was voice, which actually broke the barriers of literacy, right? Nobody, anybody who does not know how to read and write can send a voice message. Video, it's so much easier to send a financial literacy video and get everybody to understand what an insurance product is or what a banking service is. And then, of course, audio. All of these features have helped tremendously. And a lot of this has spread organically. And we are just now trying to see how we can further facilitate this to more, build more use cases. Lastly, I think 11 languages that WhatsApp is available in India. I think maybe that's also a reason why a lot of Indians do feel connection and coordination on WhatsApp is easy. So, yeah. So breaking the barriers of literacy by, I would say, voice, video, audio, and icons, because we all communicate with icons, right?
Yep.
And I think that's also a simple but very effective tool of communication.
Fantastic. So Vinay, do you think DBOs will evolve into being product first or distribution first? Right? You have manufactured products with banks where it suited your need. Given the context around DBOs, do you see them evolving to be focus more around distribution or focus more around the product itself?
So if the DBU continue to be manifested in a physical form, they'll not solve either purpose. I don't think there'll be any great product innovation or distribution innovation with these massive kiosks. But if it turns digital, then there'll be both. It'll definitely solve the distribution, because digital is all about rapid distribution in underbanked areas. And of course, as the distribution happens, you will have products which you can afford as a provider to give it without losing money, because eventually nobody will lose money, and you would want to only do business where you end of the day have some line of sight to monetization. So it has to be, DBU has to be really digital. It cannot have any physical leg if it has to be successful.
Amazing. Yeah, I think that's a big takeaway. So Kunal, just to wrap this, so if I have to crystal gaze and sort of look at it 5-7 years from now, where do you see this evolving, right? Is there one or two things that we could do today to really sort of make that impact 10x, right? I'm sure, this is like as cliched as it can get, but I'm sure as you sort of present to banks or have these conversations with financial service providers, there are things that are obvious, but businesses don't take those decisions to sort of move fast, right? And then you realize that the ship has sailed. So anything that you could sort of add?
It's a I would say very profound in terms of that question. Let me attempt to share my thoughts and my personal thoughts on this. I think and I was actually part of a group within World Economic Forum where we are writing about interoperability, and this one on payments, but it can equally be applied in other areas. So what I feel is the transparency aspects, convenience aspects, and interoperability aspects. I think these things need to be looked at. We talk about we have achieved interoperability, but imagine an email and any other product. When if I have to send an email to you, I just need the ID. Nothing else is needed, right? And the mail will reach you. Now we need to somewhere reach in that strata. For doing that, what WhatsApp has done, for example, in multiple language. How can we increase that? And keeping the ultimate view in the mind that banking and payments is not the primary need. It's always the secondary need. The primary need is a product or a service which the customer is looking for. And can I make that experience completely seamless? And we are seeing, that's happening. But in my mind, I think with the way of the ecosystem, the way it is evolving through interoperability, which is now coming in from various dimensions, like, you have ONDC coming in, you have OSINT coming in. There are similar things happening in health, and the digital is powering it, right? There are some platform layers which are coming together. There are certain, you would say, innovative layers in terms of constructing various services which are coming together, and there are some delivery layers which are coming together. I believe a more interoperable and simple to use, product for customers, and also simple to deliver product for banks and others. That is where I think we are moving. Uh, as somebody who is personally enthusiastic about this area, I hope we reach there in 5 to 7 years. But I don't know. Maybe the other two panelists are much more in driving seat there. So I can hope and wish luck to them and to all of us, because if as we move towards that, it will be beneficial for all of us. Maybe not why not UPI or something like that, which can help me avail service across the world. Why do you have to worry about it when I'm going overseas, right? Anywhere in the world, technology can enable. I need regulatory interoperability. I need messaging interoperability, and I need the user's view of interoperability. I want to know, is the pricing okay? Because let's say there are 5 products out there when I'm going overseas, which one to choose? I should be able to know that there is a pricing interoperability in terms of transparency, right? Then I know whichever I'm choosing, I'm not going to get cheated. But if I do that, my experience is very seamless. I simply use and go ahead. So that's probably crystal gazing and maybe a bit of my personal, you could say, enthusiasm into it.
Yeah, I think we are. I think we have run out of time, but I think it was a fascinating sort of conversation. We had a good mix. I often say this. We work in. Personally, we work in about 20 odd markets across Asia, and everybody looks up to India, right? And DBU is not going to be no different. I keep saying that India is a fintech factory for the world. A lot of ideas that are getting built here, we'll be able to port it to other markets, and UPI is just one step in that direction, right? Yeah, thank you so much. I really enjoyed this conversation. Thank you.
Thanks, Madhu.
Thank you.
Thank you. Thank you, everyone.
Thank you very much to our panel and our moderator for doing that. Once again, welcome to the Global FinTech Fest 2022, the world's biggest FinTech Fest. All right, also maybe battery khatam ho gaya hai. Battery is the same one. Check. All right, we check. Our next session is on emerging technology, adapting India stack for Web 3.0. Nobody's wearing headphones. Nobody's wearing headphones. How will they listen to music? हाँ, तो वो तो बैठे हुए हैं। खड़े nobody listening. हाँ, क्योंकि वो Hi. I'm from Invest India. Okay. Check 1 2. All right. Hello, sound check. All right, we're about to begin. How long is this session? 40 minutes.
35 minutes, 40 minutes.
All right, welcome back, everybody. We start with our next session, which is a panel discussion on emerging technology, adapting India stack for Web 3.0. And I have with me Raghav Dhanukayar. He's going to be introducing the panel and the moderators to us.
Thanks a lot. Requesting everyone to kindly be seated, please. I'll be shortly requesting all the other panelists to come on stage, but I see that none of them are currently wearing the headphones. So just allow me a minute, please. They're still not wearing the headphones. Yep. Yep. But they're not wearing the headphones. We have with us with the headphones on. Yeah.
Check, check, check. Hey, hey.
Excuse me. Can we check this? Mr. Parashar, are we audible to you?
I can hear
think
you.
there's a problem with Mr. Parashar's headset.
Yeah, I
So
think
just
it's not
fixing
working.
that and then-
Can you hear me?
Yeah, I can
Okay.
hear you. You will need to turn on your mic. Can you hear me right now?
I hear you.
I'm just asking Reena ma'am. I think her headset is also probably not working. So we're just getting a couple of new headsets.
Check, 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 check.
Okay.
Yeah.
Check, check, check.
Can you hear me now? That's the exact theme of our discussion today. Emerging technologies reshaping the fundamentals of financial services. So welcome everyone to the report launch session on this theme. This is a report by PwC and Invest India, and we're glad to have on stage with us Mr. Aseem Parashar, who's the partner of financial services at PwC. We have Mr. Varun Sood, Vice President Invest India. We also have a very special guest tonight on this afternoon, traveling from the North Block, Delhi, Director, Department of Economic Affairs, Ministry of Finance, Shri Harsha Bhaumik. And we have Ms. Preena Dayal, who's the chairperson of QETCI. And I'll just, before starting off, provide you with a brief introduction to all the speakers, and then we'll begin with the session. Starting off with Mr. Aseem Parashar. Aseem's a partner with the Financial Services Advisory Practice at PwC India, with over almost 2.5 decades of experience in advising banking and financial services clients. He leads the digital strategy and implementation for financial services, and he's been advising some of the large corporates, both domestically as well as across some of the larger geographies. And he's led several engagements across global banks, NBFCs, insurance companies, and AMCs. So glad to have you on stage, Mr. Parashar. Mr. Varun Sood is Vice President at Invest India, the National Investment Promotion and Facilitation arm of the Government of India. He's been driving the Make in India initiative at Invest India. The organization is also looking at various other aspects of the government's initiatives, such as Startup India, the Prime Minister's Science and Technology Innovation Advisory Council. And Varun is responsible for devising and strategizing the Make in India initiative across various sectors, BFSI being one of the key sectors amongst those. And he has almost more than a 15 odd year of experience across managing business development, performance improvement, business finance, with a particular expertise in risk advisory and strategy implementation. I'm also a part of the same organization, by the way. Um we're also glad to have with us Ms. Reena Dayal, who's the chairperson and CEO for the Quantum Ecosystem and Technology Council of India, which is a Section 8 not-for-profit company with the mission of accelerating the quantum ecosystem in India. And she has almost close to 3 decades of experience in creating and deploying innovation frameworks across organizations and working with stakeholders in the emerging future tech areas. She's also associated with the storage networking domain in India earlier, and she's currently focused on the quantum tech ecosystem. And finally, the most special guest of the afternoon, we have Shri Harsha Bhaumik, who's a lateral entry into the civil services, and with almost close to 2.5 decades of experience from the industry. He's a leader on the payments, so he's been leading the payments practice with his past experience in management consulting across product strategy, digital transformation across payments, issuance, and on the acquisition front as well. And with stints across projects working with retail banking and various other financial services domain. Currently, he's the Director, Department of Economic Affairs. So thank you, everyone. I will now request Mr. Parashar to provide his opening remarks and key insights on the report.
Thank you, Raghav. Can we move to the presentation? So till the presentation comes up, we are having our own challenges of the technology, but we'll move ahead. So first of all, good afternoon, everyone. And I would like to thank GFF and Invest India for working on this critical aspect and to prepare a report for the emerging technologies. Now, I have seen the era of starting from 2 Mbps network to branch-based automation in financial services sector, and now we are talking about 5G and quantum computing, etc. And these are all theoretical, as I am a mechanical engineer and have studied on the quantum physics part of it. Now, when we talk about this, the financial services sector has been at the forefront of adoption of technology. Now, when we were preparing this report and when we were going in the market, there are so many technology that is being talked about, and you must be hearing about them in multiple forums. Whether it is related to intelligent process automation, cloud computing, analytics, advanced analytics, robotic process automation, and so many things were happening. So for us, it was very important to identify at least 3 of them. One, which is immediate, second, which is medium term, and the third one where we can take a punt, and which is the long term part of it. And we have tried to do this itself. So as we move along, there are 3 areas in the technology space that we want to talk about. The first one is on the blockchain. Okay, let's hope this works. Okay, fine. So first one is blockchain, and which has been there for quite some time, but use cases are where we are struggling. Now, there are use cases in the government to citizen services where there have been success. Hello? Okay, right. And the second one is on edge computing, and which has been in discussion for quite some time. IoT has come back, which is part of edge computing. Can we leverage that? And the third one is quantum computing, which is a new area, which is multidisciplinary. And there are a lot of forward-looking thoughts, but still the use cases, the technology maturity is something which is still to be arrived at. And India has just started on that journey. Most of the research and most of the work is going on in US and China. So that is something which we are looking at it. And when we are talking about the technology, we have found in the last 5 to 6 years that regulators and the ministry, they have been kind of still trying to catch up. So there is implications for them, and they need to kind of coordinate this whole initiatives which are happening in this sector. So we will just give you a briefing in this report, and once our esteemed panelists who are there, and they can provide their insights that how things are shaping up. Now, when we look at blockchain and we talk Web 3.0, now everyone tries to understand. So first level is there, but what is the difference between Web 3.0? Because we never had Web 2.0 coined earlier, or Web 1.0. It was just internet, and we were quite happy with that. So Web 3.0 is something, it differentiates itself because here you can read, write, and you can co-create. That's the differentiation which is happening. It is not being controlled by any central administration. It is being controlled by individuals who are onboarding on this part of it, and this is quite revolutionary in nature. So that is something which we are seeing. And when you look at this particular slide, there are two words which are important. One is permissioned and one is permissionless. Now currently whatever enhancements and which are being used very aggressively in the market is permissionless, which is the crypto and NFTs, etc. So anybody can join the bandwagon and create something, and anybody can buy, sell, and with the volatility that it kind of brings there. And the central bank digital currency is something which is permission. Somebody has to give you permission, and then only you can join on that part of it. So that is something which we are seeing. So that is one area. There have been use cases. In trade finance, the large 6 global banks had come together to build a platform to something which was going to compete against the SWIFT part of it. But that they joined it, but it never took off. So that was an experiment which has happened across the globe. We have seen a couple of other players joining in and trying to create a platform which can compete against the SWIFT network and make it more efficient and more secure. So that is something which we are seeing. So there are multiple use cases which are coming up, but adoption and the scale and the volume is something which we have still not seen, and it is open for experimentation and innovation. Now, when we look at medium term and long term, now edge computing has been there, and it's like that. I would say it was more in the manufacturing sector. So I'm not sure if any one of you have worked in manufacturing in chemical or fertilizer plants, etc. They used to have these local compute devices on PLC circuit based, where steam and high pressure steam and gases and everything used to flow, and that used to be computed back in the control room, and 2 people running a control room, and a plant is spread across 30 square kilometer, etc. So it was not that the technology was not there, it was slightly less compute intensive, but now that is being brought in with heavy compute, the infrastructure and the hardware is there, with 5G is going to be launched. So there is an immense opportunity out there, and it brings its own challenges, and there are also good theoretical use cases which has come up, but still we'll have to wait that how the adoption happens in the financial services. Now people are saying that you can use it for insurance companies, you can do the surveying, etc. If an accident happen in the high frequency trading, it has already been there, but can it be done at a more localized rather than co-location? We have heard certain cases happening in National Stock Exchange on the co-location of the server. Now can it happen on the device of the broker or the trader who is placing the trade? So those are some of the things which can come up, and there are huge amount of data that you capture at the interaction on the devices. Now can I use those data and take compute at that level itself and give certain which is beneficial either on the product customized to the customer or the interest rate for his lending products? Can we do that part of it? So that is something which we are seeing in edge computing, and we see this will be a medium term area, and we believe there is opportunity for innovation with the right kind of policy support and incentive that can definitely take off. The last one is quantum computing, and that is one area which is multidisciplinary. It is physics, it is computer engineering, it requires hardware manufacturing, and we are still not there. It is very nascent in our country, and that is something which is forward looking. And there are certain use cases for it, and some of the concerns which have come up is that currently in banking industry we use RSA token for security, and that is something which is done for transactions which are happening. The concept is that if the quantum computing takes over, then it can break that RSA token in hardly few minutes. Now imagine your internet banking, your mobile banking, security being broken in few minutes. What will happen to the economy? Now that is where the potential on the negative side. Now there are positive sides also of this compute because it's giving you a immense compute power, but the technology is still not matured enough. And I believe Reena ma'am will talk about that in more detail. Now, some of the challenges that we are seeing in the emerging technology. the tech infrastructure upgrade is required. Now, this is something we already have the infrastructure. We have done certain investment in on-premises, on cloud. You have your mobile set. You have your personal compute devices. It will require an upgrade on that part of it. So how this is going to happen, who is going to build the cost? So that is something which is there. And the second question comes for the customer. Everyone says the customer should own the data, but how much is the customer aware of the data which is going to be used? Does he know about it? He freely gives a photocopy, signed photocopy of his Aadhaar card to open an account or to buy something, etc. So he's more than happy to share it. So what is the perspective on this aspect of it? And there has to be certain focused initiative both from the industry, the regulator, as well as the government to take place. On the edge computing side of it, it's a concept-wise it's very good, but how do I install remotely these devices, this compute at the respective location? Tier 1 cities is fine, Tier 2, Tier 3, how am I going to do that part of it? Now, what will be the business model for that? That is still very unclear, and it will require increased bandwidth, but with 5G coming in place, we believe that this is a possibility that it will happen. And third is the security aspect of it. And the last is quantum computing. Now, you will be surprised in a country of close to 1.4 billion, the target government has set is 25,000 skilled resources in quantum computing in the next few years. Now, that is the kind of deficiency or lack of resources available in this area. And coming to the last part of it, where I said earlier that you require the regulators, policy makers to come together to make this succeed. And there are certain areas where we believe going forward, and this report also tries to capture. One is the data sharing guidelines, and there are a lot of talks happening, the privacy bill, the data protection bill, etc. So it's happening there. So that's one area, how it should be used, where it should be used, who owns it, how you secure it is important. The second is incentives, which have to come up. This particular area, these technologies are not going to evolve on its own. I will continue till the mic comes up. So it requires a lot of collaboration between the industry, the emerging tech hubs, and we are seeing that, like in Hyderabad, quite a few of you will be aware, there is a blockchain hub has been created in Hyderabad. So that is something which is coming up. There is a committee which has been, a strategy committee which has been set up in Ministry of Electronics and Information Technology on Web 3.0. So a lot of initiatives are being taken up. So that is something which has to be supported. The third one is cyber security, which is again a catch-up kind of an area. So we are talking about the technologies, but the increased cyber threats are also going to happen. So we need to plan accordingly for that. And the last I would like to talk about is safeguarding the consumer interest. That is one area where we talk a lot. We talk about customer centricity, but I don't think we care much about the customers, especially in the financial services sector. So that is one area which has to be taken care of. So with this, I would say thank you, and we will listen to our colleague panelists also on that. Thank you.
Thanks a lot, Mr. Parashar. I'll now request Mr. Varun Sood to please come on the podium and share his insights on the theme and also on some of the initiatives being taken up by the government to drive the growth of emerging technologies in the space. Over to you now.
Thank you, Raghav. Good afternoon, ladies and gentlemen. It's an absolute pleasure and delight to be here today. For those who are not familiar, Raghav did do an introduction about Invest India. We are the National Investment Promotion and Facilitation arm of Government of India. The key mandate that Invest India has to promote Make in India, bring in more FDI, have suitable policies to create a red carpet welcome for investors, both domestic and as well as foreign, and ensure that any investments get grounded at the earliest and any challenges that they have gets resolved as well. The only reason I wanted to give you a context is because we've been working with a lot of key stakeholders, right from your entrepreneurs to your big companies to foreign partners to domestic partners, in ensuring that the fintech ecosystem or the digital economy, as we call it, India becomes a major leader in the global arena itself. Most of us are aware it's going to be a $800 billion market by 2030. So there lies a huge opportunity where, as you can see, we can see a lot of startups which are there, and it's estimated they're close to 6,000 plus fintech startups which have registered, and it's growing tremendously as well. And that's where government has been supporting them through multiple initiatives. At Invest India itself, we have an initiative called the Startup India Initiative, where the idea is to promote the culture of startup through not just tier 1, tier 2 cities, but at the metros and heart of the country as well. We've been working very closely with a lot of our stakeholders in promoting that particular idea. As all of you are aware, in the last decade, there's been considerable development and widespread adoption of whole fintech in globally, and India has been playing a key element, and that's where government plays a very critical role. As most of you are aware, during COVID, while most of the economy was in slump, the contactless payment was one sector that grew year on year at a very rapid pace itself. There's a very interesting study that McKinsey has undertaken, which says with 10% internet penetration, there's a growth of around 3.9% GDP. So as we know, there's a rapid user base which is being using the technology with smartphone adoption, internet penetration, low data rates, and that's where the whole fintech sector and the digital economy is going to get a boom as well. With this report, what we aim to achieve is to have that particular dialogue or the knowledge gap which is there in the market, because what is happening is the policy makers, the entrepreneurs, the technology is growing very rapidly. How do you fill in the gaps? And that's where we want to work together to understand that there's some credible information which is available out there so that people can take knowledge from this. There's some very key government initiatives which have been going on. For example, most of you would be aware the UPI expansion plan, where multiple countries starting from UAE to Malaysia to Singapore have started using the whole UPI technology as well. So government is playing that key enabler facilitation where the Indian fintech ecosystem can be taken to the world as well. We also, as you must be aware, the recently held SEO summit in Uzbekistan, where there's been dialogue and engagement in using local currency for settlements, and that's where the fintech startups can come and play a very critical role to increase the already growing export-import market with especially the SEO region and other countries as well. With the GIFT City coming up in Gandhinagar, there's a huge focus in building up the whole infrastructure space so that we can compete with the likes of Singapore, UK and other countries as well. The government has also set up multiple joint working committees. We have a dedicated committee with Singapore, with UK, where the idea and the objective is that dialogue happens between the government and favorable policies are created which will enable flow of knowledge and investments between both these countries. This has been going on for a while, and Invest India has been facilitating this dialogue. And with the launch of this particular report today, we aim to have this continuation in this particular engagement, and we hope after reading the report, we'll be able to hear your insights as well. Thank you so much, and I look forward to our panelists to hear more views about how we can take this further as well. Thank you.
Thanks a lot, Varun. Before inviting the other panelists on the podium, I will request for a 2-minute photo session where we'll request all the other panelists to please unravel the report for the launch. To all the backbenchers also, we are members from both the team for their efforts and inputs on the report. Thank you very much, everyone. Next, I would like to invite on stage Ms. Reena Dayal to share her insights while she's been working on the quantum space, how we can, leverage her previous experience on that front, on the applications of quantum, in specifically in financial services. So over to you, Reena, ma'am.
Thank you. And I think it's an honor and privilege to be here. And I'm very excited about talking about quantum to the, starting that conversation in the financial sector space. Just to introduce QETCI, or the Quantum Ecosystems and Technology Council of India, as was pointed out, it's a Section 8 not-for-profit company. Our sole mission and aim is to enable and accelerate the quantum ecosystem in India. So we work very closely with the government, industry, academia, startups, and we are a one-year-old organization. In the last 1 year, we've established ourselves, sort of set the conversation going in the tech sector. And I think it's the first time that I or anybody from the Quantum Ecosystems Technology Council is actually speaking to the end user industry forum, right? So I think, and then just to give you a little bit of context, we are recognized as an entity both by the government as well as the private sector. And not only that, if you go and ask somebody in the US and you go through a list within their government as to the quantum institutes around the world, QETCI will figure there, right? So across the world also, we've gained some recognition in the last 1 year. Now, that was for establishing credentials, because many of you would not even know what this entity is. The second important thing to understand is that when we look at quantum, right, and everybody has this idea, okay, something called quantum technology, but what does it really mean? And what we are actually, what it means is that we are standing at the cusp of a revolution. So if you look at the past and you try and remember the stories of when computing started, right? And which the semiconductor-based computing that results in all the devices that we have, the small ones, like the ones we hold in our hands, the mobile phone, to the supercomputers that exist today. All of that is based on classical physics. Engineered on top of that classical physics, you have systems which we chose to be semiconductor-based because that seemed like the most promising technology. And then you have this whole era of computing, right? We are talking about Fintech today, and it is essentially about computing. If we go and look at where the semiconductor industry is today, right now, we are at the end of Moore's law, which means that we cannot miniaturize the circuits any longer, because beyond a limit, we reach into those distances in the semiconductor which are called quantum distances. And if any of you have studied quantum physics, quantum behavior is very different from classical behavior. So any systems that are built on top of any engineering that you do on top of quantum physics has to be done completely differently. So if you look at the quantum era, today we are at a stage where worldwide there's a lot of investment that is happening. Almost all governments across the world, in the developing countries and many developed countries and many developing countries, have focused energy, committed a lot of money, billions of dollars worth of investment for enabling this technology, because this seems to be the future. So what comes after our current state of technology? It is quantum, right? That's what everybody is envisaging. Now, giving you a little bit of context, India had also made an announcement 3 years ago about investing about more than 1.1 billion USD worth of investment in the National Quantum Mission. And since it's an area which is less understood by people, a lot of people don't understand, and the general perception is that not much is happening, right? While in the larger scheme of things, we are at early stages, but there's a lot happening in India. So the government itself had come out with a Quest program, where there was investment done with the, with the various universities and research institutes more than a couple of years ago, and substantial amount of progress has happened. I don't represent the government directly, but I represent the ecosystem, and I have been very closely tracking what has been happening and in interfacing with all people with the ecosystem. Very recently, there were announcements. More than 6 months ago, there were announcements made by ISRO as well as Raman Research Institute about the progress in quantum communications. Right. So I think I would say that India has really, to a certain extent, caught up on the quantum communication side, because we're discussing test beds and test beds are being formulated. So that's good. There is a lot of, recently the Indian Army announced a lab along with QNU Labs, which is also on quantum communications, right, and secure communications. We have been, if you look at the technology industry, several players in the technology industry have started thinking about it a couple of years ago. And many of them have started building teams. There was an announcement by Tech Mahindra a while ago about their quantum-focused labs, makers labs in India as well as in Finland. And then very recent announcement by TIFR, Tata Institute of Fundamental Research, about coming out with the 3-qubit superconducting qubit-based quantum computer. So these are all positive signs. I think what is really required at this stage in India is a much more focused collaboration between multiple stakeholders, because it's a tough subject. I will not mince words. It requires the best of the best to come together, and nobody has the complete solution by themselves. What do I mean by that? When you look at quantum physicists who go deep into the subject today, they may not understand computing as well. So already in the world, there is a lot of collaboration happening between computer scientists and quantum physics experts. That model is already workable. We have experienced it in India as well, and that works. But as you move forward and you start talking about end industry use cases, and you look at the very imminent threat that is posed by post-quantum, by the challenge that quantum computing brings in, I think it was briefly referred to earlier, when today the whole entire security infrastructure relies on RSA 2048, right? And RSA today is considered unbreakable. So even if you take the world's best supercomputers and you try and break an RSA algorithm, it's going to take thousands of years. So that's pretty stable, pretty unbreakable, and so whether it's national security or whether it's your financial data, you feel secure about that data. Today, we do not have a fully scalable quantum computer. But as you move forward, you will have computers which may be able to break RSA. Now, what does that mean? That means that you don't remember Y2K? Y2K, you all wanted to, we all wanted to make sure everything transitions on that day. Now, you have a Y2Q situation, which means that you don't have a date, but before that date, you have to be ready with alternate infrastructure. So, I'm here today to actually start that dialogue and, partner with a lot of these entities in the financial sector. QETCI intends to partner with different entities in the financial sector and actually help work alongside the government to create the roadmap that may be required. The use cases could be a first step, right? Now, we understand the use cases. We don't understand financial sector very well, but there are lots of experts within this community that could help us, right? So I think we are at a very, I would say that we are at a very positive space in India as well. We are not, behind everybody, as a lot of people, sometimes you might think that. But there's a lot that needs to be done. There are areas where we are definitely don't have certain scenarios very well worked out, and that's what we'll be working towards. So thank you very much.
Thanks a lot, Ms. Reena. We've been borrowing the Brownian motion for pricing of options via Black-Scholes-Merton. So there's, of course, a lot more that can be borrowed from physics as well as quantum. With that, I'll invite the last speaker, Shri Harsha Bhaumik, Director, Department of Economic Affairs. So.
Good afternoon, everyone. Thanks, Raghav. I was really nervous, right, when you introduced me. I introduced myself, right, and I never gave him any kind of a write-up to introduce myself. So I was thinking what he will be speaking of, but he took the right words and the right ways to introduce myself. So I am Harsha Bhaumik. Again, reintroducing myself. I am working as a director in digital economy and fintech in Department of Economic Affairs. So as a last speaker, it's always difficult, right, to wrap up this session after this August. Industry leaders have already spoken on this subject. They are the SMEs, they are taking it forward. And that too from the government side. I think I will not make it a long speech, or the intention is to make it crisp and short, because anyways government are supposed to listen and hear the industry rather than telling them what to do and what not to do, right? So in that sense, I just wanted to I glanced through the report. I'm actually traveling, and between minutes and meetings, right? I was going through the report, and how lovely the report is, because whenever you see some 500-page report, right, it's a normal inertia that you will go through it. You don't want to read through it, or you just glance through it, right? So the report was the most promising thing I liked about the report is it's a crisp one. It's very short, crisp, gives the perfectly the right words and the right things which needs to be discussed. Obviously, this report is 1.0, I'll say, and there should be a 2.0 of this report. And I'm pretty sure that writers who have already taken this task of generating such kind of reports, right, knows what are the points which needs to be taken care of. But from the perspective, and then I think I should have stated the disclaimer at the beginning that this is whatever I'm speaking here is on the personal capacity, and this is nothing from the government or the views of the government, right? So, but saying that, I just wanted to say I wanted to just stress on 3 points, like how emerging technologies is important for the government. Next, like why the emerging technologies are important for the financial service sector, and last, what are the key takeaways of the next steps, right? So, in terms of why the emerging technologies is key for the government can be taken from the fact like what we have gone through for the last 2 years, right? We have gone through 2 shocks. One of the shocks are the pestilence or the COVID-19 pandemic which we had. And the second shock was this man-made kind of a disaster which we are writing, geopolitical disaster right now we are seeing. So this did not have for any of the policymakers any of the script to handle this kind of a situation. This is like a century kind of a phenomena which has happened. But if you see the results after this 2 years, I think we have done fairly well. And the basic reason is because of the different kind of self-reliance, innovation and the transformation DNA which we have in our economy as well as in our industry. And here the emerging technologies takes a very key aspects. Because of the forwardness of the technology and of the youth and the population which we have, we were able to go through this past calamity with certain due respect, with certain rigidity and solidarity in the whole, all of the economy. And in fact, if you know the data, I think most of the economists and most of the economic bodies are actually projecting around 6.5% to 7.5%, in between 6.5 to 7.9, I guess, in the GDP growth in the next 1 year or so. So saying that, right, so I'll also just take 2, I think, very important data, right. In terms of the emerging technologies in 2018, the global market was around 350 billion. And then I think in 2025, the global market is projected to around 3.2 trillion. So you can see the opportunity in front of us. And as a growing developing country with the growth, the economic growth which we're having, I think there is no question about why not we exploit this opportunity. And it is the responsibility for every one of us to jump into this bandwagon and have the correct amount of investment as well as the policy intervention as well as the no intervention. So obviously no intervention is also a policy in itself, right? To take this growth forward. Right. So in terms of what is the contribution which we are looking at, I think as part of some of the reports which we have is like around 800 billion to 1 trillion of digital economy impact because of emerging technologies in around maybe in the next 2025 or 2026. That's the roughly period which we have. But is how India's high technology exports will be roughly around 10.3% and ICT exports should be about 2%. That is as per the available data. Now, adoption of how do this adoption of emerging technologies can improve trade's competitiveness? This is through economies of scale, the scope and the speed of the trade. And it also affects every value chain from the pre-production, production and production, right? And improve the access for the domestic firms to the new export market and also exposes the domestic consumers to new products and producers. So firms in financial and manufacturing sectors have been some of the early adopters, right, of these emerging technologies, including the AI, IoT, big data, and blockchain. Now, saying that, right, why emerging technologies is so important for the financial service sector? I'll just right now say that the financial service sector and the emerging technologies are the key backbone of our economy, right? It is also depends on the key well-being of every citizen of which is living in this country. And in terms of like what is the USP which is actually driving this whole economic growth, I think one of the key, there are four key factors. The first factor is we have a rising income. The second factor is we have a demographic dividend. Most of us, like 60% of our population by 2030 will be under 35. So we have already a population which is well versed with adapting to digital technologies. So that is some kind of advantage which most of the countries doesn't have, right? And then I think the third at the okay, so I've been warned that I have 2 more minutes, so I'll wrap it up very quickly. So I think the next two factors will be like the digital public infrastructure, which from the government, which are trying to build. Everyone is aware of most of the India Stack story. I will not repeat it, but from the India Stack story, you will already have the consent layer already built, the paperless and the cashless layer on the UPI already built, and the most important, I think, another layer which is being built on the account aggregation side, which will be launched pretty soon. So this digital public infrastructure is also improving on the economy side. And then obviously the last and the foremost thing is the new products which these emerging technologies are actually enabling us. So based on that, I think we are on the right path in terms of the demand and supply to take these emerging technologies in the path of economic growth. So saying that, I think another important aspect which the leaders has already touched upon, right, which we also wanted to touch, right, this emerging technologies is like a disruptive element in the whole economy, right? So in terms of the disruptions which it creates is also a prerogative for any of the policymakers to get the right intervention done. But for the policymakers to do the right intervention and to there are some of the architectural aspect of policymaking which has to be taken care, which are mostly relies on, right, it has to be, what are the avenues of consumer protection, right? What are the avenues of monitoring? Now, if you take Web 3.0, it's a fantastic technology, nobody is debating about that. From the layman's term, it's like blockchain on Web 2 on blockchain. Maybe that in the kind of simplification you can do, although there will be much more complexities. But in terms of blockchain itself is a distributed ledger system, and then how do anyone supervise and monitor the system? It is distributed, it is like a democratic system. So there have to be thought process put in, like how it will be the financial stability, the resilience, right? Those all aspects can be actually handled or addressed through this Web 3.0 kind of a technologies. So these all facets, I think I will just conclude on saying, right, these all facets has to be taken care, and a lot of good minds has to be going in terms of how to create a policy out of these new emerging technologies. But I can confidently say, as in the words of our Honorable Prime Minister, that the future of fintech and Industry 4.0 will be starting from India and is in India. Thank you.
Thanks a lot, sir. We would like to thank all the panelists for the insightful remarks today, and a huge round of applause for all the contributors who've worked immensely on the report. Karishma, Devika from Invest India, Avnish, Neeraj, Ayush, Rudra, Yasha, Debankar, Abhishek, Tanvi, Kanesh, Vignesh, Kalavini from PwC, and of course the teams that supported on the editorial and design, Dion, Rashi, Faiz and Shipra. A huge round of applause for everyone. Thank you very much. And you may kindly scan the barcode for downloading the report. Thank you.
Thank you very much to our panelists for that session. This would be a great help in shaping our perspective. An absolute honor to have all of you at the Global FinTech Fest 2022. The next discussion is on closing the digital divide in financial inclusion through FinTech. मेरे पास 4 ही नाम है.
I have 4 names.
Once again, welcome everybody. We start with the next panel discussion, which is all right. Good afternoon, everyone. Welcome to this panel discussion on closing the digital divide in financial inclusion through fintech. Our moderator for this session is Mr. Sandeep Lakshman, Head of Fintech for Asia Pacific and Japan AWS. And our panelists are Ketan Doshi, MD and CEO of PayPoint India, Ketan Patel, CEO of MSwipe, and Mr. Parag Mehta, founder and CEO of Evolute Group. Over to you.
Thank you so much. Hi, folks. Thank you for joining us. This is a little different for us, isn't it, guys?
It is.
So I think what we're going to do first is have everyone introduce themselves, and then we'll start with the question and answers. Meanwhile, Ketan Doshi is still figuring his headset out, so we could allow that. But Ketan Patel, why don't you make a quick introduction of yourself, your company, and tell the audience about it.
So, thanks. Career banker was in Kotak for 18 years before I took this plunge, and now I run MSwipe. MSwipe is the largest non-bank POS acquirer in the country. We have around 500,000 POS terminals in the country, around million QR merchants who use our QR. We are a lender too. We just got a PA aggregator license. So that's what we do.
Congratulations on getting the PA license.
Thank you.
We're going to go to Ketan Doshi. We have 2 Ketans on the panel, so we're going to go to the second Ketan. Ketan Doshi, why don't you introduce yourself and the company?
So, PayPoint is focused towards underserved market. We have retail touchpoints offering BC. We have banking correspondent piece where regular banking happens. PMJDY accounts are open. So we cater to more than 40 lakh accounts, which day in day out transact through us. We do have a wallet license, which again is created to offer services to the underserved. Primarily, we see underserved market where wallets are not there, and we offer other payment services. We have more than 100 plus aggregated services on our platform, where this B town, C town, and above people come and access this on a day-in-day basis. So we cater to around crore of customers on a month-on-month basis.
Wow, awesome. And the last panelist is Parag. Parag, why don't you introduce yourself and Evolute?
Well, yeah, I'm Parag. I'm born and brought up in Mumbai, third generation entrepreneur. Started Evolute Systems and now Evolute Fintech Innovation in 2009. In the journey for embedded engineering, started developing some front-end solutions for financial inclusion space in the country. We have more than about 250,000 BC or micro ATMs in play.
and we have continued our journey, and further we have developed India's first POS terminal, which is in-house, indigenously designed and manufactured in India with all the payment certification in place. And further we are adding a lot of other values, including some of the applications and softwares. So yeah, we are definitely having a big vision of empowering the people with technology. So that's what our tagline is: tech power the world. Yeah, so over to you.
Thank you. And a quick introduction about myself. My name is Sandeep Lakshman. As the MC said, I head the fintech vertical for AWS across Asia Pacific and Japan. And for those who are new, AWS provides technology services, from machine learning to databases to compute to CloudFront, etc. for fintechs, right? So they could just click and use that. But talking about tech, Parag, I'm going to catch you first,
Okay.
right? First of all, congratulations, right? So your products are all made in India.
Yes.
That's pretty awesome, and you have like 250,000 devices on the ground, right, on the field.
Right.
That's a pretty big number. So talk to us about some of the macroeconomic trends that you see, right, in the country that enables financial inclusion, right? And through essentially your POS machines.
So I will say that the country has evolved from ATMs to micro ATMs, right? So there was a need of making an affordable solutions, and that's exactly taking those solutions to the customer. So branchless banking and agency banking and business correspondent model has evolved, and they very much wanted a solution which are affordable in nature. And with the mobile phone and the smartphone evolving, ultimately we have been able to build those front end solutions, and that is where if the entire 10 years or 15 years you look at it from the business correspondent model which got toggled in 2004 2005, the country has come a long way. Like now after Jandan scheme also has announced more than 43 crore Jandan accounts are open, 1,90,000 crores are in deposit, and even the Aadhaar play which has came in, so Jandan, Aadhaar and mobile has actually helped the country evolve into a long play by making the financial inclusion right. In 2010 or 11, I was hearing about 50% or so. And now country has more than 76% financial inclusion achieved. Of course, out of the huge big population of 135 crores, and out of that maybe 110 or 120 odd adult population. So with that, lot of other smart solutions are evolving and emerging, and we would be definitely looking at to make our 2 cents and contribution for that particular journey ahead. So ultimately it's technology.
Yes, agree. By the way, I always like to take audience questions. So if your audience has any questions, could we please have a mic that we could ask for, we could, if audience have questions, we could take that later, please. All right. So I want to, that's very interesting, but I want to come to Ketan Doshi for a bit, right? Ketan, you mentioned about how you got a wallet license. You have so many touch points, right? But talk to us about some of the challenges, right? Because one of the big things about India is the population, right? It's a massive population. It's a big opportunity, but it also produces its own challenges, right? What are the challenges that you see in the market today, right? That's to drive financial inclusion, and that for the entrepreneurs today, that could become opportunities in the future.
So the biggest challenge is access to financial services. Now, why there is no access to, limited access to financial services? Because of population, as you rightly mentioned, because India is a huge demography with multiple languages, maybe around 17,500 languages are spoken in India. So there needs to be an assistance. The second area is there needs to be financial literacy. So to bring financial literacy, there needs to be an assistance. And you cannot assume a customer will go online and understand an insurance policy and come on board. So there needs to be an handholding. So one is the demography, multiple languages. There are hilly zones where psyches are different. There are other zones where other psyches there. And to bring financial literacy and give access to these masses is a very big fight. Again, in the rural or a remote location, the ticket sizes are low. So service providers are unable to reach out to this location. So on a low ARPU, a service delivery has to happen where the cost is high. That is the challenge for a service provider to reach out to the last mile. So if we bridge this gap, if we build a system, and fintech can very well do it, like large banks have their own way of working, or large institutions, if a nimble fintech can reach out to this last mile with an efficient system which can address to this need, I think market is huge. We have seen only first leg of the financial inclusion in terms of PMJDY or payments, in terms of UPI, etc., wallet. But the next phase is very big, where insurance, lending, your investments, this is coming up. The masses are waiting for it, but you need access to this demography, vast demography.
So what I understand is also, essentially reducing the cost enough for you so that you could actually scale that up, right?
Yes.
And here's where I want to bring in Ketan Patel from MSwipe, right? So Ketan, you started in payments. So MSwipe was a pure play payments player. What are the opportunities you have seen? Because Ketan Doshi spoke about some of the challenges. What are the opportunities you have seen, and how has that driven your business model over the last few years?
So, we changed our business model a bit post the pandemic, right? Pandemic, we were a one-trick pony focusing only on payment acceptance. And we realized that payment acceptance on its own is good to acquire, but you need to do multiple things with the terminal, right? If you go to a small merchant in a tier 4 and ask him about the terminal, he'll tell you this device takes away 2% of my profit, right? The MDR is a hit to him. We wanted to change the narrative, right? So what we said is, how do you add things to the terminal which adds value to the merchant, right? So lending was a no-brainer. It's the holy grail for everyone. So was for us too, right? Micro ATM. We said, okay, fine. Let's convert this. A lot of cooperative banks did not want to invest in micro ATMs. Can you also use your POS terminal as a micro ATM where the merchant can dispense cash and make some money out of it, right? BNPL flavor not currently important in tier 3, 4, 5, 6, but tier 1 and 2 BNPL is getting important, where you are able to convert it into your product into a EMI and not lose a sale. Insurance at pause, like Ketan Doshi said, that we feel is a game changer. Small ticket insurance policies which a terminal will be able to dispense and the merchant will be able to make revenue is going to be the game changer, right? And I personally feel the government is investing a lot to ensure that tier 3 to 6, J&K, Northeast, digitization happens on a fast pace, right? The PIDF scheme has around 800 crores to be disbursed. I think they've disbursed some 250, 300 crores, where aggregators like us are incentivized to digitize merchants in tier 3 to 6, Northeast and J&K. We are doing that. Last year, if you look at PIDF data, some 400,000 devices and a crore QR codes were installed in tier 3 to 6 J&K and Northeast. My gut is this year it'll double, right? So government is doing enough. We are incentivized to go and put devices out there and make them transact. I think it's working well. Can we do more? Of course we can do more.
That's a very important, interesting point you brought up, because I just came from Ladakh. I went to climb this crazy mountain and came back. What I was amazed, because 10 years ago, if you went to Ladakh, you just had to carry cash, right? There was I think a couple of ATMs, and they would always be out of money, and no one accepted cards. And this time I went, and I was so surprised, because it's quite remote, and even the remotest places, they accepted UPI. I mean, they had QR codes. They accepted cards, which I was so surprised. And when we were speaking about this, you were mentioning about PIDF, that is the Payment Infrastructure Development Fund, right? I think some stuff like that is a big opportunity.
It is
not just for existing customers, but also like existing players like you, but also for new founders in the audience here who want to, build on that, which is subsidized by the government as well, right? And you can see the effects. I almost I remember all the gifts that I bought for the folks home, I just paid through UPI, right?
Yeah, I agree. I don't carry a wallet anymore here, wherever I go.
But there is one thing I want to comment. Parag, I'm going to bring you in here because, you focus, on the last mile, right? Because one is, government incentivizing, right? It's incentivized you to you deploy these devices and drive transactions. And Ketan, you mentioned like 800 crores, right? That's a pretty big amount. But at the same time, the customer, right? One thing we need to not forget is that the end customer, we have to earn their trust as well, right? So that they actually do the transaction, right? What are you seeing at the end customer? What matters? Like for the founders here, for what matters in terms of enabling them to do the transactions?
So when it comes to trust, Sandeep, is like multiple factors come in play. So right from availability of the technology or the assisted model, which even Ketan Doshi has told us. So ultimately, enabling them to make more and more transactions is what the entire environment is can be created in a way. So now more products can be offered slowly once they have the literacy and once they understand. And important point is that trust is connected with the fraud and some of the other matters which need to be instilled. Like, if I'm going to do this transaction, how people have recently tasted that success in cases of UPI, where Google Pay or any of the other UPI Pay, where people are not thinking twice now. Okay, I'm making a transaction, it is going quick and done. So trust is anyway seen. Same way there are other channels. Now UPI may not work as smartphones are not available in those remote locations. So where I feel that Aadhaar-led infrastructure to be leveraged further, and that is where we can add further on the trust factor, which has been still missing, and especially when I see some marginalized community, when we talk about women and girls, or when we talk about disabled people, or even the elderly people, there are more chances of, there are more cons also in the industry who can, really outsmart them. And if based out of that couple of other channels we have in the country, and if we can leverage that it good enough, the trust can be enhanced. Now, I was also thinking, like, how buy now, pay later is become very popular for lending, and it's become a talk of the town worldwide. So why can't it be transact now and settle later? There are technology possible, or it can even get evolved. But do we even think about, and especially I'm talking about for the tier 3 to tier 6 or even remotest villages across the country. Now, if that can happen, so small ticket transaction, we don't really wait for only smartphones to come in, though smartphones also increasing, but somewhere in the way we can create that technology which is still available within the card networks or even other networks, and those offline transactions can be settled later. How we are getting the instant loans? Okay, because based out my behavior of transaction, my history is there, and I've been given the lending, so that okay, Parag, you are there as an entity, and we can give you 5 lakhs rupees of a loan just very quickly. Same way, small ticket, 200, 500, 1000 rupees transaction, can it be trusted? And some infrastructure can be supported by the government, so that the trust is up, transaction karo, we'll not wait for the settlement, and eventually that will happen. So that is where I think that could be a novel thought here, which I'm trying to add.
That's very interesting, because I'll tell you what you're essentially saying is, in order to build trust with the end customer, number one, your process has to be almost transparent, right? You want to give instant loans, but at the same time, it needs to be secure, right? So your product is almost invisible. Like you mentioned, you use, Ketan, you use your POS not just to process transactions, but also give a line of credit, sell insurance, right? So your POS essentially becomes invisible, right, to the end customer. What he cares about is what he can get, right? This just struck me like one of the key things. So out of the audience here, so a quick question: how many of you have seen that Paytm box which makes that noise? 30 rupees aa gaye. How many of you have seen it? Raise your hands. Okay, almost everyone. Okay, a couple of folks ahead have not seen it, so I would request you to do UPI transactions, please. But jokes apart, so we actually worked with Paytm on that, right? Because one of the things that came up with merchants is that the merchants wanted that, it's not just the end customer, right? The merchant wanted that security that, hey, the transaction has actually happened. And so we had to work with Paytm to put in this machine that would allow them to confirm a transaction in real time at a very cheap cost. Right, so we worked with them on a particular architecture, and that architecture, but if anyone else is interested, happy to discuss it in one-on-one. But yeah, we worked with them to build that, and that actually has increased that trust for both the customers as well as, the merchants, right? I think that was for me, that's what struck as a good example. Sorry, you were saying.
From many years since the POS has evolved as a enabler or an instrument to carry out all those transactions. For us, it was always in a receipt, which has been at a core of bringing that, instilling that trust, and that still continues. But we can go even beyond that now. So that soundbox or voice bar scenarios are been catching up, and there are multiple ways which could be affordable, cheaper, and more appealing to some community where all of that is been made possible. Like how multilingual receipt can be printed, same way even multiple languages also, so soundbox can even narrate whatever the transactions have been made. So yeah, I'm quite in for this kind of the solutions.
That is happening, right? The soundbox today, most of the people have at least 8 languages, right? So you are also solving the tier 3 to 6 problem where English may not be a preferred language, or south of India where Hindi is not a preferred language, right? That is getting sorted. And you're bang on, the soundbox is going to be the future. Just to give you some stats, I was just thinking about it. In the month of August, 6.5 billion transactions happened through UPI. Our population is 1.3, give or take some 10 here or there, right? That means every Indian did 5 transactions a month. So every Indian is transacting on UPI once a week. Now, if you take the data of 48% being feature phones, right? That means every Indian transacted once on UPI in 3 days. That is the power of UPI. And that's what is changing the game.
Correct. And there is I think feature phone is again another opportunity, right? So one of my friends recently, he wanted to go on a digital detox. So he got rid of his smartphone and took a feature phone. And the biggest trouble today he was asking hey Sandeep, how can I do payments through a feature phone? Right? So he's I think that's another opportunity there. Sorry, Ketan Doshi.
I think UPI is out with 123 at the rate something. Yeah, that's the thing coming up for the offline, for the future.
That they're using USSD channel, right?
Yeah.
All right. So Ketan Doshi, coming to you, right? So you talked about the challenges, right? Talk to us about how you are addressing those challenges, right? Because you identified them, right? So I want to go a little bit deeper on what you are doing on that space to address them.
So when we started with payments. That also brings trust along with us. Payments always is the starting point. Then we moved on to the banking piece. We cater to the banking needs of the population. So offering PMJDY accounts. So we have offering banking at our touch points. We have wallet now, which is coming out in a different shape and manner based on our past experience. So we're creating a challenger bank, not a bank itself, but a challenger bank product where wallets will be offered to the underserved. The onboarding will be quick, and even the debit cards are sort of a prepaid card, which is a pseudo debit card for them, which can be offered over the counter. So there's no lead time for onboarding. If you go to open a bank account, there's a lead time to open a bank account. There's a lead time to get a card, lead time to activate a card. There's a process for an underserved to go to an ATM card, activated card, and it's a very big process, and there's a dropout, very big dropout. So this is what we have observed over a period of time, that onboarding a customer quickly and educating them there itself when he's excited to get onboarded, rather than waiting for them to get the card and onboard them and train them and educate them. So that piece which we are building it on the wallet. And wallet right now, as per the new regulations which have gone through in last 1 year, wallet is at par with a bank account, except I cannot pay interest on the wallet balance. And it can hold up to 2 lakh rupees. So I think for the underserved market, we have a decent size of 2 lakh rupees, and we are building it For the people who are aspiring to get a wallet or a card, we are using the Aadhaar pipe to get the KYC onboarded. KYC based onboarding quickly. Uh, I don't think anyone is interested in the interest part. People are not actually looking at interest. They are just using it as a payment tool, as an investment tool, or as an they want to go online. A rural location, there are youths who are looking to go online and buy a Nike shoe or a Reebok or a jeans, and they don't have the tool to make a payment. So this is the segment we are hitting, and hopefully I think we are going to see good traction because we have seen 20% KYC rejection rate because of small difference in KYC. The banks are so adamant. They cannot move out of their piece. So we are seeing that 20% dropout rate because the bank has not approved the account for various reasons. So 30-40% rejection rate. So there is a huge mass which is waiting to get banked, and they have a good alternate in terms of our card. And these are cash loading cards because we have 65,000 touch points where a customer can walk in and he can be a farmer from a local, he can be a farmer who is getting cash as his revenue, and he can come to my outlet and deposit it. So it is pure offline play to a digital play, and most of the cards right now or the wallet right now is focused towards online. They are addressing needs of already included people. So that's where we are.
Hello. I think now prepaid card you can also withdraw, right?
Yes.
That is also allowed. So you are it's as good as a bank account. Yeah.
Yes,
Yep.
yes.
Interesting. So that means because of the wallet, you could move money between wallets. Number one, it's that's
P2P is there.
That's P2P.
P2M is there because of QR codes.
QR
We are
codes.
live on the UPI. We are getting live on the UPI pipe under interoperability.
And then you can also withdraw money through your prepaid cards, right? And anyway, you have a micro ATM network thanks to all of this, right?
Yes.
Interesting. That's a very interesting take on a product to address the underserved market, right? Like farmers, for example, tier 3 to tier 4 to tier 6. Okay, so folks, we have I see 11 minutes 40 seconds more. Any questions? Raise your hands. We will try to get you a mic for you to ask a question. And meanwhile, I'm going to continue. So any questions? Just raise your hand. We'll ask the audience. If not, we will continue our questions here, right? All right. So there's an interesting trend I'm seeing over here, right? So number one, all three of you are in payments as such. But both of you have launched other products on top of payments, right? So you've launched a wallet banking product, you've launched lending and insurance. Parag, you're still on, you're pure payments now. Here's what I want to know, right? And this is for the audience here, the entrepreneurs here as well. How do you see payments evolving? Is payments going to become a commodity? Or is it you can still make money on it? Or is it going to be something that you use as a base? And I want all three of you to answer. And Ketan, though she's waiting to go.
Take the lead.
So, yes, Ketan.
Payments is already more than commodity now. So there's no revenue stream in the payments business, but ancillary business as they are into lending or some ancillary business if you get insurance on the bucket. So basically bundling multiple products on the payments pipe gives you revenue, it brings efficiency because if you have multiple products running on the same asset, it brings huge efficiency. So it is divided. So we have, just to correct, we have 100 plus services running on our touch points, which ranges from travel to booking to lending to payment. So that's the only piece which gives me efficiency, or else it would have been difficult to sustain only on the payments.
So I agree with Parag, and Ketan. So the thing is, payments is a great acquisition tool. You can acquire a merchant using payments. Try and cover the ecosystem to the best of your ability, right? There are multiple ways to, make revenue out of the merchant, right? And lending, insurance, BNPL are some of the few, right? Payments also helps you see, if you look at merchant lending per se, I don't know of any company which has been profitable in the merchant lending space. Right? There is no company which is profitable. If you look at the last report which CRIF came out with, they are saying small ticket business loans, the NPA is above 15%. So I'm sure nobody's making money. But with payments, I think you can have a great control on lending because from the settlements you can deduct money. You can understand the merchant more. So payments on its own will never make money, but value-added services, and I include lending in that, will help you make money.
Parag.
I was just thinking, what I'm going to add. Like how you said about Ladakh, no? Even 5 years before, even I had been to Ladakh, and that time I took an immersion in Pangong Lake. So तभी immersion करने के बाद ऐसा था कि मोदी जी ने आत्मनिर्भर करने का पूरा, he said it. So we thought okay, let's develop and manufacture and design the POS machine in India, and we'll really be able to make good money because there is no one in the industry. Even after 5 years, there is no one in the industry. So how we talked about giving an access in the financial inclusion, but very important piece has been left out is how are we going to reduce our dependency? Entire ecosystem of payment, it is based out of the foreign vendors infrastructure. Now, unfortunately, that's still being on the challenge side, which I am still narrating because we all are aware the semiconductor challenges and so on and so forth, the scenarios which India is still struggling. Maybe we'll take another 4-5 years to, improvise that scenario. But having said that, now how are we going to, move ahead? Yesterday, I had a meeting with some of my sales folks here, and we were talking about how we can continue our journey of building solutions. So then our folks were interested more in, finding कि ये hardware है, उसके ऊपर solution क्या लगा सकते हैं? Am I audible?
Yeah.
Hello?
Yeah.
But then we decided that, let's do that way, that let's find a solution and some of the hardware can be fixed in those solutions here. So right from onboarding solutions to management or mobile device management. Am I audible? So mobile device management and how are we going to monitor, how are we going to optimize those apps, and ultimately whatever the services these gentlemen have been offering, our contribution to their journey is with more and more ubiquitous scenarios with the hardware, with the different solutions, with some of the software applications, and ultimately how faster they will be able to serve the entire community which they are aiming to. And maybe we can be of that help in the value chain. So ultimately it's just not pure play payment, but with the value addition, how Ketan said, and we would be definitely wanting to play in that sort of a complete offering together as a bundled way. So that is where not only just the hardware, but a couple of other innovations which we can definitely wanting to bring in, which will make the journey worthwhile.
Yeah. I think you brought out a very important point on the semiconductor shortage. I think can we get Parag a new headset, please? I think he can't hear me. Any questions from the audience? Raise your hands. Don't be shy. Okay, we have a question there. Can we get the gentleman a mic, please, so that he can ask his question in the meanwhile? And please do let us know to whom the question is for as well. We can't hear. Can you just see that? Okay, till then I'm just going to ask, continue the discussion until the mic is ready.
Sorry, because there is talking some other conference, not here.
Okay, so I think Parag is hearing somebody else's voice and not mine. But no, I kind of agree with what Parag said, right? There is the semiconductor shortage is an issue.
Check. Hey.
Yeah. Okay, whoever said check, I could hear it. Yeah, Parag, can you hear me now?
Yeah, now I can.
Are you sure?
Yeah.
Perfect. Okay, awesome. Right. Yeah, can you please just introduce yourself and also just your name and also your question and to whom it is for?
Yeah, my name is Satish. I'm also from AWS. I'm a colleague of Sandeep. This question is for actually all of you. I mean, some of you mentioned that lending is not a not a money-making enterprise, right? But we are hearing a lot about the data stack coming up on top of UPI and identity as well. And with more data becoming available, you'll be able to do more cash flow-based lending and be able to underwrite better. If you were to crystal gaze, right, where do you think when would lending become profitable, and when would it be that it'll become the real financial inclusion?
No, but you can use my mic.
So I said there is no profitable lending company as of now. I didn't say lending is not profitable, right? So lending is definitely profitable. The problem is, people don't use the data well. Like, just to give you an example, POS gives you so much data. Like, let's say Sandeep was a merchant with me for the last 2 years. I know how many days was he transacting with me, right? How many transactions happen on a daily basis? How many unique cards? How many UPI? How many debit? How many credit? How many Amex? How many Visa, right? Am I analyzing that data well? Post giving the loan. Let's say Sandeep used to transact every day for the last 2 years and he didn't transact for 2 days. Do I call him up and ask, is everything okay with him, his family, the shop, and my device, right? If he still doesn't transact, do I send somebody to the shop to say a quick hi, right? Will there be delinquencies? Of course there will be delinquencies, but would you want to be first in the queue to get your money? That should be the plan, right? So, a lot of people focus only on data to lend, right? Nobody's focusing on data to collect. Ultimately, if you want to win a great football match, you can't do it without a great goalkeeper, right? So nobody's focusing on the goalkeeper, everybody's focusing on the forward. Okay. So whoever gets the goalkeeper right will be able to crack this code, that I can assure you.
Awesome, thank you.
Yeah, that's a very important point you brought up actually, Ketan, because so number one, for those who want us to help them analyze their data, please let us know. We got teams of analytics and AI experts and ML experts who can sit with you. Interestingly, on goalkeeper, right, it just struck me on how important it is. I think it was, I forgot which World Cup it was, but it was USA was there in that it was a soccer World Cup, the football World Cup. And the goalkeeper was like saving a bunch of goals. And somebody went to the goalkeeper's Wikipedia page and changed his position from goalkeeper to Ministry of Defense. That's like, so I kind of understand how important goalkeeping is. So we've actually worked with some fintech. So Zest Money is one fintech where we've actually worked on digitizing the collections, right? Reminding exactly what you said. Yeah, we're happy to work with any of you on enabling that. Any other questions from the audience? We have like 1 minute, 20 seconds left. Okay. Ketan, you wanted to say something else?
No.
Okay.
I was just trying to see if the mic is working now.
Yeah, it is. It's they've been a little cranky. All right. Any last words, Ketan Doshi, Parag?
I think as the conference goes about financial inclusion through fintech, I think fintech partnership is going to be key driver to the financial inclusion piece, because financial institutions are large and they cannot be nimble and go down the line with a efficient system. So I think fintech is going to be key driver for financial inclusion. It will work in a partnership model with the large institutions, and without fintech, the financial inclusion dream of the country cannot be successful. That's what I can give you last.
Yeah, so to add on to that, whatever Ketan said is like, according to me, it's more of the merchant inclusion and the whole digitalization journey, ultimately how we are achieving the entire digital transformation. So with all of those enabling scenarios from the government side, from the regulator, or even the marketplaces, eventually we'll see that how that optimization is able to reach to the last mile, and eventually the economy will thrive based out of all the enablers here. So we'll have to continue this journey. And one more thought process here is like, when he asked the question on lending in whether we'll be able to earn money or not, I sometimes, wonder, because being a third generation entrepreneur, which I said, are they really wanting to have a profit? Because the models which are evolving, like, they should change their status from for-profit to non-profit organization.
So this is a question that we asked when we were setting up a lending business. I come from the Kotak stable. So we asked ourselves, do you want to be a Unilever or a Kotak, right? So do you want to be in the distribution game or do you want your money back? So this is the answer here. Whoever wants to be in the distribution game will never make money. Whoever wants to be a Kotak will get their money back.
So I feel it is the first phase, and people are just acquiring right, left, and center, and without caring about whether money is going to come back or not. And that's why we are seeing this bleed. Once this phase is over, I think there will be sanity, and Kotaks will be there, and Unilever will be Unilever. Yeah. So there will be a separate, there will be a distribution arm like the PayPoint, and there will be a lender, which will be a SBI or Kotak or whatever.
Ketan bhai, you're coming for the IPO?
Why not?
Yeah, I think it's the market is big enough to accommodate different players, right? So I think you're going to have different business models. Some will figure it out, and they will succeed. That's all the time we have. It's actually, this is the big Times Up red over here, very scary looking notice board right in front of us. But I would like to thank all of you. The last thing I would always say is that, for all of you looking to start new fintechs or thinking of innovative models, think of what technology. So if you look at anything that is innovative or disruptive or drives, mass adoption, which is what you need for financial inclusion, think about some disruptive technology that you can leverage, right? So from our business, like cloud is a very good example. Mark Andreessen, who's the founder of Andreessen Horowitz, one of the biggest VC firms in the world, actually said that the cloud reduced the cost of starting startups by 100 times. Right? So what used to cost $150,000 to start, or $1.5 million to start rather, became like $15,000. So that's a big, big difference. So think about different technologies that you can leverage with innovative business models. Right? All right. Thank you so much, Ketan and Parag. It was a wonderful discussion.
Thank you so
Guys,
much.
can we have a round of applause for them, please? Thank you.
Wonderful.
Thank you. Bye.
Thank you very much for that panel discussion. Selfie time. Once again, for those who've joined us now, welcome to the Global FinTech Fest 2022. I'm your host, Chaitanya Rathi, and we are about to begin with our next panel discussion, which is on the role of digital identity in a physically distanced world. We're just setting up stage for the next panel discussion. We will have 5 panelists and 1 moderator. And in the meanwhile, I'd like to thank our theme partner, WhatsApp, co-powered by Amazon Pay, spend management partner, Encash, in association with Perfios, payments partner, Cash Free Payments, and CEO's dinner partner, HSBC.
Check. Hey, hey, hey.
Oh, is it? Okay.
All right, we have a panel on the stage, and let's get started with the next panel discussion.
Listen to ourselves.
Thank you. Yes. Okay, I can see everyone from it.
Can you hear me?
All right, we have with us moderator Amit Goyal, Vice President and Country Head of India for at Prove, Jay Dembani, Head and Product,
Just turn it a little bit and
Digital Identity at Hyperverge, Dibanjan Chatterjee, Head of Decision Sciences, Bureau Inc., Kishore Sharma, Head Partnership, Funada, and Suparno Bagchi, COO, Balance Hero India, True Balance, and Rajesh Srinivasan, Head of Technology, Media and Telecommunications at Raja and Tan. We start with the panel discussion on the role of digital identity in a physically distanced world. And over to our moderator, Mr. Amit Goyal.
no.
Yeah, can you talk?
Hello.
Yeah.
Can you guys hear me?
Yes.
Okay. We'll just let him get mic'd up.
Do we need to use this? Okay. Fine.
Start.
Yes.
Yeah, it works. All right. Thanks everyone for joining. I would like to start this by saying that we are actually sitting in the land of digital identity innovation, right? We have probably one of the best digital identity systems in the world called Aadhaar. I have also read recently that it has almost complete coverage now in the country, or it's getting there, right? It's pretty insane, right, at the size of this country to be able to achieve that. So, so I think it's a great setting. It's a great place to discuss this. We have in this panel discussion people who are building digital identity solutions, eKYC solutions, onboarding solutions. We have people who are customers of these solutions. We have people who represent the law and in the legal side of things. So it's going to be very interesting, that much I can assure you. So maybe, I think digital identity is such a term that a lot of times it is understood in very different contexts. Some people have a very different definition of it. And, it's a very broad term. It can include many, many things. So I think the right place to start for it, especially for people who are uninitiated, is that what is the problem that we have been trying to solve, when it comes to digital identity, and then what is digital identity, right? So maybe Jay, we can start with you since you are building a company in this space.
But Amit, so to understand the digital identity, we need to understand what is identity, right? So, in a physical world, if I have to, justify myself as Jay, then I have got my Aadhaar, I've got my passport, right? So these are the means in the physical world to prove myself that, I am the person who I am saying I am. in the digital world, the points which are considered, right, are slightly extrapolated in that sense, which means that I have multiple data points, right? It can be my phone or email ID. It will be about my bank accounts, my telephone number, my location, and there are several data points. And when you consolidate the data point of all these data points and map it to an individual, then it becomes a digital identity, right? So a digital identity is sort of a true or a cozy representation of my true self in the online world. So that's basically the digital identity in a nutshell is all about. Now in terms of when we are talking about what is the problem we are trying to solve, how do you the problem which we are trying to solve here is about the identification and authentication, right? So how do you identify an individual, validate it that this is the same individual with regards to the documents or the data points which has been gathered, and then you authenticate that individual to perform the various set of activities within the ecosystem. So that's basically the problem that has to be solved. And once that an individual is identified and authenticated, you go to a next level and you authorize that individual to perform various activities, as we have rightly said. You make them part of a financially inclusive society, a more formalized ecosystem, and then overall the experience in terms of the digitization improves because you know who you are serving, right? So who are your customers? So that's in a nutshell digital identity, the problem which we are trying to solve, and how we are solving it.
Right. In fact, just to add to that, somebody who has spent like 20 years in digital identity, he told me that internet did not have its own native digital identity. If there was one, we would probably not be having this panel discussion in the first place, right? So if that was not there, what we did was we took all these government issued IDs and we digitized them, called as DocScan, in the identity world. But then we actually need something more native, more functional. And I think Aadhaar is a great first step towards that. It can scale to 100 million transactions a day. It's available to all sorts of apps to be able to authenticate, authorize, as you were saying. But I think a discussion around this, right, it cannot be just about India and Aadhaar. I think we have Rajesh from Singapore and works at a very big law firm which works in this space. And you have seen, the World Bank ID for ID program. You have also seen the Singapore's program as well. Can you talk a little bit about those and what were the characteristics?
Can do. Thanks. I'm happy to share a little bit on that front as well. First, the ID4D project is all about looking at national identity from a non-governmental standpoint. Identity is a fundamental human right that every human being has, and it should be viewed from that perspective. And the reason why that was an important way of looking at identity is it removes some of the layers of citizenship, for example, or rights of a person to be in the country, separate from your fundamental right of being identified and identifiable. I am who I say I am, and that's a right that was given to me because my father gave me the name that I have. That should not be a national right, it should be a personal right. So when you take that perspective, that's where the Aadhaar model, in a sense, became a very instrumental model that, that the World Bank and the UN looked at to try and implement the ID4D project. ID4D stands for Identity for Development, and the project was run in many different jurisdictions. I had the opportunity to look at rollout of that project in various parts of Africa. So I went down to Cote d'Ivoire, Guinea, and Nigeria and helped them to implement identity projects, which are separate from your citizenship, separate from your passports and other forms of indicators. Why is that important? Well, in many countries, for example, nearer to my home in Myanmar, there are individuals who have moved from Bangladesh into Myanmar and they're stateless, right? But being stateless doesn't mean that you have no identity. If an identity system is introduced that's not tied to the state, these people can still be given an identity system without making them nationals of the country. So straight away, separate identity from nationality. Super important from a operational and political standpoint. May I have some time for Singapore as well?
Yeah, please.
Okay, great. So in Singapore's context, it's a very small country, as you know, so quite easy for us to deploy systems and processes. And so what we did was to have a system called SingPass, which is an app-based system. It allows you to basically use it to authenticate your identity across multiple platforms, both governmental as well as private sector. So these days, using SingPass, you can apply for a bank account very easily. It leads to data minimization because you don't need to share the same data set with multiple third parties. It becomes a authentication that's based on easy adoption, APIs that are open to various private sector organizations. And at the end of the day, what this means is you minimize the amount of data that's collected about yourself as an individual. And that's central to Singapore's data protection regime. And maybe later on I'll share a bit about why data protection is important as well in the context of digital identity.
Did you guys lose the... I can't...
Okay.
It's working for you?
Okay.
You can hear me? Okay. Actually, what you spoke about the World Bank's ID4D program, I was on a panel, digital identity panel. There was a lady from Pakistan, and she raised a very important point. She said, there are girls in Pakistan who do not have a birth certificate and a lot of other documents which are required to get a something like Aadhaar. So what do you do in those cases? So what you said, right? Identity has to be disassociated from government IDs. That's kind of the first step. So very
Exactly.
Important point. Suparno, I'll actually bring this to you. Now you're not building an eKYC digital onboarding solution. You are a customer as a lending company, right?
Right.
Lending and payments company.
Right.
Are you satisfied with what you see in the market, what you use, and what is the stuff that you're looking forward to, and the challenges that you face, right? You must be having some set of expectations.
No, absolutely, and thank you for having me here. The way I'll put it is, I'm very happy, but maybe not satisfied. So it's like a typical consumer, right? And as you rightly said, right, we have heard a lot about Aadhaar and how it's helping. Morning also we heard the Honorable Finance Minister speak about like how Aadhaar is kind of actually helping in inclusion, helping in delivering the service. Let me give you some perspective as a consumer. So today, let's say you may refer to our lending business. So in our lending business, like we cover 85% of the PIN codes in India. And just imagine the scale of it, like we have some 9,100 PIN codes in the country. And we say like 85% of the PIN code, one is like accessibility, reachability, but beyond that, for you to actually deliver and cater to the service, is there something where we can really identify? And the larger play, not just like if you see from a digital service standpoint, is like, we kind of say it as like, hey, the service is catered even before the instant noodle is ready on your kitchen. So which means like you are doing everything, including authentication, identification of the individual, getting that kind of a trust and confidence that, hey, you can actually cater to a service all within less than 5 minutes. And to a country of this size, when you're seeing like, hey, 85% plus PIN codes. So it's a testimony of the system, how the system is working, and exactly to the role play, right? Because we are somewhere the strongest consumer, because on one side is the customer who is the beneficiary, on the other side is the providers who are helping us. But we being the bridge, where as a consumer, if you're not able to actually come up and give that kind of a catered solution within the needs, then the entire ecosystem will not get to that level of amplification. So as a consumer, therefore, as you asked, like we are a very happy bunch. And at the same time, I qualify that we are not satisfied. The reason being is like, again, going back to the point which you were referring to, see, at the end of the day, identity is not just about authentication, right? So today, if someone is asking like, hey, who are you, Amit, or who are you, Suparno? I just don't refer back to saying that, hey, I was born in the city of Calcutta, so and so year. I don't call out my birth certificate. What I call out is like who I am, what I am doing. So that has become an integral part of my identity when we are like in a physical world or a physical interaction. So then that's precisely also the reason I'm not totally satisfied yet, because the way I look at it, this evolution of the ecosystem should be beyond the identity authentication part of it. There are a huge headroom in terms of enriching the data what is there currently. It's not just about your name, it's not just about your, let's say, birth or other details, or it's not just about a unique identifier. It's about like, can you enrich the data without injecting biases into it, so that, let's say, consumer like us, we can actually use the data, we can actually amplify the services beyond what we are currently doing. So that's the way I'll qualify.
I'll let some of them do the sales pitches later on. But let's move to Kishore, you basically were talking about this whole sort of industry and regulatory view of eKYC. And can you talk a little bit about that?
So thanks, Amit. So see, as we were discussing more in terms of the eKYC, right? So as most of you guys know, that the KYC is about the identification of yourself, and you do it from a more from a paper form. Now we are talking about eKYC, which is more on an electronical form, in especially doing it through digital. So, from a regulatory perspective, I have seen that the financial services, especially, is on top in terms of the KYC transactions, which is taking place on a digital form. Especially from the last 2 to 3 years, what we have seen, the COVID has helped a lot of people to apply loans and a lot of other activities which is taking place. Whether that is for the short-term loans or the long-term loans, people are opening up themselves to identify electronically. Now, from a regulatory perspective, there is some issues on the cross-border transactions, right? So when you're looking at the cross-border transactions, somebody who is, as Sir has mentioned that. If somebody is coming from Bangladesh to India, cross-border, how do we identify that person, and how do we really, provide those loans and other activities? So there is the RBI has come up with one of the hackathon. I think the last year in November 2021 November, they have come up with the world's first hackathon, where they have allowed a lot of the developers and the entire ecosystem to come in one place and come up with the solutions which the RBI have identified the problems, right? So one of the problem was how do we change the verification process, especially the OTP based, because we have seen a lot of fraudulent activities taking place with the OTP. So the challenge was given, create an alternative for the OTP, right? So with these kind of support from the regulators and the RBI, I see that the next phase of these fraudulent activities will come down, and the verification process will be more seamless. Thank you. That's what I wanted to say.
Thank you. I think that's a very good segue into another very important topic that we don't talk about as an industry, as a nation, which is fraud, which is happening, right? We are quite obsessed by how the digital transactions are growing and everything. And I, for myself, the company that I work for, we care about fraud a lot, and I know Dev cares about it a lot. So Dev, can you talk about we have talked about like what is digital identity, what are the solutions, what are the problems, what are the international frameworks and all that. But can you talk about the second order effects of now we have digital ID solutions, but we are still seeing a lot of fraud, right? So what is happening? How can you curb it? Can you take Kishore's mic?
Sure, thanks. Yep. So thanks, Amit, for the question, and thanks everyone. I think great discussion thus far. So I think something that we are all agreeing on is, the fact that digital identity has sort of grown in importance over the past many years, and especially sort of the pandemic providing an impetus to digitization of everything under the sun. So at this point of time, how the landscape looks like, if you own a business and that has a digital arm, you might be a financial organization, you might be a full-fledged bank, you might be a gaming company, you might even be a matrimonial service provider, right? Verification of people who are using your services is a big deal, and it's an important part of the ecosystem. It's an important part that enables you to provide the right services to right people and also to weed out the bad actors. But what has happened of late is, as is true with every emerging tech, is typically fraudsters are one of the first adapters to any new tech, right? And that the last time we saw that was in the context of e-commerce. So if you're aware, especially in the Western countries, during the late 90s, it was actually syndicated fraud rings that actually embraced e-commerce wholeheartedly, right? And we all know where that has led to. So these days, we are seeing a very similar trend even in our country. So a couple of things that I want to highlight. The first thing is, when it comes to the discourse on fraud in India, we are all aware of UPI fraud, and we are all aware of, the narratives and stories around syndicated fraud rings like Jamtara and so on and so forth. But what we've seen of late is there are a lot of syndicated fraud rings in India that are sort of investing, quote unquote, into the business of, identity theft. So there are a bunch of, modus operandi, as to use a jargon, that sort of goes on in the space of ID theft. One of them is like, simple ID theft, wherein, let's say, I might try to impersonate you and apply for a credit card, and obviously I will not pay back, and hence your bureau score will go for a toss. That's one thing. The other thing is a little bit more advanced, which is known as synthetic ID. And synthetic ID started in the West around 10 years back, but it has started in India, and that's a big concern for everyone. So here what it means is, I, as a fraudster, the person's identity that I'm trying to impersonate, that person actually doesn't exist in flesh and blood. So what I've done is I've stitched together, let's say, the identities of all of you, and I'm trying to apply for a financial product, right? Which makes it all the more difficult for any bank or financial organization to trace, the narrative back to the victim. So, so these are, some of the main MOs as far as ID theft or ID fraud is concerned. And this is sort of causing a lot of friction. Obviously there's the emotional side of someone being defrauded and losing their life savings, which again doesn't get a talk. Not too many people talk about the emotional impact of fraud, in the mainstream media, right? I think that needs to be spoken a lot more of. The other thing is enabling businesses. So what has happened is, since businesses are trying to weed out the nefarious actors, they are sort of, they've established a one-size-fits-all kind of a framework when it comes to onboarding. So let's say I might not be a nefarious actor, right? But still, I've got to go through all those checks that any bank or financial organization has put in place, which, to be very honest, is a bit disheartening for me, because I think that people are not trusting the digital aspect of me. Wherein Debanjan in flesh and blood, speaking at this conference, everyone knows sort of everyone is in a position to trust me, right? But why it would be the case that as far as my digital twin is concerned, I need to really jump through a lot of hoops to prove that I am the person behind that identity. So I think that's where the landscape is at this point of time. And now, speaking on the solutions, sort of how can we sort of combat these kind of frauds? I think a lot of work needs to be put into building proper products, as in counter fraud products, when it comes to synthetic ID, when it comes to digital ID theft. And a lot of sort of awareness needs to be generated on best practices. So, tech and consumer awareness needs to go hand in hand. So people really need to be aware that, it's not okay to share your Xerox copies of your Aadhaar and PAN with everyone, which sort of is the culture in India at this point of time. So long story short, I think, it should be a juxtaposition of a lot of cool things that emerging tech is trying to enable, as in better onboarding, more seamless liveliness checks as far as those onboarding interviews are concerned. Then you have stuff like, let's say, can we use behavioral biometrics? Can we use device intelligence to distinguish fraudsters from genuine people? So there is a lot of research around how a fraudster would use his or her mobile phone, as opposed to how a genuine, how a legitimate user would use. So a lot of those things are being put into use as we speak by the tech community. So I'll give you an example. So let's say, in the context of old-fashioned ID theft, let's say I'm sort of impersonating that I'm one of you, and I'm trying to apply for a credit card. Most probably, I will not be spending too much time reading the terms and conditions, or let's say, or the features of that credit card, right? Because I'm applying in bulk as a part of a syndicated fraud ring, right? So then again, some features like the dwell time on that particular section of the app sort of comes in handy when it comes to data analytics or data science or even tech building up solutions. So I think that's where the landscape is heading towards. And I think this is an extremely interesting time to be alive, to be very honest, because you can actually see a full-blown war between syndicated crime and between the vigilantes.
Very interesting. Can you quickly just mention some sort of data or some stats around how much fraud are we kind of seeing? You worked at Paytm before that and at a bank. Can you give us some idea of what is the magnitude of fraud we are seeing in this country?
Yeah, sure. So basically, in my current role, I'm sort of heading decision science at Bureau.id, and all throughout my career, basically, I've seen, especially over the past 5 years, I would say, I've been seeing an exponential growth in all kinds of modus operandi. So basically, if you've been following the the Government of India's annual reports on cybercrime, you would see year on year, almost the fraud rate has doubled, or even the fraud losses that's been attributed to cybercrime, that's almost doubled over the past 3 years. So that's one thing. The other thing is something probably that's more on the positive side. I think traditional media is nowadays, they spend a lot more. They spend a lot more time creating awareness on fraud, which was not the case before. So that's another thing. But coming back to your question, Amit, I think from a stat perspective, you would see, I think the last time a cybercrime report came out, I think 1 in 5 people had some contact with scammers calling them up and sort of asking for credentials. And that, to be very honest, is an alarming situation.
Yeah, it's probably 4 by 5. I think all
Very
of us
true.
have received SMSs and calls. Actually, in the same breath, I want to talk about, since we're talking about fraud, also about AML, and maybe Kishore, if you can talk about in terms of industry and regulatory view, what's happening with AML?
Well, as they just mentioned about the kind of transactions are taking place, the volumes have increased. Obviously, when you have a lot of volumes which is taking place, it's very difficult to maintain that clean hygiene of transactions. And you will definitely find these kind of fraudulent activities taking more because there is a lot of chances have been given, right? So I'll take one of the use case of a diamond in jewelry, which I have witnessed. So all over the world, when you are basically doing in transactions, right? So in this particular industry, you may do a KYC, but at the same time, it's very difficult to do a KYB, know your business. So when you do, as a business owner, you need to know who's your supplier, you need to know who's your retailer, you need to know who's your end customer. So all these aspects, right, comes into the AML, and very difficult for a business to maintain this data and hand over this to the regulated body whenever they seek information. So these particular problems which I have specifically seen in this one industry, the diamond and jewelry. And this is one of the industry which has highest fraudulent activities from a volume, not from volume perspective, but from a value perspective. So how far, the FATF is trying to take care of this is to the banks. So what they do is they allow the banks to take the certificate from the AML officers, and those certificates has to be audited by the banks, and then the certification is provided. So this is one of the prospects, the aspects that I have seen in terms of the AML. And rightly mentioned by my colleague, the fraudulent activities are blowing right now. So one of the thing that we have witnessed with one of my a colleague, he was going in a metro, and we see that we have this particular wireless transactions. You can make the payment, right? So through the RFID. So you got to be very careful when you are having this activated, especially when you're keeping in your back of your pocket. So somebody would easily scan it, and the payment is through. So the fraudulent activities is not only on the digital form, but it can happen when you're walking on the street as well. So we got to look at how these kind of transactions or how these particular activities can be reduced. I also heard from one of our colleague here that we have the blocker, right? So if you want to, somebody is trying to do the transaction like fraudulently, so you have a blocker where you can use the solution. So happy to see that the problems are there, and at the same time there are some solutions are being brought up in the industry, and I hope that some of the data aspects which they mentioned, from that perspective we can bring it down.
Right.
Thank you.
So let's. I think we went very deep into the solutions and fraud. Let's zoom out a little bit. I would not talk about India's privacy law here, but I think, Rajesh, I would like to ask you that there is a very important overlap between data protection laws and digital identity, right? I think that's a conversation we must be having here.
Absolutely.
So if you can touch upon that.
Yeah, absolutely. I think India was very pragmatic, just speaking as an outsider looking into India, in terms of going ahead with the Aadhaar project without a data protection law in place. In fact, it's very counterintuitive. Most times you will have the law in place first, and then you have a digital identity program to follow. Because without the law, you don't have the structure for giving people the ability to protect their personal data and to take action against people who misuse their personal data. Having said that, and looking at the numbers as they stand, you have almost 100% penetration in terms of Aadhaar across the country. You can't but admire the guts of the guys who did it, the way that they have. And for the people of India, in a sense, to accept it, because from my experience, there's always a very strong culture here of having adequate stakeholders coming in and arguing for protection of individuals' rights. And yet, that division was given enough power to go ahead and get this done. Having done it, it is now even more urgent for India to get the law in place. Very urgent that India needs to put the data protection law in place. Again, outside looking in, I've been following the saga in terms of getting India's data protection laws passed. It has to happen soon because right now, data is being collected about every person through the Aadhaar system. And there has to be clear rules with regard to what the data can be used for. I think there's two concerns. One, of course, is public sector. What's the government using the data for? But more importantly, if Aadhaar is to work and it has as an identity system for the country, third parties who have APIs built in, the UPI system for payment purposes, for example, those systems need to also be properly controlled in terms of the data that's being collected. The panel that just came before ours was talking about monetization of the data. That, as a lawyer, all the alarm bells goes off. Right? What do you mean by monetization? Whose data? Do I have a right to say whether or not my data is going to be used for these purposes? The law has to be passed sooner rather than later. To share some experiences from jurisdictions where these laws are in place, what happens is if that data is misused, I have a right to take action against the organization. I have a right to withdraw consent. So my data can't be used until I've given consent for the data to be used. That consent is withdrawable. I can go to the organization and say, stop using my data. Or stop using my data, let's say, for marketing purposes, but please carry on using it for transactional purposes. Those kinds of rights are fundamental rights, again, that need to be put in place. So that's how it's done in jurisdictions where there are data protection laws. You can go to make a complaint to a commissioner. In Singapore's case, for example, we have the Personal Data Protection Commission. It's a very transparent regulator. If you Google PDPC Singapore, you'll see a whole list of cases showing how the regulator protects the individual's right to their personal data. Any company that misuses data, and I don't mean cyber attacks, I mean using the data beyond the purpose for which a person had given their right, that company can be taken to task, action can be taken, fines will be imposed for misuse of the personal data. So that's essentially how the personal data regime works.
Yeah. I think it's a very big topic around consent and how you protect the data. But in the interest of time, I'll do a quick switch again. So Suparno, it will be fair to say I've spent some time in this sector. So I would say that a lot of progress has been made on the consumer, people side of digital identity, right? But what about companies, enterprises, SMBs, goods and services?
Right.
Can you talk about that?
No, absolutely, Amit. If you see broadly, right, there are three major cohorts when it comes to data or digital identity, if I may say. One is like the people, the end consumer. Another is like the systems and how you identify digitally that this is the right system coming in, kind of a thing. And the other cohort is like in terms of the entities, like the businesses. Kishore, you touched upon the business side of things, right? So today, if I look at it, we have put largely the onus on the end consumer. So if I'm the end consumer and if I have to kind of be a beneficiary of a service, be it be from the government standpoint or be it be from the business standpoint, I need to prove my identity. And then the other players are kind of in the process of validations, etc. But just turn the table for a moment. So there is also an equal onus and it's also a benefit for the businesses if they themselves can be identifiable in a very, very seamless and frictionless manner. Today, as we do business, there are troubles of counterfeit. And I'm not just talking about like a physical goods, or let's say you're buying a pair of shoes, whether it's a counterfeit product or not. I'm talking about like even in the digital space. You're looking at an app, the app says ABC. How do you know this app is actually ABC, or someone is trying to kind of misuse your logo? And that's where that aspect of digitally identifying, verifying the enterprise would be in a way a game changer. I think the way we have progressed a lot on the consumer side of it, identifying the enterprises digitally, and actually it's going to be in favor of the consumer and the customer empowerment. So me as a consumer, if I'm interacting with an app, me as a consumer, if I'm interacting with a business, be it be in the setting of a B2C or even in a B2B, if I can digitally authenticate, like the way we are doing for the consumer, we can digitally authenticate the business, be it be in terms of third-party onboarding, or be it be in terms of like when I'm actually taking a service from the business, within 5 minutes, 10 minutes, half an hour, totally digital, that would be a game changer. So if you look at it from, let's say, even pick up any data research, it ranges, it says like, hey, if you have digital identity on the consumer side, your impact to the GDP could be anywhere between 3 to 6% kind of a figure. Now just imagine if you can get the enterprise into the ecosystem, that's like even going to kind of in a way catapult to a different degree in terms of the GDP influence, making it totally frictionless in supply chain finance, making it really, really empowering for the consumer to identify that they are interacting with the right enterprise. So I think that aspect is, as a customer to the entire ecosystem, I think that aspect is something we are really looking forward to.
And no, you're right. There are a lot of second order effects of that,
Yeah.
because we have created a lot of tech islands.
Yeah.
Because enterprises don't have like a one particular standard around this.
That's right.
But can you double tap on that one thing that you mentioned, that how do we know as a consumer if this is the company, this is
Yeah.
the app that we are in?
Yeah.
Are you seeing any fraud around that?
Yeah, so there is, if you look at it, like one thing which used to happen in the physical world, and you would have, all of us would have heard about, like, whether the pair of shoes which you're buying, is it actually the brand which you want to buy? But now if you see the digital world, the app which you're interacting with, is it the actual app, or is it like really authorized by the actual app to kind of use your logo, etc.? So we do see situations where it's like a daily fight, and then there are situations in terms of like people coming up, the app pops up one fine day, and then you kind of work with the authorities to get it down, and then the other day again it will pop up. It's almost like a guerrilla warfare. So it's a constant battle which we are facing, and that's the reason it's so important that in terms of digital identification, this entire enterprise ecosystem do come into play. In some cases, Amit, like it's working wonderfully, not just from the fraud standpoint, but also in terms of catering the services standpoint. All of you would have, I'm sure, like about Udyam Aadhaar, right? So in some ways, if you see not just about the fraud aspect, it's also about how you kind of cater to it, and again in the morning you heard Honorable Finance Minister speaking about priority sector, right? Now, things like Udyam Aadhaar is really, really good, and I'm sure like it's going to go leaps and bounds, but again, that has to come for the entire ecosystem of enterprises.
Know your business is a very important
Know your
topic.
business, yes.
But just like in the fintech world, retail consumer fintech
Yeah.
has overshadowed B2B. I feel it's the same thing here as well.
Yeah.
But Jay, you have the last word on this. Okay. Can you talk about any other challenges that we have not discussed today, and especially also about opportunities that are there in digital identity as a whole?
I think from a challenges perspective, we have touched upon almost everything that is out there. But I'll be more optimistic and I'll talk about the opportunities. Talking about what Suparno has highlighted, that KYB is another emerging area where Udyam is just one data point. But if you look at the universe of the checks which government is currently offering, there are close to 40 to 50 checks which you can do on a business to identify whether that business is valid or not. So that's one of the opportunities where these we are working on such kind of systems where we ensure that the entity with whom we are doing business is to a great extent verified. So that's one of the areas which I believe is a tremendous amount of opportunity. And just to double click on what Suparno was talking about in terms of the identity, right? So when we talk about identity, we are not just talking about identity, just one aspect of it, but we are talking about identity as a plus, right? So there is an element of transaction analysis. There is that includes KYB, that includes AML. So we are talking about identity where the ecosystem itself is identified, right? So when you have each and every stakeholder in the system, if there are guardrails in place, and which currently there are some, and more needs to be built, right? So listing of such apps in the Google, App Store, right, where the government of India has recommended that all the apps should be whitelisted, right? It's a step in that direction. Once we are nipping the problem in the bud, and then we are ensuring that every stakeholder of the system is identified and authenticated with the systems we have got available in place, I think that's a big opportunity, which I am seeing at the moment.
Just one last question, and I know we have 30 seconds left. Also, I think it will help me professionally to learn from you that, so we have solutions, right, to a lot of problems that we discussed today, but the buyers have to buy as well, right? So what do you imagine, like, we have to change, as an industry, or, the way of selling or the way of adoption? Will it be like how NPCI is saying, like for ODR in, UPI, online dispute resolution, there's a deadline? So is that the only way, or have you experienced something else which makes buyers buy fraud solutions and eKYC solutions?
So, first is regulator push is required, right? So that goes without saying. But, given that if there is a regulatory push, there are plenty of opportunities. As I said, in Southeast Asia, like, we have done, a validation over there where, we have created a sort of a consortium, right, where we can identify the, fraudulent actors, right, as soon as they enter into our database, right? So that sort of a dedupe check we have kind of inbuilt in our technology, right? And it's validated, right? So now, the way we are positioning, and we want the industry to position itself, is that there is a benefit to the business, right? So there is a cost of compliance. If I am not following the compliance, if I'm not verifying the businesses, then I have a cost to pay, right? Which we are seeing that the accounts are being frozen of a big players, and if they are not following the compliance, right, you're losing customer, right? So the time to onboard a customer is increasing. The customer experience itself, the trust in the business is getting lost. So as an ecosystem, the entire industry is losing. I think that sort of a pitch is necessary, for the compliance. So a push from regulator, and the cost of the compliance is a very important factor, to make buyers realize that this is something that needs to be addressed on priority with technology solutions.
I could barely hear you towards the end because of this issue, but I think we are up on time. Thank you so much, guys. This was a very interesting discussion. And a digital identity discussion is never complete, right? So we'll probably carry it offline as well. Thank you so much.
Thanks a lot, Amit.
Yes, you can. Check, check, check. Check. All right, thank you to our panelists for that wonderful panel discussion on the role of digital identity in a physically distanced world. Digital is definitely bringing the world closer. And with that, we move to the final session of today in this hall, which is on a report launch on financial inclusion of Bharat, insights into people, markets and startups. A report by CIIE.co.
नहीं, the second one is cancelled. Solo है. 3 बजे बोला मेरे को. नहीं अभी just update आया. मेरे को दो ना update. I don't have. I have only one person. I have only one name in my list. हाँ तो कौन है? मुझे मेरे पास ही नाम नहीं है. ही बोल रहे हैं, मुझे मेरे पास एक ही नाम है. Two.
Everyone sitting at the back, if you all can come, please come forward. Let's fill up the chairs in the front. Let's have an intimate discussion for the final session for today.
थोड़ा ये करो ना उठा के.
check, 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 check. All right, good evening, everyone. Welcome to the final session for today. Which is on financial inclusion of Bharat, insights into people, markets, and startups. A report by CICO. And we have both our speakers on the stage, starting with Supriya Sharma, Partner Insights at CICO. She leads research at CICO, India's leading entrepreneurship continuum of innovation built at IIM Ahmedabad. Insights at CICO undertakes research in three forms: sector intelligence, learning resources and tools, and academic investigations. They publish sharp, data-driven insights and resources for founders, policymakers, incubators, investors, and other stakeholders in the Indian startup ecosystem. We also have with us Mr. Alkesh Wadhwani, Director, Poverty Alleviation, India. His profile comprises programmatic work in agriculture development, water, sanitation and hygiene, financial services for the poor, and gender equality. Previously, he led the health, nutrition and family planning portfolio for the foundation in India. He joined the Bill and Melinda Gates Foundation in India in 2003 and was one of the key members who helped conceptualize and implement the $338 million funded Avahan program, the AIDS initiative of the world's largest HIV/AIDS prevention program. Before joining the foundation, he worked for McKinsey & Company, where he served clients in India, Asia, Europe, and the US in the financial services and pharmaceutical sectors. So we'll start with Supriya, and then we will come over to Alkesh Wadhwani. Over to you. You can speak from there if you wish to. You both can have a conversation there, or if you want to show. Okay, then here.
Short presentation on BI, and then I'll invite you for the group launch. Hi, good evening. Very glad that you were able to make it and join us for the launch of this book. Before we invite Alkesh to launch the book formally, I wanted to take a couple of minutes to give you a little introduction, little background about who we are and the kind of work that we've done. Takes me back to 25th January 2018, when a couple of about 24 academics, researchers, founders, sector of financial inclusion champions gathered together in a seminar hall in the new campus of IIM Ahmedabad. They spent the entire day together, deliberated on what would it take to solve for this hard problem of financial exclusion in India. The group left with about 95 open questions on interventions that would be required for us to see this change. This deliberation essentially formed the basis of what we've done, what we've created or curated as a program which is called the Bharat Inclusion Initiative. If I was to describe it best, Bharat Inclusion Initiative is, how does this go forward? Is a continuum of interventions, all focused on solving the hard problem of financial inclusion, financial exclusion in the country. There are 4 components to this entire continuum. We begin with investigate, where we dive into research, data, so as to unearth, so as to draw out insights about the little that we know about the Bharat segment, the underserved customer segment in the country. The second part of the continuum is what we are calling stimulate, which is where we catalyzed game-changing novel use cases that could again impact the problem of financial exclusion in the country. The third part of the continuum is where we accelerate startups, building these solutions so as for them to be able to serve larger groups of people and impact their lives. And then finally, we invest in startups, building fintech solution, building inclusive fintech solutions for this target segment. Over the course of the we've been running BII, the Bharat Inclusion Initiative, for 4 years, 2018 to 2022. And in this duration, and the program continues to run, but in this duration, we've been able to accelerate and support over 50 startups who've gone on to launch over 40 products and therefore impact the lives of more than 30 million customers. About half of them, more than half of them would be women customers. These startups, of course, have been able to validate their business models, their presence. They've gone on to raise about over 80 million of follow-on equity capital, and they've been able to generate more than 700 jobs. A significant part of BII has been the research that we've been doing on the sector. In these last 4 years, we've undertaken 24 different research studies, which have brought together, or at least have put together data about various customer groups, various thematic areas such as the gig workers, mistrust in digital financial services, the urban poor, the rural households. We worked with some stellar co-investigators, both from academia, from the industry, some founders as well. And this entire research piece includes various research initiatives like the Financial Inclusion for Rural Transformation, the series that we've run called The People of Bharat, and a couple of others. The book that we are launching today is really the consolidation of all our research over the last 4 years. I will take this moment to invite Alkesh to do the book launch for us and deliver a keynote subsequently, maybe.
It's okay, I'll be here. So I'm delighted to have launched the book Financial Inclusion for Bharat, Insights into People, Markets and Startups. For all of us in this room, financial inclusion has been given for many years. What perhaps UPI and apps like PhonePe, GPay, Paytm have done is make it easier for us to do financial transactions. But frankly, even without them, we had access to financial services, and we've all been financially included, whoever's in this room. Maybe in 2017-18, financial inclusion was a problem. But if you see the stats in India, you may wonder, so what's left now? How much more is there really in terms of financial inclusion for Bharat? And the stats are pretty good over the last few years, if you see. I mean, due to PMJDY, there have been so many Jandan accounts that now 80% of India has accounts. I think 4.5 crore Jandan accounts have been launched, of which more than half are for women. So it's not that women have been excluded from accounts. Even women have, give or take 80% of adult women would have accounts in India. If you look at business correspondents or BCs, even if there aren't enough bank branches in India, there are now more than 3 million BCs. So while there might be a few dark spots, you could say there are enough BCs to cover India. If you look at the way QR codes have grown, I think there are now 195 million QR codes. Even if you look at, and there might be about 25 to 30 million retailers in the country, retail shops. So clearly much more than retail shops have QR codes, even if you say that some retail shops have more than one QR code. So it's your doodh wala that will have a QR code, your newspaper wala who will have a QR code, and so on. So in many ways, the infrastructure has been set up over the last few years, and things have changed since we partnered with CI Co to actually think about financial inclusion. Similarly, if you look at AEPS, I think there are about 400 million transactions a month on AEPS. And AEPS, Aadhaar-enabled payment systems, is something that allows people to access their cash and other services without having a smartphone, without having a debit card, with your thumbprint, as many of you would, or fingerprint, as many of you would know in the room. So a lot of, and UPI, I mean, just amazing, the growth. I think now it's about 6.5 billion transactions a couple of months back. So monthly transactions, and I think their goal is to make it 1 billion transactions a month, a day. So 1 billion transactions a day would be pretty enormous, and I hear that they are planning many initiatives which they are showcasing in this convening itself. So the story looks quite good, and yet I would say that the need for financial inclusion today is as much as it was, or nearly as much as it was 3 years back, despite all this amazing progress. And there are many reasons I say that, so I can quote the same facts in another way. While UPI has grown to 6.5 billion transactions a month and dramatically increasing the number of users, perhaps we still have 300 to 400 million users of UPI in India. So 800 million people don't use UPI. And even if and I'm sure it will grow by leaps and bounds every month. But even then, if you have a feature phone, and 300 to 400 million people in India have a feature phone, it's really, really tough, as you would all know, to use UPI on feature phones. Similarly, if you look at business correspondence, so while there are 3.3 million plus business correspondents, even today, more than 90% of transactions are done through banks and less than 10% through BC. So clearly the BC model, while growing, has some challenges. And this is despite the fact that the BCs are so close and there are only 70,000 odd bank branches in rural and semi-urban areas. So you're talking about one branch per 10 villages. And still most of the transactions are, done in back branches, even though access is not very easy. So clearly a lot has to be done with BCs to make it really as powerful as the opportunity is. So all this to say that this is where BII comes in, and this is where we feel that we were privileged to partner with them to help the journey of financial inclusion for Bharat. And we hope that all of you, all the fintechs here who think about launching products, will think about Bharat too. because Bharat, at least for us, is important. The reason, as Gates Foundation, financial inclusion for Bharat is important is there's just so much research as CI has done and is in the book that shows the power of financially including both poor men or poor women in the formal sector, whether it is just getting bank accounts opened or using bank accounts. And it has all sorts of spin-off benefits to account holders getting more formal credit, to account holders saving more, to account holders having more, especially women, having more, empowering them, having more agency to be able to influence household decisions, and that often leads to more money being spent on the family, especially on nutritious food. So it might seem, okay, where is all this connected? But this is really the power of financial inclusion, and that's what we care about, and that's why we hope that by making this grant, which, as you can see, Supriya talked about all the benefits that this grant has been able to bring to founders and fintechs and innovators, that we are really able to get the Bharat or the poor included in this journey that all of us take for granted. So what this book does is captures these insights that Supriya spoke about, and it has 3 sections. So the first is insights about people. So there are case studies of 24 people from Bharat, and it gives you a flavor of who the customer really is, because without understanding the customer, I think it's really difficult to launch any product or any service without understanding the customer. And just as one example, it has the story of Neeta, who earns 400 to 500 rupees a month selling sprouts and lives in a 2-bedroom house. After being effectively bankrupt, after losing her husband and her family, and having no choice but to say, I have to do something. And through this journey, it describes how she lives her life and how she's reached this stage that by selling sprouts, she's able to make about 500 rupees a month and save a small amount of that to be able to take care for a rainy day. And clearly there's potential to serve these kind of customers who are, this Neeta is non-literate, she's unable to read or write, but still she's able to make the 500 rupees a month despite again not working till her husband died. And there is an opportunity to serve this persona, these kind of women who do micro enterprises. The second is an insight into products and markets. So in this, there are 4 research studies undertaken by IMA professors and the CIICO team, and key insights and use cases from 12 research fellowships, as Supriya said. So an example is one of the studies looked at the agri sector, and it has a clear set of recommendations on how to build the UI UX for the agri sector. If you want to serve the lower and middle class of India, and the UI UX design, whether it's data entry, whether it's navigation or any other aspect of UI UX, will have to be very different if that's the segment you want to serve. I realize that many may not want to serve the segment, but for those who believe that even if you want to serve all segments and not focus fully on the lower middle class segment, it's worth thinking about these UI UX principles and specific examples that can build out a successful product. So there are many more examples on products and markets that would be helpful to fintechs. And the last is an insight into startups. There are 7 case studies that capture the lessons about these 7 startups. So with that, I hope that you find this book valuable. And for us, again, it's been a privilege to work with CIICO to help catalyze the financial inclusion for the poor for Bharat. Thank you so much.
Thank you, Alkesh. That was very, very encouraging, and at least tells us about some good work that we've been able to do for the last couple of years. I will take a few minutes to give, or at least give you a sneak peek into what the book looks like, in the kind of insights that we are carrying as part of this book. Could I have the presentation up? Like Alkesh shared, the book has 3 sections. Sorry about this. Financial inclusion of Bharat has 3 sections, and essentially these 3 sections are curated to help address 3 big questions that may be relevant for fintech founders building for the Bharat segment. First is, who are you building for? Who's the customer that you're building for? Second is, what are the solutions that are required to solve for financial exclusion of this underserved segment? And the third is, how would you organize delivering these solutions? And that's really the section that dives into some ways in which some of the most promising inclusive fintech startups are delivering these solutions. The first section, which dives into this target customer, tells us stories of the people of Bharat. These are real stories sourced from across India. And when we talk about the people of Bharat, we talk about Imli from Chhattisgarh, who's trying to put together a corpus, who works as a construction labor and is trying to put together a corpus for her younger sister to get married. She very proudly, I think she's very proud of being able to support her aging parents. When we talk about the people of Bharat, we talk about Samil Pasha, who has a 8-room house in his village, but is for want of better employment, he had to move to a city where he manages a poultry farm and lives in a 2-room house. He has 2 young daughters and is driven by making better career prospects, or at least being able to better the career prospects of his daughters so that they open and run a company of their own someday. When we talk about the people of Bharat, we speak about Roshni, who comes from a family that is deeply into debt. Roshni, this 25-year-old, is determined to help her family emerge from their struggles with debt. We also talk about Usman, who is a tailor and is building a house for his family funded entirely by his monthly income. We, of course, speak about Meera, who exited an abusive marriage and is now has now found an opportunity in making and delivering tiffins. She still feels quite unconfident of dealing with money, and therefore deposits all her earnings with her mother and has her mother take care of expenses as well. We speak about Sumant, who's quite prolific with digital fintech, with usage of digital financial products. He gets quite exasperated with people being poor with financial management. We also speak about Bhadra, who was really one among those who left for their villages on foot when the COVID lockdown struck. Bhadra is now trying to gain his life back. He works in a highway hotel, quote unquote, a highway hotel, and trying to rebuild his life. When we talk about the people of Bharat, we also talk about Nupur, whose life fell apart with the passing of her husband. A vision in calmness. Nupur is learning the ropes of building a life and taking care of her daughter, trying to ensure that her daughter has a better future. These essentially are people of Bharat. The book carries, we've run this series of stories over the last 4 years. We've published 52 stories, and these are stories of real people sourced from across various states. The book carries 24 of these stories, and our hope is with publishing the stories, we are able to nudge or at least build some empathy for this target customer segment. This next section in the book is about or delves into insights or brings out the insights about products and markets. And here this carries multiple studies done either in collaboration with IIM Ahmedabad, done by our team in-house, and of course the large section of work done by the research fellows, and some of whom are in this room. One of our latest studies dives into or is looking at data from the rural households, and using this data for about 93,000 households across 17 states in the country, we've been able to confidently talk about the impact of BC agents on the number of women opening bank accounts. What is the impact of a rural household having a bank account on the decision making, on the participation in decision making by women, and what happens as a result of women participating in more decisions on the household's formal borrowing. This is the first time that we are learning about these insights backed on hard data. This section also carries insights from the recent survey, which is bringing back data from about 30 villages in UP. This is telling us about the impact of fintech product usage, as well as able to tell us the difference in financial inclusion for the same set of households from 2016 and 2022. This section also carries some of our work that we've done on very pressing questions in the space of financial inclusive fintech in the country, like this toolkit on UI UX design explorations, particularly for fintechs aiming to build trust in their customers. The section carries visualizations and visualized insights from our research fellowships, many of which are talking about novel use cases. And some of these studies are also boldly reimagining how financial products could look like for this underserved customer segment. Some of these studies, our fellowship studies, have also been able to give us pointed inputs about how do you redesign products and how do you redesign delivery. Like this one that told us about how do you deliver financial literacy so for it to have the impact that it is supposed to have, that it is expected to have. I will move on to the third section in the book, which which presents case studies like Alkesh shared. The book carries insights from 7 cases that we've written on inclusive fintech startups. The goal behind writing these cases has been to equip the ecosystem about, or equip and inform the ecosystem about the dilemmas that an inclusive fintech startup and a founder would typically face in designing and delivering and scaling up these products for the underserved Bharat segment. Like I said, this is a consolidation, a coming together of all our research that we've done over the last 4 years. We are hoping that through this research, we are able to contribute to an understanding of 3 big questions in the inclusive fintech space. But all in all, it seems like we're only getting started. Thank you so much. All of this research wouldn't have been possible without really encouraging support from the Bill and Melinda Gates Foundation and our friends in the foundation like Alkesh and Pawan. All of our research, this book is available on our digital platforms. I suppose the QR codes will be available on multiple places. But if you need to talk more about this work, some of us are here, please do reach out. Thank you so much.
can you please mention the name of the startups and what they are doing? Just in one line, maybe that's it.
All our startups?
Yes, you said there are 7 startups mentioned, right? 7 or 9 startups.
So there are 7 cases.
Okay.
These are on the following startups. We've written a case on Kaleidofin. Our cases are on Echo, on Yes Poho, Frontier Markets, Greenway, and I'm sure I'm missing 2 more. But the book has all this information. Maybe I can't recall it right now.
Thanks.
Yeah. Thank you so much. Thank you. Let's have a round of applause.
Thank you.
Whoever is here in the room, let's have a round of applause for our speakers. Thank you very much. With that, we come to the end of day 1 of the Global Fintech Fest 2022. We'll see you again tomorrow. We have a sundowner party happening here in this hall, 7:30 onwards. So in case you'd like to stay back for that, that'll start 7:30. Yeah, so it's another hour. So if anybody would like to attend that, we will see you then, or else we'll see you tomorrow for day 2. Thank you so much.